My name is Alex Matthew and you're watching All You Need to Know. Over the course of the next half an hour or so, we'll tell you everything that you need to know to start the day on the right note. Let's start with the headlines. US markets take a breather. Benchmarks end lower as big tech companies weighed on Wall Street. Futures trade in the green on a dovish Fed commentary. Back home, short-term traders are on the defensive as the sentiment continues to be negative. Citi says investors in the US are negative on banking stocks. HDFC Bank tops their list on concerns on liquidity and margins. Rupee continues to fall against the dollar. A weak currency will hit importers hard, and NDTV Profit brings you special coverage. The Tata Group has been going through a significant transformation, according to N. Chandrasekaran, who was speaking at the Indian of the Year Awards at NDTV. We'll bring you those details. Adani Ports is set to buy 95% stake in Gopalpur Ports for 1,349 crore rupees. Zomato's Deepinder Goyal says Flipkart's entry validates potential of quick commerce as a business segment, and he says this in an exclusive interview. Let's get you a quick global check. US stocks declined at the start of the trading week. The three benchmarks dropped about 1/3% each. Intel Corp and AMD stood out, though. Those shares fell after a report that China has adopted a new guidance to limit the use of US-made microprocessors and servers in government computers. Boeing saw some significant updates too. Both the chief executive officer and the chairman have stepped down as the company faces a crisis with its 737 MAX aircraft. On monetary policy in the US, there's still a lack of consensus on the timing and the quantum of rate cuts. Federal Reserve Bank of Chicago President Austin Goolsbee said he is among policymakers anticipating 3 interest rate cuts this year. That's a Bloomberg report. Goolsbee reportedly said that his view was in line with the median estimate in projections that was released after Fed's last meeting. 10 officials saw at least 3 cuts this year, while 9 others projected 2 or fewer. One of those is Federal Reserve Bank of Atlanta President Rafael Bostic, who now projects just 1 interest rate cut this year. He said that reduction is likely to happen later in the year than he previously anticipated. Let's also pull up the Asian markets that are trading this morning. You had a bit of a mixed start to trade, with a couple of the early risers trading very flat. The Nikkei 225, in fact, is practically unchanged. You have the Hang Seng that is opened in the green, about 0.4% higher. And you had the Kospi that was trading strongly positive, gained over 1.3% in early trade. But the onshore market in China is also not doing too much as we speak. But let's get you a bigger perspective on emerging markets as we start this curtailed week. Rana Gupta, Senior Portfolio Manager, India Equity and Specialist, Manulife Investment Management, is joining us this morning. Thanks so much, Rana, for taking the time. Help us understand this. Of course, this is going to be a curtailed week, but if we zoom out a little bit about the context, how are you looking at EMs right now? And we've seen quite a bit of chop and churn in India. What do you make of that?
Good morning. Thanks for having me. I think the outlook on EM is quite constructive. Not only the EM fundamentals look good, even from a global perspective, if you follow what Fed is doing. Now, I think whether rate cuts 2 or 3, that I think is anyone's guess. But what's going to happen is that the rate cuts, the Fed is on the watch. If the growth were to slow, they are ready to cut rates. And also, I think the Fed chair mentioned that the QT that they were doing is going to wind down. All this sets together a positive tone towards the emerging markets as well. From a flow perspective, fundamentals were anyway quite good. So overall, I think we remain quite constructive on the emerging markets as such.
Okay. But specifically with India, while there seems to be some interest from a few quarters, I was looking at a Citi note this morning. They were speaking to several large investors, and those investors seem to be very positive on India. There are a few pockets that people are not looking at. How do you view the banking space in India from the outside?
I think overall our view on India remains from medium to long term perspective quite positive, and the reasons are, of course, if you look at India's the fiscal deficit decline from that 9% to now going to 4.5% by 26 is quite dramatic. The current account is behaving very well, and so is the inflation. And despite fiscal contraction, you're getting quite solid growth and investment-led growth. So that makes us top-down quite positive on India. Coming specifically to a question on banking sector, I think the policymakers are keeping liquidity a little tight, and the rates so that the rates remain high. So the banks are facing a problem with the deposits, and obviously without deposit, your loan book cannot grow. We expect that the situation to persist for the first half of this fiscal. However, as we move to the second half of the year, we believe the government spending will start. That should bring back some liquidity. Moreover, I think the Indian bonds inclusion will also attract significant foreign flows. That should also make the liquidity scenario better. So for the banks, I think the second half will look much more constructive than the first half.
Okay. But then if I were to ask you, looking at India, and you mentioned that you're broadly constructive from the medium to long term, and I think the reasons for that are pretty well documented. But which specific sectors are you bullish on? Would you look at infrastructure, for example, which is something that a lot of people stayed away from, but has changed quite significantly over the last few years?
So I think this time India growth story is the key difference with last 10 or 15 years is that if you look at the policy makings have pivoted from promoting consumption to promoting infrastructure investments. This is similar to what we've seen in the earlier part of this decade, the early 2000s. So therefore, I think that's a top-down view. From a bottom-up perspective also, we find the earning potential or the earning power of the industrial cap goods, power, utilities, those companies, I think the earning potential also we find quite attractive given in the current situation. So that is one sector that we are overweight. We also like the sectors where there is government policy support, something like a power, and particularly the renewable power area also we like quite a bit. So I think industrials and utility side, those are our favorite picks. We also like some of the high income consumption or investment. For example, I think real estate. I think real estate is one sector which has done quite well. And I think given the consolidation that happened in the industry and given the good demand, I think that's also should continue to do well.
Okay. What according to you, and this is the last question, what according to you is the biggest headwind or the biggest threat to the current scenario? And would you anticipate, based on the kind of moves that we've seen in the recent past, that consolidation is likely to be the name of the game, at least in the short term?
Sure. So I can answer the last question first. I think that some of the consolidation is on the cards because Indian markets have been a standard performer for 1, 2, 3 years now, and given that the flows are a bit of tempering down due to the domestic mutual fund, the new rules to cap inflows and all that, some sort of consolidation for the next 3 months could happen. But I think the 6-9 months picture still looks quite bright. Now coming to the other part that you asked, near-term consolidation. I think for Indian markets, the challenges or the risk factors. I think I mentioned that we are positive on the cap goods industrial sector due to the policy making and the policy switching from consumption to investments. Now, if there is any change in the policy or if there's an instability at the policy level, I think that is one risk factor to look out for. And although the Indian policymakers are pivoting greatly towards renewable energy, but in the shorter term, probably next year or 2 year or next few years, India still remains dependent on crude imports. Although the country's resilience to high crude price has risen, but a crude price closer to let's say triple digits can also be a risk factor.
Absolutely. And in fact, as we speak, crude at around 87 to the barrel. Right now, Brent crude at least. Thanks so much, Rana, for taking the time for speaking to us this morning. Let's turn to the Indian equity markets and rather the cues that you should take out from the F&O space in this very curtailed week. Agam is standing by to get you more details. Agam, Several factors here, but curtailed week and we're heading towards the expiry as well.
Sure.
What are the key cues to focus on?
Right. Well, we continue to see the Nifty hang in and around 22,000, and I think that's likely the case because we've actually seen a shrinking of premiums by quite a bit, and that also means that in the near term, traders are expecting a sideways movement. As far as Friday's trade of trade is concerned, where we saw a decline in open interest overall, and even in terms of the bank Nifty, we did see too much of a change, about 0.4% advance there. I think the bank Nifty at the end of the day, we're keeping an eye on 47,000, whether or not it can move about that mark and stay at there. Well, in terms of open interest as well, we are seeing unwinding of nearly 10.5% in OI. Moving on, as far as your overall open interest for the Nifty is concerned, in terms of distribution, keeping an eye on 22,000. Once again, that's where we see a substantial amount of writing and puts as well as calls on the higher end. Also keeping an eye on 22,500, where calls the kind of calls will provide you with a little bit of resistance on the upper end. Let's move on and talk about the other factors that could be in play. Of course, the Fin Nifty expiry is also there today based on the financials. Keeping an eye on 20,900 to 21,000 on the Fin Nifty index as well in terms of today's weekly options expiry. Coming down, in terms of stocks, we have GAIL, Dabur and Maxfin, which saw shorts building in, and longs for Shriram Finance and Dr. Lal Path Labs. In terms of unwinding, seeing a short covering for Tata Steel sale. So a lot of these steel companies, in fact, did do well and provided support to the Nifty last Friday. Besides that, also watching out for short covering in L&T as well as Syngene International. Well, consolidation of the cards, Alex, and keeping an eye on the Fin Nifty expiry today.
Absolutely. Thanks so much, Agam, for getting us those details. Turning to corporate news, Tata Group is growing through a significant transformation, and that's the word coming in from N. Chandra, who is, as you know, the chairperson of the group. He was speaking at NDTV's Indian of the Year Awards, where he won Businessman of the Year, and here's what he had to say.
The Tata Group has been going through a significant transformation over the last few years. All Tata companies have embraced the megatrends of artificial intelligence and energy transition. We also fully recognize the need for a global, resilient supply chain and India's role in creating that resilient supply chain. The Tata Group is spearheading this movement and has committed itself by making significant investments and foray into such sectors. Apart from our traditional sectors and the companies that we have been running for several years, recently we have pivoted towards electric vehicle mobility, new energy in wind and solar, and we announced our first semiconductor fab, India's first, in Dholera recently. We are also creating the first indigenous assembly unit for semiconductors in Assam. The group has also forayed into batteries, and we are building a lithium-ion battery facility for 20 gigawatts in Sonad. The group also is producing the technology for 5G and beyond.
All right, so a lot that is in the works for the Tata Group. It's time for a quick break on this particular program, but we leave you with the Petroleum Minister Hardeep Singh Puri and what he has to say about OMCs and their performance in the current space. We'll be right back. Stay tuned.
Change is staring you in the face. Suddenly the public sector, I'm talking about perception now. I can come to individual companies. I'd be happy to share one or two examples. Public perception used to be that public sector companies are like the bureaucratic setup of the rest of the government. People come to office at 9 o'clock, run away at 5 o'clock, they are risk averse, they don't go out and grab the challenges which are available, and by and large, and there are some other allegations that the oil public sector companies or the OMCs are also excessively amenable to some of the big private sector giants, that they are able to control them. I think the good news is that public sector in general is doing very well. I also happen to be Minister for Housing and Urban Affairs. HUDCO has done very well. HUDCO has got what, a Maharatna status now. The OMCs, somebody said, you know, but the market is rising. Yeah, market is rising, but the market rose 43% and the OMC valuations rose in multiples thereof, some 120%, 160%. Why? Because they've done a good job. And in a time of crisis, in a time where there was challenge, they proved their mettle, and the marketplace, I don't use words like the magic of the market, but the market has a lot of very intelligent people who can make assessments on what is happening, and that's how valuations go up.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching All You Need to Know. It's time to turn to the stocks that you should focus on at the start of trade today. And let's first go to Mahima to get you a few of the stocks to start with. Mahima, morning. What's on your list?
Morning, Alex. So a long list of stocks to watch after a long weekend. Well, the first one is Mankind Pharma, where Beach Limited is set to sell around 2.9% of their stake, which is the total stake that they hold. Well, the offer size is for approximately 2,400 crores, and the floor prices will be in the range of 2,100 to 2,200. Now, the expected date of trade is today, and the offer price will be anywhere between, the discount will be anywhere between 0 to 5%. Now, next stock that will be on the radar today will be Maruti Suzuki. Well, two news flows around this. First, the company will recall around 11,000 units of Baleno and 4,000 units of Wagoner R. Now, this is because there's a possible fuel pump motor defect in these units. And second, they're set to acquire a technology-led startup called Amalgo Labs, and they will own around 6.4% stake in this particular unit. Now, the third stock to watch will be Una Minda, where the company has entered into a license agreement with Star Charge Energy PT, which is a Singapore-based company. And this is because they want to manufacture wall-mounted AC chargers designed for home charges. Now, fourth stock will be Eicher Motors, where the company has incorporated a wholly owned subsidiary in Netherlands. The new subsidiary is named as Royal Enfield Europe BV, which will Eicher Motors will be holding 100% equity in this particular subsidiary, and the consideration is for 5 lakh euros. The business will be in the non-motorcycle supply chain in Europe, and this will just enable a quicker and easier availability of non-motorcycle parts in Europe. And lastly, we have Electronic Marts, which has commenced commercial operations under the multi-brand stores in Hyderabad under the name of Bajaj Electronics. So these will be the 5 stocks, key 5 stocks to watch out for in trade today. In fact, there are more. Thanks so much, Mahima, for getting us those details. Anushi is joining in to tell you about even more stocks, among them HG Infra, Paradeep Phosphates, and more. Anushi, what's on your list? Morning.
Hey, morning, Alex. So right on the top, HG Infra is in focus. This is on a fairly large order win of about 534 crores. So this is a consortium with a letter of award with Stockwell Solar Services. Again, over here, this tentative construction cost is about 534 crore, and with this, the solar plant capacity is to be about 125 megawatts. Again, the executable timeline for the project is estimated to be within 12 months, so that remains on watch out. Now, moving on to Paradeep Phosphates, over here, the central the pollution board has issued a closure of operation for its Odisha plant. This is for the non-compliance of conditions as prescribed by the Odisha State Pollution Board. Again, if you have to look at, this is not the first shutdown that the company has been seeing. While the company did say that this is for the annual maintenance, that the plant was already shut down. But earlier in the week also, if you look at, the company had to shut down its Goa plant as well due to the breakdown of its synthesis gas compressors. Again, if you had to look at the stock performance of the company, this kind of highlights into that. Now about 4% of losses in the last 5 trading sessions. And if you have to look at the overall 1 month scenario, also about a 14% drag for the company stock price movement. Now, next on the list is JSW Energy. Over here, the company's step-down unit has made a pact with Reliance Power. This is in relation to acquire about a 45 megawatt of wind power project in Maharashtra for a consideration of up to 132 crores. So this is again in line with the company's target to achieve more renewable capacity of about 20 gigawatts by FY30 end. So that again remains in company's management guidelines. Now lastly on the list is MRPL, which is in focus after the board has approved an acquisition of up to 1.35 crore of shares of Mangalore SEZ. This cost of acquisition for the same is about 47.18 crore for a total cash consideration from IL and FS. Again, with this, the company's stake in the Mangalore SEZ will increase from 0.96% to about 27.92% post dilution. So again, for this period of completion remains within 1 year. So these are the 4 stocks that should definitely be in focus for today's trade.
Absolutely, got it. Thanks so much for getting us those details. Moving on to a regulatory update, the SEBI has trained its guns at ICICI Securities, issuing an administrative warning in connection of the books and records related to its merchant banking activities. Let's get you some more details on that one. We've got Puneet joining in to give you some perspective. Puneet, what's the latest update here?
Hi, good morning, Alex. And as you rightly said, the merchant banking division has come under SEBI's radar. Now, the due diligence process of the merchant banking division and its activities is something that SEBI is looking at. They conducted this particular observation in the month of December 2023, and the authority has warned the company to avoid any kind of recurrence of certain of these activities. Now, they have said that the company does not see any kind of financial operation or any kind of other impact on the particular for this regulatory activity. Now, do note that the company has been active in the space, and they know that there is a recent delisting of ICICI Securities, which has been announced in June 2023. Now, it has been also active because Quantum Mutual Fund has opposed against the delisting of ICICI Securities, and they say that this may lead to losses of roughly 6 crore for its unit holders. They own roughly 0.09% stake in this. On the other hand, Norges Bank of Norway, which owns roughly 3% stake in the company, has supported this listing, and they do know that this is roughly 2/3 of the majority is needed for any kind of delisting.
Right, yeah, absolutely. Thanks so much, Puneet, for getting us those details. The delisting and merger with ICICI Bank is what is being spoken about, and the boards, remember, of both those entities have approved the going ahead of this scheme of amalgamation. The ratio has also been decided. Moving on to a brokerage report that you should focus on, Mika is joining in to give you some perspective on Uno Minda and Interglobe Aviation. Morning. What are you picking up?
Yes, so up first we have Nomura on Uno Minda, which has maintained a buy rating at a target price of 820 rupees, which provides a 26% upside. Now, this is regarding the new technical license agreement the company signed with Star Charge India. Now, the company already has a strong EV presence in the two-wheeler portfolio, but the technical license agreement is expected to expand the company's capabilities in the EV passenger car segment. Nomura also said that it will help develop local manufacturing base for home chargers. However, However, the addressable opportunity could be limited to only OEM sales for now, as Tata provides charging solutions to various car companies like Mercedes-Benz, Porsche, Volkswagen, etc. And there's a higher growth potential in the long term depending on the EV car industry pickup. And when we talk about Interglobe Aviation, we just have Citi, where it's maintained a buy rating at 3,700, and the supply growth and demand acceleration is likely to double the Indian aviation passengers over the next 6 years. And the company has mentioned that they will add one new aircraft per week next year, and the only risk is the higher ETF prices from the rising crude prices.
Got it. All right. Thanks so much, Mika. Unfortunately, completely out of time, but hopefully we gave you a little bit of perspective on what to watch out for. Do stay tuned. Lots more coming up over the course of the day, starting with India Market Open, and that comes up in just a few minutes. This is NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
join us as we put the spotlight on 6 stocks.
On your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment. Welcome to India Market Open. It's Tuesday, and I guess we're coming back after a long, happy, holy weekend, going into a Good Friday week. So it's holiday truncated, so that's a good thing. But I think trade globally, Neeraj, is looking defensive. For more reasons than one.
More reasons. Unfortunately, the geopolitics comes back into the flavor. Crude is higher, and lots of news flow around us as well. 3 days on a trot, we were on and off. Lots of stock-specific news flow as well.
Yeah, it's going to be an exciting Monday morning, but like Neeraj said, it is geopolitical stress, and that's never a good thing. So while the markets largely have been holding steady, stress on the Russia-Ukraine border is what could potentially impact the global sentiment. A quick check on the implied Nifty before we move on to taking you through everything that's happening across the world this Tuesday morning. GIFT Nifty, implied Nifty is indicating to a 30-point downtick in early hours of trade. Remember, Friday was a day of recovery, but it looks like we're going into a week which is also the monthly F&O expiry. So it's going to be volatile and it's going to be range-bound. But let's take you through what's happening across the world. Asian markets trade on the defensive in early trades. So from Japan to China to Korea to Hong Kong, most of those markets are trading defensive. They're volatile in a tight range. Inflation data from Japan is expected anytime now. In terms of what's driving Asian markets, remember a stronger dollar last week led to currencies, Asian currencies like the yen and the yuan actually declined very sharply. Higher US bond yields is what's denting sentiment across Asian equity markets. Remember, the Japanese yen is trading flat as we see it right now, largely after the currency diplomat indicated that the fall in the Japanese yen, which was seen last week on back of a stronger dollar, does not reflect the fundamentals of the country by any chance. The Chinese yuan, remember, will remain volatile. There's a lot of back and forth there. The Chinese central bank has been intervening to provide some support to the local currency for in China as well. Apart from that, that's of course the financial news flow that's impacting equity markets, but the overarching theme over the last few days and going into this week is geopolitical tension between Ukraine and Russia, and that's not looking good for most asset classes. Wall Street as well took a little bit of a break on Monday's trade. Friday was a solid day of trade. It's gearing up for the 5th straight month of gains coming in for the Dow, the Nasdaq, and the S&P 500. But Monday really was a day of taking profits off the table after the Fed-fueled rally played out all through last week. The Dow, the Nasdaq, S&P 500 are up anywhere in the range of 2 to 3% for the month, and that's expected to remain largely status quo. Remember, Friday is also a holiday in Wall Street. Apart from that, it was a pretty solid day of trade for the Bitcoin. It was up 7.5%, so that was good news coming in. The bulls pretty much taking control of Bitcoin after a 10-day cool-off period on back of the halving season. Apart from that, crude looks pretty well placed. Geopolitical stress, Russia, Ukraine, OPEC plus members not expected to add any supply is what's giving support to crude. Some of the big brokerages are indicating that $95 a barrel crude is very, very likely if this current situation actually goes out to persist. Apart from that, the dollar had everyone's attention. Asian currencies have been on a downtick, but it's not Asian currency weakness, Neeraj. It's the dollar strength, and I think that's the concern. Gold as well is actually holding up quite well on back of geopolitical stress. So asset classes are gaining, unfortunately not for the right reasons.
Yeah, but thankfully the dollar just came off a little bit in yesterday's trade, which is good. But you know, we were looking at things to monitor. Look at what Goldman Sachs has to say for the S&P 500 index. The Goldman Sachs view is that in a scenario of continued mega cap exceptionalism, the S&P 500 index could end the year at 6,000. So, you know, the jury is out there, frankly. Who knows what happens? Let's wait and watch there. But frankly, just taking off from what Samina was saying and then try and focusing on what the trade setup today could be like, I think that's the key thing. One, the geopolitics and the fresh geopolitical triggers could have an impact on sentiment and crude prices. We were showing NYMEX, but Brent is at 87 or northwards of 87. And therein lies the problem, that we are now back to those $87, $88 per barrel. And if what Samina said, the big brokerages are saying about crude, what she meant was Brent, from 87, 88, moving up all the way to 95, could actually cause a flutter or two. So could that bring about a bit of a risk off? I think that is the key question to be asked. And then, independent of what is happening to individual strikes, we've spoken about them so much, maybe it just helps to be defensive in nature. And in some sense, while if you look at the 2-week trade, it doesn't quite show that. And last week, frankly, small caps, real estate, all of them came back with a bang. But it's very difficult to move away from the sectoral bearishness that some of the sectors are producing. Here's the interesting data. This IT, despite the currency weakness, this extended bearishness in IT seems to be a done deal. But Samina, it's a very interesting thing that happened over the last 2 weeks. There's a table that we have which shows that in the preceding week, Nifty IT was up about 1.07%, and real estate had corrected quite a bit, so that a cumulative band was about, or a differential in performance was about 9 to 10% in favor of IT. Last week, it just completely turned around. Real estate up 5%, IT down 5%. So very difficult for IT bulls to find any kind of favor. And therein lies the problem for one of the most heavyweight sectors in the country, 10-11% weightage still, despite the weakness. So that's the other thing to watch out for. And talk to anybody across the street. The one thing that they are betting on to either bet on upsides or limit downsides is autos and auto ancillaries. Almost every single person on the street is very constructive on autos. So that's the interesting piece that I gathered from dealing rooms, at least.
My only concern, Neeraj, with auto ancillary is going to be crude, which is the jack in the pack. Because if crude prices do spike, margins will be impacted. And that will eventually start, tire companies, right? So anything to do with auto will start seeing a little bit of an impact at some stage. But like Neeraj said, it's range bound. We need a directional move one way or the other, either down or up. And I think that's what's making it very difficult for traders to call the shots. But even the wicks. So while the bulls may not be in complete control, the wicks actually eased off quite sharply on Friday. And I'm not sure how you read into that too.
No, continues down. Every single day. We are what, less than 13, and therefore, if you just look at all that's happened to volatility in the last 1 month, it's just completely ebbed off. Now, it's an expiry week. Do we see a bit of a recovery from there is the key question. But does that really make an impact? Again, that's the other thing. And most people saying not really.
We've gone into a little bit of a zone, and that's the sentiment across the world. But like we've maintained this for the last couple of months now, the jack in the pack for the Indian equity markets is going to be crude. So it's one thing you want to watch out for very, very closely. What we saw happen on Friday as well was while the equity markets recovered, the rupee was also on a losing streak. Now, of course, no one's getting concerned about it because this is not a rupee phenomena. It's really a dollar phenomena that's playing out for world equity markets. But we'll take you through a few stocks. There are lots of stocks to talk about, but like Neeraj said, the overarching theme continues to be defensive. Auto could come to some relief. IT trade is still undecided. We talked to Gautam Shah last week, and he was still constructive on the IT pack, third straight quarter running. So there is opportunity, but just, I guess, finding the right opportunity is the big task at hand. In terms of stocks that we have this morning, I have a bunch of stocks, the usual suspects, and I'm going to start with Rail Vikas Nigam. This one seems to show up on my list pretty much every week. If not twice a week. They've signed an MOU with the Airport Authorities of India for about 230 crores. What they're going to be doing is building a subway or an underpass between the operational facility at the Calcutta airport and the residentials for the airport staff in Kolkata. Will be a stock mover in terms of news because the size of the order is fairly big, so watch out for this one. But like we said, this counter might be getting immune to order wins because they've been coming in so thick and fast over the last couple of weeks at least. The other one that's also investors and traders might be getting used to is HAL. It's another order win for HAL from Yona Defense Force. They're going to be supplying 2 commuter aircrafts to the tune of 195 crores. So we don't know timelines, we don't know execution just yet, but for now it's a pretty large order win for Hindustan Aeronautics as well. Well, the other one you want to talk about this morning is ICICI Securities. Of course, SEBI has issued a warning post-inspecting its books and records for activities conducted in the merchant banking space in December 2023. ICICI Securities has reiterated that this will have no impact on its financial or operational activity due to the administrative warning letter. This is sentimentally a negative, so we will see the stock react. And remember, this comes in the light of everything that we've seen, the likes of JM Financial in the last couple of months. Neeraj, you want to come on this one? It's not material in terms of the letter, but I think sentimentally it comes back to what the regulator, I mean, it's difficult to understand what the regulator is really trying to do with some of these non-banking institutions, because that's really where the alpha has been.
Yeah, but as in, frankly, if I look at the regulatory moves today, Samina, I mean, independent of what's happening to ICICI Sec, frankly, I think the IRDA notification on the final regulation for insurance products seems to be the really big thing. So, you know, we'll continue on some of the other stocks, but the likes of HDFC Life and some of the others, Max Life, are certainly the important stocks to focus on, and we should highlight them now. So what's happened, viewers, is that IRDA has notified the final regulation on the insurance products. It's a status quo on the surrender value of non-linked, which is both par and non-par products. And it just removes the uncertainty, or one piece of uncertainty on the life insurance sector. And as my note suggests, HDFC Life and Max Life are the ones which have the higher exposure amongst the listed private life insurers, and very likely that those might react more positively. So that's, watch out for that set of stocks. From a regulatory perspective, there is also this talk of some special audit happening on some of the NBFCs, IIFL Finance, JM Financial, maybe those react to, who knows. So from a regulatory perspective, 2 or 3 things. And before I move to my set of stocks, the other very interesting development that happened was Naveen Jindal joining BJP. And I wonder if that brings JSPL as a stock firmly into focus today.
Yeah, that's an interesting way to look at it, right? Yeah. So JSPL could be one. I'm just going to add one quick stock before Neeraj takes over his list of counters. Uno Minda, watch out for this one. They've entered into a technical license agreement with Star Charge Energy. This agreement will allow them to manufacture and sell EV charging units in India. This, remember, builds up on the EV-specific product offering that Uno Minda has. They already have a significant presence in the two-wheeler space, the passenger vehicles market being a much, much larger target audience for Uno Minda to focus on. Jefferies has come out and reiterated a buy call at that 820 rupee target price. Now, what is interesting is what they're saying is that Uno Minda historically is known to pick up new businesses and actually do really well at turning those things around and making them work in their favor. So that's the other one. But a bunch of other brokerages, Neeraj. It seems like it could be a morning for Interglobe Aviation, interestingly.
Yes, too. But just before I get to Interglobe Aviation, Samina, just rounding off that piece, and there is an NDTV Profit story as well, by the way, on this, that RBI is going to conduct a special audit for regulatory breaches by IIFL Finance and JM Financial. I wonder if this kind of SARS the mood for these 2 stocks as well. So that is the other set of stocks to keep in mind. And Samina is right. A lot of brokerage calls, but before that, let's talk about the deals. So Mankind Pharma will be in focus today. Beige Limited is going to sell up to 2.9% stake through a block deal in Mankind Pharma. This offer is in the range of 2103 to 2214 rupees per share, which is at a discount of 0 to 5% to the current market price. Now, it's not a very heavy discount, but it's a large deal. At that, it's about 2,450 crores or slightly around that region, and therefore, who knows, Mankind Pharma could start off lower and stay lower, but if it gets subscribed well, it could do better too. So keep an eye out on the way the subscription happens. It could be a tricky one to trade, but keep that in mind. The discount is to the tune of 0 to 5%. The other one, before we get to brokerages, is the lock-in period ending for some stocks. Now, Zaggle Prepaid and Azad Engineering are the ones. To the tune of 49% and 17% is the quantum of equity that is getting opened up for trading today. And therefore, when a large set of equities available for trade in a market moved the way it is today, you might well see a bit of a reaction. So don't be surprised if there is a bit of a reaction on Zaggle in particular, but maybe even Azad Engineering. Watch out for both of these. They're not cheap stocks, by the way, and therefore could be interesting ones to monitor. But Samina spoke about brokerage views, and Interglobe Aviation comes firmly in focus. There are a lot of companies that have done this analyst meet. There's Crompton Greaves Consumer, there is Tata Motors coming up on the 27th tomorrow, but I think Indigo is the key one. So what are brokerages saying? MK, on the note on Indigo, they say that it's the second analyst day, underline the ambition of the company to double by calendar year 30. They say the management believes that the recent slowdown in passenger traffic is more supply-led as the demand is strong. The new guidance for FY25 with the ASK to PAX growth at 11 to 12% is half of FY24, but the earning outlook seems steady with stronger yields. Jefferies has raised Indigo to a hold with a target price of 3435. So that's the second brokerage. And Indigo, which has an overweight rating and a target price of 4145, their commentary, look at that commentary from Indigo. They're saying that their FY25 growth guidance is ahead of their estimates. The yields in Q4 are running ahead of the earlier guidance of a flat YOY performance. And the company is targeting early double-digit capacity growth in FY25 versus Morgan Stanley estimates of 6% growth. Samina, the thing that stood out for me in all of these notes is the pre-planning that Indigo has done. Apparently, in each week for FY25, so starting April, every single week, Indigo will get one new plane. That's the capacity addition that Indigo is planning. Hopefully that eases your and my problem about travel.
Only if it gets cheaper. But having said that, Neeraj, this was a few weeks ago, and you and me talked about this, of how a number of the small and mid-cap traders are actually betting big on Indigo. Now, of course, the fundamental news flow is also flowing in and somehow making it work out for these traders. But a number of investors and, your medium-term traders have actually been very constructive on Indigo for reasons more than one, and we were actually seeing that flowing in. Also, quick one on Indus Towers. I don't know if you picked up reports from the weekend. The stock, remember, was one of the big gainers in terms of Friday's trade. There are reports that Vodafone may be looking to offload some stake in Indus Tower to the tune of about 2,000 crores. Now, I know you track this one quite closely, Neeraj, but important news, I'd imagine, if this does play out. It was closed at, 270 rupees, 271 rupees a piece. And this would equate Vodafone's equity to close to about 1,500 odd crores in Indus Towers. So I think these are reports. Once again, we have no way to clarify this for now, but that could be one trigger that led to Friday's rally as well.
Yeah. And also the other thing that happened, Samina, was American Tower Company's decision to convert the debentures into equity. Now, Citi's come out with a note today with that perspective. So that's the other piece of news. They have come out with a note saying they have a buy rating with a target price of 320 on Indus Towers, and the target price could potentially rise to 380 or 400 as well if the multiples change. And the reason, ATC's debenture conversion to equity would mean lesser cash outgo for Vodafone Idea in FY25 because they don't have to make those payments on debentures, which is, according to them, a positive. And because of all of this, and if Indus Tower manages to recover some of its dues from Vodafone on time, they expect Indus to generate close to 4,000 crores, which is about 15 rupees per share, free cash flow in FY25. Now, that is big for Indus Tower as well. And no wonder that the stock has done so well.
70%, I think, is what it's up.
But despite being in the F&O ban for such a long time, it's done really well. And it'll be interesting to see if there's a bit of a follow-up action to Indus Tower in the session today after the manic move that it had.
On 13% on Friday, the news that Neeraj mentioned, the fact that Vodafone might be looking to offload some of their stake in the company through a block deal next week. Remember, there were also reports, in fact, we know this, on the 1st of Feb, a KKR entity, Silverview and Canada Pension Plan had offloaded their holding in Indus Tower, marking a complete exit. But like he said, it's been in an F&O ban. The stock was up about 9% in the last week as well. So 13%, pardon me, on Friday itself. So it's been interesting. Indus being one of them, all cargo logistics. We'll find out if there's going to be, from our technical analysts, if follow-on buying could be expected in some of these names that we saw were big movers on Friday itself.
Yeah, and just lastly, moving away from brokerages, and keep in mind, I think day after tomorrow is where we get a slew of brokerages on Tata Motors post their analyst day. It's probably the most sought after stock. I won't be surprised if the number of analysts attending that meet would be a record high for almost any company because it's such a stock in flavor. But a couple of stocks, Samina. Sanghi Industries, and a lot of chatter around promoter Ambuja Cement selling 2% stake in the company for 258, because so many queries came to us as well on Twitter that, why is it that the company which bought it at a higher stake is selling 2% at a lower price? Because the promoter stake optically stands at 60.44%, but I think the Ambuja family, Ambuja group, as in the Ambuja Cement, excuse me, plus the Sanghi family together, if you think of both of them as the combined entity of the promoter entity, then that stake was above 75% is what I learned. And therefore, this 2% equity sale, in order to comply with the norms of shareholding. I think that is where this 2% equity sale has happened, and maybe that's why the stock may not necessarily react too badly to this development. So that's part one. And work hard. It was an NDTV Profit exclusive about a month ago for the QIP. Very likely that today the QIP pricing for work hard could be out. Could be an interesting one. We're probably going to talk to Mr. Habil Khurana tomorrow, so it'll be interesting. I mean, I look forward to that conversation.
Yeah, it'd be exciting to see what he has to say.
Yeah, and so that's the other thing to monitor. But that's the very long trade setup today. Now, to the more important thing one of the other very important things that happened in Friday's session and begs a conversation is what happened to Rupee, Alex.
Who moved the rupee, right? That's the big question. And what does it mean for all of you sitting at home and indeed for the exchequer? What does it mean for the companies that are using the rupee? And in fact, a lot of the exporters that will benefit from it. Of course, this is a conversation that is happening because the Indian rupee hit a low point of 83.42 on Friday during trade. And that, by the way, is an all-time low. And then in offshore trade post that, Samina, it went further lower. The big question is, why did it move down?
I think the only good thing, Alex, in all of this is this is not the fault of the rupee. It's only about the dollar. And if you look at how the Asian currencies have been behaving after the Fed maintained status quo on its rate cycle, you saw the rupee, the yen, and the yuan actually decline very sharply, right? And that's really what happened in Friday. So while the quantum of decline was not very large, I mean, we went down, sure, we did decline. We closed off the day's low point. But I think the street was a little nerved because it was a brand new low on the local currency. Sure. Now, of course, the timing of it is not great because a lot of kids and parents are going to be going on spring holidays. So, of course, they're buying dollars that are expensive, and that could be why this is making headlines. But on a more serious note, let's take you through what happened. The dollar rupee declined sharply in opening trade. There was some weakness. There was a little bit of RBI intervention. But towards the close, where we saw the rupee actually end lower, what you saw is the RBI was conspicuous by its absence. Now, that was something that caught a lot of people's attention. Also, historically, what we've seen is that every time in the month of March, which is year-end, dollar demand actually goes up quite sharply. Now, who are the guys that are buying dollars in the market? They're largely importers. You have crude guys, you have other importing companies. I mean, 80% of India's crude demand is actually imported, right? So all these OMCs usually spur up their demand for dollar to pay for the crude as in the month of March. So that's an annual phenomena that usually takes place. Along with that, what you also did see is that hedging costs have also shot up significantly. So while you're...
What is that indicative of?
So it really means that what exporters are trying to do at this... So, okay, if you have a stronger rupee, what do you think an exporter is trying to do? He's trying to ensure that for the foreseeable future, he can lock in this rate.
And most exporters do that.
And most exporters are mandated as well to do that, right? You want to play it safe because the last thing you want is currency fluctuation impacting your value in terms of top line. In this case, importers would have liked to hedge because you really don't know which direction the rupee is moving in. But the inability to do so was on back of a massive premium. So you did not see too much of hedging activity happening. The other thing which we talked about, and you called it technical, and I think this is what's technical, is you saw a number of stop losses getting triggered.
Okay.
So you had important levels on the dollar rupee pair which got locked, which got kicked in because of the way the dollar had behaved in overnight trade and in Asia in the morning. The impact of that was stop losses got hit, and then you had to go out and supply those dollars in the market, which were in short supply technically on back of importers buying so much more.
And it's interesting because just, I think if I'm not mistaken, over the weekend or on Friday, you had data on the Forex reserves that came out for the month of, or for the fortnight ending 15th.
And I think one more factor which I want to quickly mention is it's also book closing for investors worldwide, right? So March usually sees FPIs also start checking out. So they're going to be closing the books, which also means that if you're selling the Indian equity, you're buying dollars and you're taking it out. Friday saw 3,300 crores of equity being sold. So you had FPIs, you had OMCs who were coming in and buying, you had stop losses being triggered, you had an arbitrage trade opportunity because the onshore and offshore there's a 50 paise gap. So you were buying in the onshore market and selling in the offshore. That led to the other impact. So lots of excitement for currency traders.
But then the one missing element was the RBI towards the end.
Yeah, and that is very interesting.
Perhaps the RBI also thinks that all of these factors will dissipate.
And they should, right? I mean, I think there are a couple of things. So what's going to be important is to see how the dollar rupee behaves this week.
Sure.
The good news is the dollar index globally is trading flat. So there's no major sort of strength coming in.
It's 104 or thereabouts.
Yeah, the yuan and the yen are also holding steady, which is again good news. So if you're opening to those cues, a gap down on the dollar rupee pair, so a stronger rupee can be expected. It will be volatile. It'll be interesting to see what the RBI does, but some of these factors will play out this week too. But from a more medium-term perspective, most traders believe that with the passive inflows coming into India,
so the
on back
funds.
on back of JP Morgan and of course Bloomberg, the rupee will strengthen, and we've seen flows coming into the bond markets consistently for the last 7 months. So that's a positive. You indicated that reserves are a record high.
Yes.
Good news again, because this is some ammo for the RBI. If they start getting nervous about the currency move, they can go out there and supply the market with as much dollars as they want. Now, again, the only jack in the pack again here is crude, Alex. I think, I've been harping about this for so long, but I really think this could change the complete dynamics, be that deficit, be it the currency, be it equities, be it earnings for India Inc.
No doubt. And we're already at $87. You pointed that out earlier today, and $95 is not too far away. In fact, triple digit is also not too far away. And of course, as one of the largest importers of crude, that hits the exchequer immediately. Of course, on the flip side, and you've pointed this out also, and we pointed it out in the past, a weaker rupee is essentially best for the IT companies, which are
IT and pharma, actually.
IT and pharma, which are a little bit down in the dumps right now.
Holiday goers, importers are not going to be happy. So people like you and me are not very happy about
You're pushing your holiday, Samina?
I am, for sure. Waiting for the rupee to get to 70, which is never happening.
All right, on that note, we have to slip into a very, very quick break, but we've got a lot of action on the other side, including some exclusive news, so do stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Back with India Market Open right here on NDTV Profit. Let's take a look at the top headlines at this hour. US markets take a breather, benchmarks and lower as big tech companies weighed on Wall Street. Futures trade in green on dovish Fed commentary. Back home, short-term traders are on the defensive as sentiment continues to be negative despite indices, both small caps and real estate doing very well last week. Tata Group has been going through a significant transformation, says N. Chandra of Tata Group, adds that the group has pivoted to sectors such as green mobility, renewable energy and semiconductor fabrication. Adani Ports to buy 95% stake in Gopalpur Ports for 1,350 crore rupees. And Zomato's Dipinder Goyal says Flipkart's entry validates potential of quick commerce as a business segment, an exclusive interview. Get the implied open up on the screen for a moment and just to mark what the indices could do this morning. Remember, global markets are a bit tepid, save for Kospi, of course, which is on a roll, and which is why maybe, just maybe, we have this slight bit of a downtick that we're seeing in the session today. But on to an NDTV Profit exclusive, sources tell us that Tata Sons is looking to monetize assets for the first time. My colleague Sajid, who's on top of the news, joins us now. Sajid, what are you gathering from your sources? This is big news.
That's right. The Tata Sons, which is the holding company for the entire Tata Group, is now pivoting itself into monetization of assets within the group. Remember that Tata Sons hasn't been looking at monetization for a long time, and now there is a policy change which is coming up in Tata Sons, which looks at raising funds using monetization of current assets, which could be listed or unlisted. In case if they are unlisted, it's going to be through listing and getting strategic investors. But this is a monetization which is very significant for the group, because in the recent times, in the last 2 to 3 years, Tata Sons have moved from traditional businesses to new age businesses, which include semiconductor fabrications, lithium-ion batteries, or green energy, and all these are huge investment businesses, and Tata looking to raise funds to support these businesses in the incubation period there. If you look at some of the kind of monetization that has happened so far, the recent TCS sale of 0.65% stake, where Tata Sons raised nearly 9,300 odd crores, was part of this change in strategy, and where they are looking at monetization. So it doesn't mean that Tata TCS will be further monetized, but there are many more assets within the group which can be monetized going forward, which includes listing of some of the companies like a Tata Play, which has already filed a confidential filing with SEBI. There are financial services businesses which includes Tata Capital. There is insurance company like Tata AI and Tata AIG. In the infra space, you have Tata Realty, Tata Housing and Tata Projects. These are all big businesses with good revenue potential and profitability. Apart from that, Tata have already invested more than 18,000 odd crores in the digital businesses, which includes Tata Click, Tata 1MG, Big Basket, Chroma. So these are some of the big businesses which it holds in its as investments in its books, and it will look to monetize many of them in the next couple of years as it looks to incubate many of the new businesses.
Sajid, I have a question. One, because we call in this a pivot, actually it's a two-part question. One, maybe you covered it, but I have a specific thing here, that do you think that this in some fashion has any implication for this long debated Tata Sons listing? Part one. Part two, as and when we get details, I'm guessing this will become clearer, but do any of these asset monetization calls have implications for any of these stocks on the listed end over the course of the year? Because if they come out and sell big, if they do, then that might have implications on near-term caps for any of these, right?
See, in most of the cases, these are wholly owned subsidiaries of Tata Sons, except for Tata Projects, which has, in which Tata Sons has nearly 44.5%. The rest being held by Tata Chemicals or Tata Power and other Tata Group companies. So, if Tata Projects goes ahead and undertakes a listing, then these some of the listed companies will be impacted in a positive way, because they will be able to monetize some of the stake which has been held. Remember, Tata Power and Tata Chemicals and Tata Steel are some of the companies who are also taking aggressive capex going forward. So it will be another way of getting some of the to monetize their stakes in these companies. But the question that you asked about the listing of Tata Sons, if you have to look at from a point of view of whether Tata Sons wants to list or not. Currently, the regulation says that they will have to by September 2025, but it seems that they are not inclined to do that, especially because they had struggled or fought very hard to take Tata Sons from public limited to private limited in 2017. And it seems that they are not looking at any way to do it. And this monetization of TCS, which happened in the last 2 weeks, is one indication that they are looking to pare down the debt to very significant low levels, so that they don't fall within the ambit. So there is still a debate. But when I asked this same question to one of the senior executives of the group, they said that it's the biggest gossip of the year. So that they left it at that.
Biggest gossip of the year. It's made it to all the tabloids and news agencies. Thank you, Sujit. You're always on top of what's happening at Tata Sons. This one's an interesting piece to that puzzle. Well, let's move on from the Tata Group to what we're expecting in the markets today. Remember, it's a holiday truncated week. Friday is again a holiday, and it's also the monthly F&O expiry. Agam is standing by with all the F&O action. Agam, I think it's testing the patience of most investors and traders on the street. That range-bound trade, one way or the other, we need a direction.
Yeah, mid-January was the first time we hit 22,000. Here we are, past mid-March, and we're still at 22,000. So consolidation is clearly the name of the game at the moment. And while we've had very, very sharp reactions in this period, well, there's not much to say for when it comes to, well, an addition in positions building as far as the index futures go. Coming down Friday, the picture wasn't any different. In fact, we saw unwinding of nearly 7% in the Nifty futures, even as the index once again moved back above the mark of 22,000. The Bank Nifty, it's trying to make its way up towards 47,000 now. The question really is, can it? A lot will depend on some of your big private sector banks, but we did see further unwinding as far as open interest is concerned there as well. Moving on, let's talk about the options market. Now, in terms of change, considering the Nifty moved higher, naturally we saw a lot more writing in the 22,000, 21,900 puts, as you can see on your screen there. Where does that bring when it comes to maximum open interest? At least as far as your overall distribution goes, the 22,000 put is the one with the maximum OI for this particular week. On the higher end, keeping an eye on 22,500, but not as much open interest build up as in calls, as much as we've seen in puts. Of course, this can change dramatically over the course of the next 2 sessions. And of course, come Thursday, we will have the expiry for the Nifty as well. But today is the Fin Nifty expiry. So where are we seeing a lot more traction? For now, you're expecting a lot more activity around the 20,900 to 21,000 on the Fin Nifty. Moving on, let's talk about stocks. What are we watching out for? We did see shorts in Gale, Dabur and Max Financial, and some longs building up in Shriram Finance along with Dr. Lal Pathlabs. In terms of unwinding, short covering for Tata Steel and SAIL, so 2 of those counters, in fact, which were giving the support to the benchmarks, at least as far as our trades concerned on Friday. Coal India looking at longs unwinding, even though the underlying was absolutely flat at the moment. L&T and Syngene International, among others, which also saw short covering. The question really is, what do you do with these stocks? And in fact, what do you do with the data that is being provided by the major indices? Let's get in an expert opinion. We have Chandan Taparia of Motilal Oswal, who's joining us on the show. Chandan, good morning. Thank you so much for joining in. Let's start with your views on the benchmarks. How are you trading the Nifty and the Bank Nifty this week?
Good morning, Agam. Thanks for having me. So we have truncated week and time for monthly expiry being last Thursday of the month. So if you look at the data setup, Nifty just up by few hundred points or few points from its previous month close. But the good part is trading slightly higher than volume weighted average. In the last month, we settled slightly below 22,000. And this time we are expecting slightly above 22,000. So a marginal gains. However, we have seen some shedding of OI, which indicates some sort of range bound bias could be there. In the entire series, we traded in a range of around 800 points in between 21,700 to 22,526. And we believe it's likely to be in a range near 22,000. So we believe that buy on decline could continue with support of 21,880 and upside will be 22,222, 22,350. So we have to play this range with buy on decline with support of 21,880 marks. Now talking about Bank Nifty, that is up by more than 1% in the series, trading slightly higher than our previous close of 46,000 zone. So slightly higher and 46,250 could act as a support. So buy on decline could continue with support of 46,250. It can witness an up move towards 47,250. So range bound bias, but slightly positive view and buy on decline could continue in both the indices, given the market scenario setup and truncated week.
Okay, Chandan, so, recently we've seen Maruti Suzuki hit a new life high and also test 12,000. Where do we go from here? I believe you have a call here.
Yeah, we have a quite positive view on Maruti. In fact, Nifty Auto Index looks good. In auto basket, we like Maruti, Hero Moto, Tata Motors. In fact, Bajaj Auto looks good. So talking about Maruti, this is one of the strongest counter. Technically, it gave a pole and flag breakout on lower time frame. We have seen put writing built up a long position, and this time we are also expecting better roller in the counter. So expecting rally to us 13,000. One can buy 12,500 call with a stop loss of 210, and it can head to us 400 levels.
All right, Chandan, the other stock on your radar, I believe, is Apollo Hospitals.
Yes, Agam, we are positive on the selective pharma name, including Sun Pharma, Apollo Hospital. And these stocks are comparatively doing well when index has been moving in a range. These stocks are getting to the recent highs and making higher base. So there is a reason that we are recommending to buy on Apollo Hospital, expecting the rally to 6,600 to 6,700. One can buy 6,500 call with support of 125. And here we have target to us 230, 250 zone.
All right. Of course, the advantage of buying a call is that theoretically you have an unlimited upside and a limited downside. And of course, the risk reward in this case does seem favorable for both the counters. And Chandan is playing positively both on Maruti Suzuki as well as Apollo Hospitals. Well, on that note, Chandan, taking a moment to thank you for joining us and taking us through your views on the markets, as well as giving us a handful of ideas on the very last minute too. And with that, well, it's back to you, Samina.
Thank you for that, Agam. That's the view coming in the markets and the F&O setup as we're gearing up for trade. Implied Nifty indicating to a slightly lower start in today's trade. Well, we also have with us Pankaj Pandey and Shrikant Chauhan will also join in shortly. Pankaj, what are you making of the fact that crude rate's much stronger now? The rupee is looking slightly weaker. Equity markets are somehow lacking direction. Do you feel like it is a tough market to make money? And if you are a tactical investor, would you still stay on cash or would you be buying at this stage?
Hi, good morning, Samina. Thanks for having me. I think overall our sense on the market is that we have seen Nifty sort of consolidating at higher levels, and our sense is that if 21,700 gets held, then we are about to sort of challenge new highs of 22,500. Now, while crude is definitely up largely because of the geopolitical issues, but a good part also is that the gas prices have softened. And I think overall, the kind of selling what you see in the month of March, especially in mid caps and small caps, I think that usually happens. So our sense is that even the mid caps and small caps are in oversold territory. So going forward, our sense is that after 4 weeks of sort of decline, we should see some bit of a catch up even from the mid caps and small caps. And selectively, I think one should use this opportunity across large caps, mid caps, and small caps to sort of pick up stocks. We don't see much of a challenge from a macro perspective for India. And I think a good part also is that the domestic rates are sort of softening. Currency is not a big worry overall because I think RBI has been sort of managing currency quite well. Like last year, we had a very literally flat currency. So I think this year also we don't see currency sort of depreciating and impacting markets overall, given the fact that a lot of inflows are expected to be lined up in the second half. So we are quite constructive on the market, and our sense is that recent weakness should be used as an opportunity to buy.
Okay, Pankaj, good morning. Amongst the newsmakers today, there is this piece about how RBI might do a special audit for IIFL Finance, JM Financial. Now, these regulatory action seems to be the buzzword for the last 1 month. I wonder if the mention of these audits, etc., keeps a bit of an overhang on these stocks, or do you think the valuations are attractive now?
So, Neeraj, RBI has been sort of quite proactive in a number of spaces, be it credit cards or be it even microfinance, and including some of the gold loan companies. So I think these are sort of good move in terms of you're preventing a bigger sort of issues to be sort of created going forward. So while yes, it does create pressure on some of the names. Say, for example, IIFL Finance, if your 1/3 book is gold finance, and there, if you're not sort of growing, obviously it impacts the overall growth rate for FY25. But when you sort of look at it from an overall top-down perspective, I think our sense is that overall within the BFSI space, I think the bigger trigger would be the sort of decline in the interest rate. And somewhere, I think our sense is that the RBI is looking to sort of make the liquidity a lot more easier. So while yes, you have stock-specific news impacting respective stocks, but we think that BFSI would be a good contributor to the Nifty sort of scaling up going forward, especially in the second half. And recent weakness should be used as an opportunity to buy. Take, for example, we've seen decline in some of the tier or good names like, say, Credit Access Grameen in the microfinance side. Our sense is that with a company about to sort of gives about 4% kind of ROA, currently it is trading at 2.3 times. I think even if there is some bit of a softness in the overall growth rate, the overall risk reward is quite attractive.
We also have with us Shrikant Chauhan for a technical view on the markets. Shrikant, it's monthly expiry. What's the trade on the index today?
Yeah, good morning, everyone. I think, see, like the markets are in the range. They are not breaking the level of 21,700, 800 decisively. But at the same time, at higher levels, 22,300, 350 is acting as major resistance for the market. As it's a monthly expiry, I think markets are going to remain in a range, and till the markets are not breaking the level of 21,700, which was the lowest of the previous week, I think the markets are going to display some pullback sort of activity in the market. We are of the view that today, in case if there is any lower opening, then close to 21,950, 22,000, we should look for adding some long positions. For the Bank Nifty, there also we are of the same view. There also the formation is indicating us that the Bank Nifty is heading higher. It is much better than the Nifty 50. And again, 46,500 should act as major support for it. But corresponding to 21,700, the level is 45,800. So till the Bank Nifty is not breaking 45,800 and Nifty is not breaking 21,700, we are going to see pullback in the market.
Okay, so if that is the overall stance, Shrikant, good morning. What are the stocks that one can play? I mean, are there recommendations that you're giving this morning?
Yeah, I think in that space, we need to focus on those companies which are parallel to the overall activity in the sectors. Like PSU banks did well in the first half of the previous month, I'm to say in the current month. And now again, after correcting to their important levels, they are rebounding back, like Bank of Baroda, Bank of India, State Bank of India, all are reversing after hitting their important support levels. And they were like rallying since last 3 months. So State Bank looks good at current levels, which is around some 745, 747. Here we can keep stop loss around 734 and we can again expect targets of 770, 765 on the higher side. So we are specifically bullish on PSU banks, but in that, State Bank looks good because the stock has corrected to its important levels. The other stock which we like is ONGC. And there also we feel that it is heading higher. Also, if we go through with the Brent crude prices, then they are trading above the levels of 85, 86. So from here, the stock can move to the levels of 275. We can keep stop loss at 257 for creating any trading long positions on ONGC.
Right. Well, one stock that's also been on the radar for a lot of traders recently at least has been Interglobe Aviation. And this morning we're waking up to a whole bunch of brokerages that are pouring in on Interglobe. Beima is standing by with more on that. Beima, what are brokerages saying? Constructive calls?
Absolutely, Samina. So the brokerage stance on Interglobe Aviation is bullish. I'll start with Citi. Well, Citi has maintained buy with a target price of 3,700. They've said that the current supply and growth play will probably double the passenger traffic by FY30. They're saying that the addition of new A321 XLRs will expand and further grow, add to the passenger growth capacity. They are also expecting some kind of increase in the salary in the form of regulatory changes, and the incremental regulatory cost will be transferred to the passengers. The key risks include higher ATF prices because of crude prices and higher cost pressures from depreciating INR. We also had a Morgan Stanley note on Interglobe which maintains overweight with a target price of 4,145. They've said the company will add 1 new aircraft per week in 2024. The management aims for a double-digit capacity growth in FY25 versus their estimate of 6%. And Indigo will launch airline for new Jewar airport in Delhi. And lastly, MK also has a bullish stance. They've maintained ad with a target price of 3,500. Well, they're saying that the fleet addition continued with 8 planes in January to Feb 24, and the total the aircrafts that Indigo holds right now is around 366, and aircraft on ground will peak in the next 1 to 1.5 years. And the new airports Noida, Navi Mumbai will aid the passenger growth in current year 24 and 25. So these are the overall views of the brokerages on Interglobe Aviation.
Thanks for that, Mahima. So that's, well, a slew of brokerages, I think 4 or 5 which have come out. Morgan Stanley seems to be the most optimistic, but the others too not too far behind. Pankaj, do you guys cover Indigo? Were you part of this meet? And if not, do you have a view otherwise on Interglobe Aviation? Is it a good stock to add or have in your portfolio?
Neeraj, overall, this stock we don't track, but I think we like the entire travel and tourism industry largely, even in the aviation space. If you look at, I think the Jewar airport could have a capacity of about 12 to 13 million odd, which is quite significant from the perspective that this is going to be double the size of the existing Delhi airport. On top of it, you will have another second airport coming in Delhi. Now, typically 40% of the volume happens between these two big cities. So I think the overall number of flyers have been about 14, 15 odd crores, and my sense is that this is one segment which is going to see a sort of a J-curve kind of a growth. I stand corrected. The capacity for Jewar airport could be in excess of 12 crores. So you're sort of creating massive capacities when you look at recent airfares. Those are sort of indicating quite bullish trends from an overall perspective. So I think we like this space, but sadly we don't have a coverage on this.
Shrikant, do you have a view on Interglobe Aviation? A very bullish analyst meet, but crude price is higher. So fundamentally, a couple of divergent forces at play. Technically, how does it look? Shrikant, sorry, you're on mute, I think.
Yeah, Neeraj. Like after this particular analyst meet, we have upgraded the stock to 4,300 levels from the levels of 4,200. In fact, we were having buy on the stock, but again, after the meet, we have raised target to 4,300 levels. See, the important and the most bullish part of this particular company is that they are expecting to grow departures by 14%, where the industry is going to grow by 6%. So I think that is something which is adding some more firework in the stock. But technically also, if we see the market and if we see the overall specific performance of the stock, then it is forming higher top, higher bottom formation. Despite the promoters sold in the previous week, we saw upward activity in the stock, which clearly indicates that there is good amount of interest in the stock. And based on technical formations, I think the stock is heading for at least 3,500, 3,550 in the near term. So even at this level, it's a buy, but we have to keep a stop loss somewhere close to 3,000 levels because it's a positional buy. And with a medium term view, we should look for adding this stock to the portfolio.
Shrikant, quick word on OMCs, HPCL, BPCL, IOC, any trades here?
I think, see, all the stocks have corrected to their extreme levels. But because of the consistent weakness in the crude prices, we may see some sideways sort of activity at the bottom prices. I mean to say at the current levels. So I'm not expecting major bearishness in the stock based on technicals. But yes, we are also not expecting any firework in the near term. So there is possibility that stock like BPCL to trade between the range of 605, 610 on the high side and on the downside 560, 565. Ideal strategy should be to look for adding them if there is any correction in the market and in the stocks. Specifically, we like IOC based on its technical formation, and we can keep stop loss at 155 for the same.
Okay. Well, I think Citi today has upgraded IOC as well, or has said that it's a buy. And I take back my word about Morgan Stanley being the most optimistic on Indigo. It's actually Kotak with a price target revised from 4,200 to 4,300. But we're talking about oil marketing companies. I think hear out what Petroleum Minister Hardeep Singh Puri has to say about oil marketing companies and their performance.
Change is staring you in the face. Suddenly the public sector, I'm talking about perception now. I can come to individual companies. I'd be happy to share one or two examples. Public perception used to be that public sector companies are like the bureaucratic setup of the rest of the government. People come to office at 9 o'clock, run away at 5 o'clock, they are risk averse, they don't go out and grab the challenges which are available, and by and large, and there are some other allegations that the oil public sector companies or the OMCs are also excessively amenable to some of the big private sector giants, that they are able to control them. I think the good news is that public sector in general is doing very well. I also happen to be Minister for Housing and Urban Affairs. HUDCO has done very well. HUDCO has got what, a Maharatna status now. The OMCs, somebody said, but the market is rising. Yeah, market is rising, but the market rose 43% and the OMC valuations rose in multiples thereof, some 120%, 160%. Why? Because they've done a good job. And in a time of crisis, in a time where there was challenge, they proved their mettle, and the marketplace, I don't use words like the magic of the market, but the market has a lot of very intelligent people who can make assessments on what is happening, and that's how valuations go up.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health.
Welcome back. You're watching India Market Open. We're gearing up for trade this morning. It's not going to be very exciting in terms of market opening. Implied Nifty indicating to a little bit of a gap down trade. Shrikant has 2 buy calls. You've got 2 calls coming from Shrikant as well, which we will take you through in a minute on the screen, and that should give you a sense of what his constructive calls are in early trade. So those will show up very shortly. There you go. He's got a buy call on ONGC. With a target of 275. We will revisit this once the markets open up and update that for you as well. Well, 6 seconds to go as we gear up for pre-open trade. More than the equity markets, I think traders will be waiting to see what the currency markets open like in early trade. It should be a positive start on the dollar-rupee pair, keeping in line the yen and the yuan, which have actually recovered in a trade across Asian markets. That's clearly all over the place. So we will revisit this shortly. But for now, we've got a whole bunch of other spaces to be, watching out for. Pankaj and Neeraj, tell us what you think about what's happening in the OMC pack. Is this looking like a good entry point to buy some of these oil and gas stocks?
Absolutely. I think one needs to look at, say, for example, what happened to sugar stock. Sugar stocks used to trade at 5-6 multiples because bulk of majority of the business was coming from sugar, and sugar, you could not build a case of good volume growth there. But when the sort of ethanol story started, and when you're sort of going up to 20% blending, I think the company started deriving 20-25% of their top line from this, and that looked sustainable. So multiples expanded for sugar companies from say 5-6 to 9-10 or some even more. I think something similar is also happening with OMCs. So I think if OMCs are venturing into renewable energy areas, then the business model looks a lot more sustainable. I think most of these companies used to trade at 5-6 multiples, but now the multiples are expanding, and our sense is that depending on what the kind of pace they adopt to change their business model. So for example, you have got about 80,000 petrol pumps. If these companies emerge as charging hubs, then I think the business model overall changes, and the kind of re-rating in multiples what you're seeing would look a lot more durable. So I think one should sort of look at these companies from the new realities or the possibility of new realities coming in. So we feel that a lot of these moves is quite durable in some of these firms.
Okay, so those are the views on the oil marketing companies. The other thing to monitor in the session today is Indus Towers. Fabulous move in Friday's trade. If you look at the last 5 days or 10 days, the stock had a stunning move. For now, it seems 3.5. Let's wait and watch what it settles at. But if indeed this the brokerage view that we have from Citi today says that this ATC decision, American Tower Company decision to convert debentures into equity would mean lower cash outflow for Vodafone Idea in FY25. That might mean that there could be some bit of cash or payment to vendors like Indus Tower, and any kind of recovery from Vodafone Idea would be construed as very positive for Indus Towers. I think that Citi view will come up on your screen in moments from now, but the larger point is their target is 320. They say the target could potentially rise to 380 or 400 as well. Now, Shrikant, very difficult to not like a chart like Indus Tower. Please tell us what are the risks here. I mean, I'm guessing that there are upsides here, but what are the levels you would watch out for?
See, based on technicals, Niraj, the stock is forming double bottom sort of formation on weekly, monthly basis. And the way there is run up and whenever there is a correction in the stock, it recovers back and it crosses its previous high. So clearly indicates that it is heading for the levels of 330, 340, which was its major resistance, because since if you see the stock on weekly basis, since 2019, whenever the stock reached to the levels of 330, 340, it witnessed great amount of selling pressure. This time also it is moving upward, and again the speed is equally faster than the overall expectations or the performance of the sector. So I think here the stock is heading for 340, 330. But yes, if there is any correction, then it should not break the level of 250. That's the risk. If it breaks 250, then it will break the entire formation. So 250 should be the final stop loss for holding and creating any long positions.
Right, that's Indus Towers expected to see a gap up in trade. Reliance, ICICI Bank are all looking really weak in pre-open trade. Of course, this is not conclusive by any ways, but there is some weakness that we are picking up on. ICICI Bank also down 2.5%. Pull up ICICI Securities, if we can see what that one is getting up to in early minutes of pre-open trade. 3% lower is what's expected. Remember that notice from the regulator on after a book inspection for its merchant banking unit in December is probably what's throwing the counter slightly off guard. But your insurance names will be in focus as well this morning. Shrikant, what is the take on ICICI Bank? It is rather one of the banks that most traders are constructive on in the private sector space. This morning expected to see a 2.5% gap down. If we do get it, do you think it could be a good trade for a pullback over the next few days?
Yeah, it looks like the reason is because we are specifically bullish on the bank nifty. And in case if we see the move as per the expectations, then ICICI Bank should do well, because it is forming higher top, higher bottom formation. One thing is very clear, that the stock is not at all in hurry to move towards the fair value targets of 1,200 rupees. It is going up gradually, but eventually I think the stock is heading higher, and the strategy should be to buy at current levels and more on dips. So for Axis Bank, for ICICI Bank, our view is that both are very strong, but we need to buy them with a view of at least next few weeks and not with a very short term view.
Okay, so that's the view on these stocks. But you know, insurance is the other big thing today because of again, regulatory clarity. I won't say regulatory action, because IRDAI has notified the final regulation on insurance products, and it's a status quo on the surrender value of the non-linked, both par and non-par products. Now, lest this sound confusing, Mihika is here to simplify it for us from a perspective of what brokerages are saying after this clarification. Mihika, good morning.
Yes. So the final changes to what was proposed, they haven't made the changes. However, there have been some changes in the special surrender value computation. So this is basically the amount that insurance companies will pay you back when you terminate the policy before maturity. First, the surrender value is based on the computation of the assets. But now they need to take in consideration the expenses, and they need to price the policy reasonably. And they should not, however, expenses should not exceed the limit set by the regulator, and the interest rate used for the calculation will not be lower than the pricing interest rate, which is the assumed rate of interest that insurance firm factors in while policy pricing. What this makes is, according to Morgan Stanley, it makes calculations more transparent. It also helps consistency across different companies, and ensures the surrender value to reflect a reasonable share of the underlying firm cost. What Morgan Stanley is also saying that the final norms are largely unchanged versus the existing norms, and the regulations focuses on simplifying processes and ease of doing businesses. However, the proposed higher surrender value on the non-linked products does raise concern to the value for new business margins, and the new changes appear less onerous than proposed norms. They do expect HDFC Life to perform better in the near term, as the company has underperformed since the regulations were proposed back in December.
Okay, Mihika, thanks for that. So I'll just reiterate the brokerage view that Mihika was saying, that Morgan Stanley is constructive on this development as a result of the changes that have happened. We're not able to show you that, but effectively there is optimism around some of those stocks. There is a sales note from one of the leading brokerages which also speaks about this, that HDFC Life and Max Life will be the ones that will benefit the most. And they are structurally constructive on SBI Life, but today SBI Life is not moving. Now, Pankaj Pandey, do you track insurance, life insurance?
So, Neeraj, I think if you look at FY23, the premium growth for these insurance companies was about 18%, and subsequent to that, you had taxation being introduced for high value policies. So this year, YTD till Feb, the growth rate is absolutely flat. And I think if you are getting a relief in terms of surrender values not being sort of changed much, I think this is a sort of a positive relief for most of the players. Structurally, we like SBI Life largely because they've got a sort of a balanced product portfolio. They have been doing a lot more better in terms of premium growth. So I think this overall development is definitely a positive for the entire LI as a space.
Quick word from you on Uno Minda. The stock has a little bit of a positive news flow, and in pre-open it's indicating to a pretty big gap up. How would you play Uno Minda?
Me for quite some time, largely because it's already a play on automotive switches plus alloy wheels. Now, if you're sort of venturing into say charging as a space, I think this is one company which is a good proxy on the overall EV transition, which is sort of panning out, or the premiumization of the entire auto industry, what we are looking at, because this is one of the largest auto ancillary companies. So I think this stock looks good to us from a portfolio perspective.
Shrikant, you track Uno Minda on the charts. How does this look if you do get a gap up of 4%?
Yeah, I think this stock is showing some specific strength in terms of its daily charts as well as weekly charts, because it is also forming some reversal sort of activity on weekly and monthly basis. But most of the time, whenever the stock moves to the levels of 700, it finds some selling pressure. So I think at this level, the stock is at the middle, and from here, the stock can move to the levels of 700, but also there is risk that in case if there is any weakness in the market, then the stock can come back to the levels of 605 or 20. So the strategy should be to buy on dips instead of waiting at current levels. Let the stock correct back to the levels of 620.25. On the higher side, yes, there is a possibility that the stock can eventually reach the levels of 700.
Shrikant, I want to get the conversation back to life insurance to just round off the loop. Max Life and HDFC Life have started off positively, Max in particular. Do you see upsides here? Shrikant,
yeah, yes. In that space, HDFC Life is certainly indicating us or suggesting us that it is heading higher. The reason is because the stock was falling vertically after hitting the levels of 700 and after the specific proposal from the regulators. But now, after this clarity and transparency, I think the stock is again going to pull its previous highs, which are somewhere close to 680-700. I think at these levels, the risk-reward ratio is quite favorable for those who likes all these stocks to buy and hold with a medium-term view. I think at these levels, it's a buy with a stop loss at 610. We are expecting stock to move towards 700 very soon.
Some stocks which are carrying on from Friday's move. One of them is Symphony. I wonder if it's the promise of a hot summer, which is leading to cooling solution companies do well. 884, the last, okay, just 0.5% actually. On the BSE, it shows about 2%, maybe I'm mistaken, but there is some uptick out there. Network 18, TV 18 are also doing okay for themselves. And as Samina highlighted, Uno Minda is doing well. So clutch of stocks which have had a half-decent start in the session today. Pankaj Pandey, we have about a minute and a half left. A small cap idea from your house, recent coverage. One minute answer, please.
So, Neeraj, recently we have initiated coverage on HEG with a target price 2,240. I think the reason for liking this stock is that structurally we will see more of EF capacity coming in, which would mean that you would need about 2 lakh ton kind of a capacity of graphite electrodes. I think the industry itself is 8 lakh in size, with HEG about 1 lakh. So our sense is that the demand supply situation is going to turn more favorable for a lot of these players, and HEG would be the biggest beneficiary with a capacity of 1 lakh.
Right. Shrikant, Amber Enterprise, have you seen the kind of move the stock has made last week? I mean, it's had a pretty solid run in the last few days. And of course, there's news that they've bought 50% stake in Resojet. Do you track Amber Enterprise?
Yeah, we track and we like this particular company. The reason is because it is into long-term uptrend. And after connecting to the levels of 2,900 or 3,000 levels, it rebounded very quickly and very sharply. So based on its price pattern, based on its volume pattern, I think again, the stock is heading for the levels of 4,400 or 4,500. At these levels, it's a buy, but with a view of investment and not with a very short-term view, because the stock can again correct back to the levels of at least 3,200, which is deep down levels from current levels. So it's a better to buy at current levels, more on dips, and hold for the major targets or longer targets of 4,500.
Well, a couple of positional calls from Shrikant today. One of them is Amber that he just spoke about. The other one is Interglobe Aviation, wherein he's saying no immediate buy calls, but watch out for some positivity during the course of the next few weeks or months, if you will. 6 seconds left for the markets to kickstart trade. We'll have a start which is maybe a bit subdued. The question only is, can some of the insurance, can some of the auto names surprise on the upside? But here's the first trades. Slightly worse off than what the implied open, actually pretty much in line out there, about 1/3% for the Nifty 50. Banks about 1/4%. I wonder if IT is sulking a bit more. Mid caps flattish. Okay, let's round off the loop with small caps and IT. IT flattish, and the small cap index should come up on your screen. Again, flattish, no big moves there. Samina might have much better stocks to talk about, but let's bring up the index stocks nevertheless and try and see what is moving and what's not. So life insurance right up there. HDFC Life up about a couple of percentage points, clearly moving higher. Adani Ports, they've entered into an agreement to acquire a port from the SP Group for 1,300 crores, enterprise value higher, but they'll pay 1,300 crores. Maybe that is what is helping the stock today. Tata Motors, analysts meet tomorrow. Watch out for Tata Motors in the next 2 or 3 days. But auto is clearly right up there, right? M&M and Tata Motors are doing well, but more red than green. What is sulking? Britannia, couple of percentage points lower. I think it might be due to the fact that wheat, cocoa, etc., all prices are moving up, and as a result of which there is some bit of problem there for Britannia. ONGC is actually down about 1% despite the fact that crude prices are higher. We'll ask Shrikant whether he'll use this dip to buy into ONGC because that was one of his calls. Reliance is down as well, so there is some heavyweights putting pressure. But I must say the quantum of green is starting to inch up a little bit. So on that positive note, I'll hand it over to Samina. Samina, autos, insurance seems to be the buzzword this morning.
There are a couple of movers. So the likes of an Indus Tower are actually catching all our attention. On the sell side, you've got stocks like Pfizer that are doing quite badly. We'll understand more in a few minutes, but a quick take on a couple of movers and shakers from the broader markets this morning. Neeraj has already highlighted HDFC Life. So we'll build on to that theme where life insurance players are having a pretty solid day. IRIDA has got some clarification that's come out in terms of surrender value. So some clarity on that front has led to two of the top insurance players in the private sector space, like HDFC Life and Max Life, do really well. Max Life, of course, up about 5.5% as we see it right now. HDFC Life up 3% odd. ICICI Securities, remember they've been pulled up by the regulator. No material impact, but post their books were checked on. There was some indication of concerns regarding merchant banking. But the stock, which was weak in pre-open trade, has actually seen a flat start. Interglobe Aviation is doing well on a bunch of brokerage upgrades. An increase in target price really means that Interglobe Aviation is having a pretty solid morning on a day when the markets are actually looking quite down. 1.5% higher on Interglobe Aviation is what we have. Uno Minda, this one may be the stock of the day. They've talked about how they've signed a deal to supply EV supply chargers for and manufacture and supply in India. The stock, which was up 5% only a few minutes ago, is off the day's high point, but still looking good. And there are also brokerages that are maintained. So Jefferies has maintained an 820 rupee target price on Uno Minda. Well, apart from that, you've also got Indus Towers. If I can pull that one up, that's up 2%. So a lot of these counters, which were rearing in the first few minutes of trade, are off the day's high point, but still looking good on Indus. A couple of factors there that are driving the counter. And of course, you've also got Rail Vikas Nigam. But with regard to Indus Tower, the target price has been raised to 380 to 400. ATC debenture conversion to equity will be a positive and lead to lesser cash outgo for Vodafone India. They expect Indus to generate $40 billion of free cash flow in FY25. So that's why you're seeing a big decent move on Indus Towers this morning. This comes in after an 8.5% up move. The stocks on Friday. There's also reports that Vodafone may be looking to offload some amount of stake in Indus. Well, Rail Vikas Nigam, if I can pull that one up, they've signed a deal with the airport authorities of Calcutta. The stock is up 2%. So Neeraj, you know what's interesting is a whole bunch of these counters open with a bigger gap up, but a lot of that has already gotten sold into in the last 2-3 minutes, so it's moving really swiftly.
Yes, it is, Samina, and that's the interesting piece. The one stock that we had spoken about in the trade setup, I need to highlight, is JSPL. Jindal Steel is up about 3%. I'm guessing it's because of Naveen Jindal joining BJP and moving out of Congress. I can see no other reason why that could happen, because it's not that all the other metal stocks are up and about in the session today. So bear that in mind. Well, lots of moving parts. Max Financial is the top gainer, up about 6%. Shrikant, quick view on MFSL. And of course, whether you'll use this slight weakness in ONGC to buy, because you had a buy call earlier on ONGC, if I'm not wrong.
So very first for ONGC, yes, it's a buy. Yes, it is correcting from the previous close, but it is very close to its multiple support levels of 259 to 60. So it's a buy at current levels and with the same stop loss of 257. For MFSL, I think the stock is in the range. It is not crossing the level of 1010 so easily. Since last 3 times, whenever the stock moved to the levels of 1010, it came back. But this time there is like some performance and volumes are also like increasing whenever the stock is very close to its breakout level. So about 1010, we are expecting stock to move towards 1060 or 1080. And broadly, the broader pattern of the stock is bullish. So I think at this level, it's a buy.
Okay. So buy on both ONGC, which is down today, and Max, which is up 6%. Shrikant still finds comfort in that one. By the way, Tata Investments, Samina, is down 5% yet again.
I like how you're telling me this. It's another day, it's another 5%.
It's another day, another 5%. That's true.
But you know, your ICICI Pru is also doing a pretty solid catch-up now, turning out to do better than HDFC. It's up 4.5% on ICICI Pru. Yeah, 4% on that counter.
So life insurance right out there.
That is the story of the morning. Also, another quick one, you mentioned this in the morning on your straight setup, was that special audit on GM and IFL. And GM is not taking that well. The stock is down and out again with a 3% cut. This could be, and this should be, on back of those reports that we heard
most
of.
Certainly. So, because IFL too is down about 2.5%.
Yeah, so IFL and GM both seeing some weakness on fears of a special audit on the 11th, which will kickstart on the 11th of April.
Yeah, okay. So
Tech is looking good.
Sorry, yeah,
Tech is, HCL Tech is up to 2.5%. Some of those tech names aren't having too bad a morning.
Yeah, the other big mover today, by the way, is EIH Hotel. That stock is up 5% at 443. So really strong show. And Reddington, for some reason, is up about 5% as well. So these are a couple of high-flying movers in the session today. DMart up 3%. Pankaj Pandey, I believe ICICI Securities has upgraded DMart, Avenue Supermarts, 4427. Why do you like it?
So Neeraj, that upgrade is from the institutional side. We haven't, I think one small correction from my side, the HEG target price is 2,420. Now, Avenue Supermart, unless and until our sense is that the apparel business does not sort of start growing, which is what has been the laggard for most of the companies on the apparel side. And probably 1 or 2 quarters down the line, that is when the improvement could start or is expected. So till that time, the apparel business does not start contributing. Our sense is that DMart may not do meaningful outperformance going forward.
Okay, that's that's the view on Avenue Supermarts. I stand corrected. It's the ICICI Sec Insti team which has upgraded Avenue Supermarts. Pankaj, of course, doesn't believe that as of now there might be value there, but the stock is up 3%. So keep that in mind. For the longest time, Avenue Supermarts has not made a move, Shrikant Chauhan. It's finally making a move for the last 3 or 4 sessions, or maybe the last 10 sessions. Do you think it's making a convincing argument to move higher on the charts?
Yeah, I think there are a number of what I can say is that parameters which are indicating us that the stock is heading higher. Fundamentally, yes, the stock is expensive, but technically, if you see the pattern, then since May 2022, the stock was holding below the levels of 4,000. But on the dismissal of 4,000, we are seeing good amount of volume attraction, and all the important averages, they are converging positively. I'm to say the price is much, much higher or above the all important long-term averages. So it means that there is specific buying interest in the stock. And again, the stock can pull to the recent, I'm to say the overall sell-off that we saw in the stock. So we can see the levels of at least 5,200 or 5,500 based on its technical formation. I think even at current levels, it's a buy, more on dips, but it is purely based on technicals because fundamentally it is expensive and we have sell rating on the stock. But technically, the stock is crossing all its important levels, so it's a buy. Keep a stop loss at 4,000 and on the high side, the stock can move to the levels of 5,400 or 5,500. So there is good risk-reward ratio for creating any long position.
HAL on back of the order win is also looking good. 190 odd crores was the order win. The stock is up 2%. Shrikant, some of those Adani Group names are also having a pretty solid day. Adani Energy is up 3.5%. Adani Green is looking good. Adani Port is also trading with a gain of 2%. On the Adani pack, any trading opportunities on the long side?
Yeah, in that space, we like Adani Ports, which is around 1,300 levels. The stock is forming consistent series of higher top, higher bottom. And this time also, after hitting the levels of 1180, it quickly came back to the levels of 1,300. So based on its overall formation, whenever there is a fall in the stock, we see hardly any volume. But after hitting the important supports, it starts generating some specific buying interest in the stocks, or we see some volume-based buying, delivery-based buying in the stock. I think the stock is heading for eventually 1,500. But in the near term, based on its technical formation, we can see the levels of 1,400. So even at these levels, it's a buy with a stop loss close to 1,260.
Right, it's a buy on Adani Ports, the stop with a very tight stop loss. In the meantime, the markets are looking okay. The Nifty 500 trades flat, while the Nifty 50 itself is also seeing a cut of only about 30 odd points. So you can't rule out the fact that we may turn positive as we go along through the day. The breadth of the market's not too bad. The smaller sectors that are picking up focus today are sectors such as insurance. So your top gainers of the Nifty 500 are coming in from the insurance pack. Your Max Financial, your HDFC Life, ICICI Life are all actually trading with gains of 3 to 4%. Along with that, Indus Towers is up 4%. Adani Group stocks are doing well. Torrent Power, BSC, Rail Vikas, HAL on back of order wins are trading with gains of 2 to 3%. On the sell side, it is JM and IFL that are seeing some weakness, 3 to 4% cut there. Delivery is down 4%. You've got Hitachi, JBM Auto, Macrotech, Amber. These are stocks that did really well last week that are taking a bit of a breather in today's day of trade. But before we slip into a quick break, here is Zomato's Dipinder Goyal talking about the impact of Flipkart's entry in the quick commerce space and more. Listen in.
Flipkart is a huge company, and it's the pioneers in e-commerce. So I think it's a huge validation for us that Flipkart is entering the space. And it will, I think, obviously expand the market for us. So we are super duper excited to have them in the space.
Super interesting. You also spoke very recently about how Blinkit is shaping up, and in terms of GMV, it might overtake Zomato very, very soon. Firstly, how soon do you see that happening? And what are the macro underlying trends that are sort of playing out with this trend that you're capturing?
It's actually very easy. Blinkit is almost half the size of Zomato right now and growing much, much faster. So how soon could be anywhere between 1, 2, 3 years, I don't know. It depends on how growth rate pans out over the next few months. So I think quick commerce is going to be bigger than Zomato at some point in time, but I hope that we don't get there, because my goal is to make sure Zomato grows faster than quick commerce.
Nice. Yeah, that's Albi's role to do that. Yeah. The next question I'd like to ask is, you started a new segment, a new reporting business segment called Dining Out. How is that shaping up? You're bringing new artists, be it music, comedy. Do you see it becoming a very meaningful part of Zomato's revenue going ahead?
So we have 2 once-in-a-lifetime businesses in Zomato and Blinkit. So anything that we pick and touch, we actually think of it from a lens of whether this can become very, very large. And we think dining out and live events can actually become very, very large. So let's see.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Welcome back. You're watching India Market Open. There's so much more happening with coffee producers this morning. In fact, we have the Scafe Coffee Day, CCL, joining us on the show to talk to us about a couple of updates from the company. And also, this is in backdrop of the fact that Robusta prices are actually trading at a 30-year high. Hi, Praveen. Good morning. Thank you very much for joining us. Praveen, it was last quarter you indicated that your local capacity, and this is of course not Vietnam, but India capacity was at peak. I believe there was a new capacity that was expected to hit the grounds as we speak in the month of March. And we believe that you've reported to the exchanges that that capacity is come on stream. You want to update us on what this means?
Yeah, hi, good morning. Thank you for having me here. Yes, you are right. The capacity is now up and running at our India facility, which is under the subsidiary Food and Beverages Park. So that is up and running, and this was primarily put for the demand that we had been observing for last couple of years. So yeah, that's up and running now. So that's the update on that.
So how is Praveen? What is the capacity of this plant? And also with 100% at your existing capacity, how much more can we expect this plant to contribute to top line now in terms of volumes?
So, in terms of volumes, we had indicated that we are kind of, we are aggressively planning to grow at around 18 to 20% volume. And because of that, we felt that we need to, up our ante in terms of putting up more capacities. And this is in line with our growth projections, and therefore we put up this capacity, which is a spray dried capacity of 16,000 metric tons. So as we speak today, we are now almost at a combined level, at a group level, we are at 70,000 metric tons capacity, and in another 6 months or so, we will add another 6,000 metric tons of freeze dried at Gautam plant. Which will make the total capacity at around 77,000 metric tons. And this is in line with our, growth projections, because a couple of years ago, we were at 38,000 metric tons. And we had indicated that with an 18% or 20% volume growth, we probably are looking to double our, turnover, volume turnover in the next 4 years. So that is why we ended up, putting these capacities.
Now, let's just take a step back, and I want to understand what this plant is going to produce, right? You do have, and some of your growth vectors, high growth vectors, were your premium product offerings, of cold brew, for example. Is this going to be coming out of this new plant? And also, I believe you ventured into B2C now. So there has been an expansion in terms of your offerings as well. Is the new plant going to be supporting these expansion plans?
So I think, yeah, the answer lies in your question. Actually, the more premium product, like let's say the cold brew and all that, will keep happening from our old plant, because that's where our equipments are, like IES and aroma and recovery and things like that. This new plant is largely, as you rightly put it, to cater for our B2C demand, which is now grown up substantially. So in fact, the whole domestic market, which we began our journey around 5-6 years ago, requires now around 5,000, 6,000 metric tons of the product. So therefore, what we see is that this plant probably will be able to single-mindedly focus on the domestic demand. And then we, with the rest of the capacity, we'll try and, fill up the exports demand as well. So yeah, that's the plan from our side.
Praveen, good morning. Neeraj here. So you guys have always maintained this 20-25% CAGR or whatever it is, right? Doubling in 4 years. So is this that what does this whole B2C arrangement bring to the table? Is it bringing the turnover in order to maintain that growth rate, or does it change the vectors around margins, around return ratios, and maybe around valuations as well?
So yeah, I think it's kind of both. So fundamentally, we wanted to get into, we have been supplying to almost all the brand owners across the globe, and we understand the kind of value that brand brings onto the table. It's not just one thing, but multiple things that comes to the table because of better margins, better value that the brand gets into your table, better goodwill, better valuations. All of that comes into picture. And as a matter of fact, we have been supporting so many brands across the globe, and we thought that it's high time that we also get into B2C space, considering the kind of knowledge base that we have in terms of our understanding of instant coffee market. And that's how we got into this space. And thankfully, things have worked well for us. In good 5 years time, we were able to create a brand portfolio of approximately 200 crores, which is quite a good number. And buoyed by this, we have been now aggressively focusing on building the brands not only now in India but also in some of the offshore markets. So we recently acquired a brand in UK, Percol and Rocket Fuel from the Lofbergs Group, and we are very confident to build that brand in UK because we also realize that some of the international markets are quite big when it comes to coffee. And therefore, we wanted to end up having some sort of a brand play there as well.
So, Mr. Jaipuria, the other question would be, how is this B2C foray started off? Because, I mean, of course, you've done the promotional activities. So a few people have spoken to us about the coffee as well. But what has the response been? And is this too initial a period to gauge, or are the numbers looking good?
So now it's been 5 years, so I can't say now it is initial.
I thought the Bombay foray was recent, if I'm not wrong, or was it not?
Yeah. No, so we really started with South because that's where the coffee market in India kind of is concentrated towards, and we didn't want to kind of waste our resources in terms of spreading us too thin. So that's the reason we started in South, and it's been 5 years. The response has been really, really good, and very quick time we have been able to build this portfolio. Which was very difficult. It was actually a very, very, two-player market. And to have a third player, we are now the number 3 player in India as far as branded instant coffee is concerned. So that's been a very, very good journey. And I think we have now passed the stage where we would be in that, still gauging kind of a mode. We can now firmly say that the brand is here to stay. It has got established. And in fact, buoyed by that success, we are now very, very confident to build it up not only in India, but probably take it to some of the other markets across the globe as well.
Praveen, a couple of pieces to your global business. I do understand that you all had compromised on margins to pick up capacity or to utilize capacity in Vietnam. Now with Vietnam also operating at almost 100% capacity, can we expect blended margins to return back to levels of 20 plus? Because I know you enjoyed those sort of margins at the start of this financial year. So talk to me about that, what we can expect on blended margins. And secondly, how are you navigating the Red Sea impact? Is that now behind us? Have you managed a way to deal with those delays in shipments?
First thing about the margin and let's see. Yes, you're right. There are phases in our growth trajectory when you'll see that whenever the capacities get augmented and we really want to kind of, fill the capacity fast so that we get to those economies of scale. So we do end up, getting, or let's say, acquiring some low margins business as well. But I have always maintained that there are certain factors which will, pull up the margin. There are certain factors which will pull down the margin. So while the margins got a little pulled down because of the fact that we initially wanted to kind of fill the capacity, but at the same time, we were also concentrating on things like smaller packs, specialty coffee, the more upgraded coffee like cold brew and all that, which also pulls up the margin. So therefore, there has been a little pull down and a pull up, and that's the reason, at a per kg EBITDA levels, we have been able to maintain the margin. Optically, because the coffee prices have gone up, you probably see as a percentage of top line, the margins probably would have reduced. But at a per kg, at an overall company level, we maintain very, very similar margins. So that's not a cause of concern at all for us. Coming to your second question about Red Sea, the problem still exists. What has happened is that, yes, there has been a rerouting. So instead of Red Sea, a lot of liners are now taking the stock through Cape of Good Hope, which means that there'll be a little increase in the freight cost and a little 5-6 days of more travel time. So I think now that has got,
quantify the impact of that 5-6 day delay on your margins, if there is any on financials.
So not really, because most of our contracts are FOB contracts.
Okay.
So that's the reason we don't see much of an impact. we have had worse impact during COVID times when the prices were even more higher than what it is today. So I think, we that time also, as we had maintained that because our contracts are largely FOBs, we don't kind of get impacted a lot on the margins. Yes, for the little contracts which are CIF, we probably will get a little impact, but that's manageable and that we can absorb easily.
One last question. What's your view on coffee prices? They've gone through the roof. Do you think more will happen? And I know usually you are a converter or a B2B business doesn't get impacted, but now you're B2C as well. So could there be an issue there?
Yeah, so the coffee prices have been on the boil. So that's been a cause of worry across the market. But there are two things which I want to tell. One is the fact that, thankfully, we haven't seen any impact on the demand, and largely the in-home demand that has been intact, which means that, instant coffee, the demand side is not much of a problem as of now. So we don't see much of an impact on our order. Yes, what happens in such scenarios is that the client also gets into a little wait and watch. So therefore, they are also not committed towards long-term contracts. So the contracts get a little shorter. And as you rightly put, we are a cost-plus model, so our margins don't get affected. So our per kilo EBITDA margins remain intact. As far as the B2C is concerned, yes, there is impact. But if you would have seen the category, most of the category players have been kind of absorbing this through price increases and things like that, and other cost efficiency measures. So we are also taking a lot of that. Thankfully, a lot of our B2C sales are large packs. So there, our ability to increase prices are much better than the smaller packs. So we have been able to kind of pass a lot of these price increases to the end consumer.
Right. Thank you, Praveen, and good luck with business. It's looking up for Cafe Coffee Day. So thank you very much for joining us. We'll take a break. We'll come back. We'll talk to Anindya Banerjee of Kotak Securities to understand the pulls and pressures in the currency markets.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Welcome back. while the equity markets have been keeping us busy, it's currency markets that we can't get our eyes off after what we've seen over the last few days. Anindya Banerjee, Head of Research, Currency and Commodity Derivatives of Kotak Securities, now joins in. Anindya, thank you. Morning. Thanks a ton for joining us. Anindya, what we saw on Friday was dollar strength, year-end demand by oil importers, higher crude prices, some outflow from the equity markets, and surprisingly, no intervention from the RBI. So most of this was business as usual. Was there anything peculiar about what we saw in terms of trade on Friday and what we're currently seeing in the dollar-rupee pair, or this doesn't seem too concerning at this stage?
Yes, actually, it is the final 2 weeks. If we start looking at the market from last Friday, the final 2 weeks of the financial year, there are some weird moves because we tend to see a lot of sudden demand or sudden supply. And that tends to create a lot of fluctuation in the market, like we saw. Yes, along with that, what happened was the market was extremely short because for 18 months, if you look at the volatility of USD-INR, it has plunged to the levels we had seen in 2002. So you can imagine 2-decade low in volatility. So it had created a significant amount of complacency and shorts in the market. And so on Friday, when USD-INR started to move higher due to the global cues and RBI did not come in to intervene, we saw that kind of a short covering, which especially started around 3 o'clock and continued till 5. And today, once the short covering is done, you have seen a gap down open. But we will see the volatility continue over the next 3 trading sessions, including today, because today is the last spot date of the financial year. And we could see some kind of exporter selling coming into the market. So this is more of a year-end phenomenon.
Okay, let's talk about going ahead and what this really means in terms of what has the demand for hedging really been? Forward premiums have also gone up from what I understand. Where is the demand coming in from, importers or exporters? What I want to gauge from you is, in the medium term, do you see strength returning back to the currency? And hence, in that case, are importers going naked, exporters hedging? Give me a picture of what's happening.
Sure. See, the hedging activity, what we have seen over a long time is a function of uncertainty. The higher the uncertainty, higher the volatility, higher is your demand for hedging. Both from the importers and the exporters. The importers will always talk about the high forward premium, why they should come and hedge by paying the forward premium. And for the exporters, it makes sense to hedge if they see the rupee appreciating. So what has happened over the past 15 months is that the compressed volatility has kept the hedging away. So basically, we are seeing hedging, but it is always lower than usual because people are more comfortable selling on the spot than trying to use forwards to hedge. Some bit of long-term FX hedging has happened because of a decently high forward premium. But if you talk about the hedging in the near months, that has been low, and that's not going to increase until and unless the volatility comes back. Now, going forward, especially looking at the next 3 months in the first quarter of the next financial year, there are factors like the increase in the flows in the debt market that's going to happen because of the inclusion process starting in the JP Morgan bond index. So we'll see increased flows of FPIs in the debt market. The equity flows are choppy. But at the same time, we could see the dollar strengthen internationally, especially if the April inflation data that comes out higher than expected. If that happens, we could see the US bond yields rise, and that could push the dollar higher. So on one hand, we have the debt flows, which is going to be positive for the Indian rupee. But on the other hand, the global cues is going to be negative for the Indian rupee. So we could see a more of a,
right. They usually and historically, and for whatever it's worth, the RBI usually takes a cue from the Fed and moves on rates. This time, there might be a little bit of an anomaly because we've already seen some of those. I mean, Switzerland has gone out and cut rates. There was expectation some other countries may follow suit. Despite the rate differential impact, what is the currency market currently anticipating? Are they working with a rate cut irrespective of what the Fed does?
No, the first move is expected from the Fed, because the Fed is expected to cut from June, and the market is not anticipating any move from RBI from now till June at least. So RBI will be following the Fed. Yes, the expectation is that the inflation is going to come down over the second half, and that may push the RBI to cut more, but it's going to basically follow the Fed.
Okay, Anindya, we'll leave it at that. Thanks for this very quick perspective. Really, really appreciate your time. And at the last moment as well, because you kind of, we approached you late, but thank you so much for agreeing to do this.
Thank you so much.
So that's the view on the currency, a quick one at that. Must say, the equity markets currently, with the way they are poised, are about or in or around the low point of the day, but in a very tight band, really, nothing too dramatic. So that's to be kept in mind. The stock that is really buzzing, aside of Avenue Supermarts, is Indus Tower. So watch out for these two names. Indus Tower up 4% and Avenue Supermarts up 4%. So very strong show by these, aside of course, the insurance names which have done well. But there's some more news. State government bond issuances have exceeded targets for 3 consecutive weeks. But what's causing this sudden spike in state borrowings this March? Vishy Johnson with the details. Vishy, good morning.
Good morning, Neeraj. So as you pointed out, there is a sudden spike that has been noticed with regard to state government bond borrowings over the last 2 weeks, and then now this week as well. So, for example, last week, which was the week starting March 19th, the total borrowings listed were about 50,000 odd crore, which was significantly higher than the 27,000, 28,000 crore that was targeted for that week. Similarly, in the current week, the exceeding portion is about 51%. So total cumulative borrowings listed are 60,000 crore, while the target was close to about 30,000 crore. So there has been this spike, and this is largely being driven from what market sources are telling us, is that this is largely being driven by lower grants that are coming in from the central government, as well as some issues with state governments managing their fiscal deficit. If you know that the 15th Financial Commission, of course, states exactly how much money will go from the center to the states, and this is expected to taper down as time goes. So it means FY22 and FY26, it's supposed to consecutively come down. So now that the states have a high requirement because of more infrastructure projects coming up right before the election, and some of the necessary spending, like, for example, in the National Pension Scheme. These spendings together have bundled up, and that's why state governments are going out and borrowing much beyond what they were targeted to borrow during these weeks. Remember that even though these weekly auctions have exceeded the target, the overall for the quarter, the numbers remain still within that range of about 4.2 lakh crore for the Jan-March quarter, and similarly for the whole financial year as well. It's still within the target. But these weekly exceedings did catch the market by surprise.
Right. Thanks, Vishy, for that. So there is that bond markets, as a currency markets, all being caught off guard on back of global and local factors. With that, the markets are holding flat. But with that, we're completely out of time. So thanks for watching. This is a wrap on India Market Open. There is a lot more programming on the other side, and this Talking Point with Neeraj. So stay tuned.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just
Well, thanks for tuning in back to NDTV Profit. The markets are about 1/3% lower. So it's kind of been this very steady state performance for the markets since the start of the trading day today. No dramatics, which is an interesting thing. I was trying to look at the A group stocks which have done well. APAR Industries fits that bill very well, 6719. So we've spoken about insurance, that's had a great run. We've spoken about some of the IT companies just fluttering around, but look at APAR, 6% higher. Very strong show for that one. So keep an eye out for that. Keep an eye out for PNC Infra with a 4.5% uptick. I think that's done well for itself. And there is strength in Torrent Power yet again with 3.5% gains. That's at 1330. So again, gaining very well for itself. Today though, VMart, DMart, maybe some of the other, I wonder if Trent is up, but some of these retail plays have done very well for themselves. So that's the other aspect to keep in mind. Slow and steady, Bajaj Finance is now knocking on the doors of 7,000, 6,924. A month ago, Bajaj Finance was at 6,200 or 6,300. Just goes to show that quality gets bought into. And today, the other set of stocks which have done very well are the diagnostic companies. So Dr. Lal Path Labs, Metropolis, maybe some of the others too, but I think they are certainly perking up in trade. Look at Dr. Lal, up 4.5%. Look at Metropolis, up about 3% as well. So individually, some of the companies in the, not Thyrocare, but the companies in the diagnostic space have done well for themselves. So that's to be kept in mind as well. Okay, thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Now, before we get to the case for a chat with our guest, I think insurance deserves a mention today because clearly insurance is the big talking point. And my colleague Mihika joins in to talk about What is it that some of the brokerages have said when it comes to the insurance stocks on the back of clarifications that seem to have come in from the insurance regulator? Mihika, good morning.
Good morning. So yes, with the Insurance Regulatory and Development Authority of India's final norms largely unchanged to the existing norm, Morgan Stanley has stated that their initial discussions with insurance companies suggest low risk, if any, to the value for new business margins. The regulator has retained the existing surrender value guidelines, easing the December overhang on the insurance companies. However, there are some changes to the special surrender value computations. Morgan Stanley has stated that the final regulations are largely focused on simplifying the process and the ease of doing business, more equitable treatment for the policyholders. The brokerage expects HDFC Life Insurance to perform better in the near term because of its underperformance in the last 3 months, as the stock was the one that was mainly impacted since the changes with the regulations were announced back in December 2023.
Okay, Mihika, thanks for putting that into perspective. So clearly, some of these insurance firms firmly in focus, and we'll talk about that with our guest today. But let me establish the case for a chat for getting in. Our today's guest on Talking Point. He's, of course, Tahir Badshah, President and CEO of Invesco. The question remains whether macro triggers are already priced in or no. So we start off with the last point first. We ask Tahir Badshah whether it's wiser to wait for valuations to moderate and whether private banks, which is the unanimous focal point for most investors, will that drive the BFSI pickup or will it be something else? He's the President and CEO of Invesco Mutual Fund. Tahir Badshah joins me right now on Talking Point. Tahir, great having you. Thanks for taking the time out. I hope all is well.
Morning. Yeah, everything okay. Hi, Neeraj.
Tahir, great having you once again. And I want to start off with that argument, Tahir. A clutch of your colleagues, maybe your fund as well, has taken this step that let's be a bit more cautious at the broader end of the spectrum because the valuations out there are substantially higher. A lot of telltale signs being cited, including promoter blocks, including small cap stake sales, etc. I wonder how you think about the core fundamentals versus the other high-flying indicators around, and how does that translate into your view on markets currently?
So, Neeraj, between those two factors, essentially the fundamental factors or the co-fundamental factors, as you mentioned, and some of the other, elements also, which essentially come as part and parcel of a reasonably decent good bull market. I think there is a fair bit of predominance of the former, and again, that probably makes this rally a little different compared to what it used to be in the past. It is not probably the first time that we are seeing a reasonably decent broad-based market rally and fairly strong performance, as we all know, of mid caps and small caps, particularly in the space of the last 12 odd months. But I think this time it is different from the perspective that it's supported by, as you know, reasonably decent earnings trajectory and earnings growth as well. And the outlook and the forecast as things stand today is looking also reasonably healthy. So I think under the circumstances, therefore, if I were to probably contrast it with, let's say, the last mid cap small cap rally which we saw around the end of 2017, early 2018, or during the period of 2017, if I recollect right. It was a very strong rally at that point in time as well. But would you argue that it was also supported by strong earnings growth at that point in time? Probably not. I think in that year too, we saw a very strong performance of the broader market in India, probably led by different kinds of factors at that point in time, which were at play. But I think this time around, therefore, to that extent, it gives that added layer of confidence, not to therefore say that we can't have periodic drawdowns. We will, and especially if the market tends to at times get a little ahead of itself versus even the good fundamentals that we see. I think that's likely to happen. And probably we will see those kind of instances as we saw in the last couple of weeks where there was a reasonably sharp drawdown. But I would like to think that's par for course. And, if you get those kind of corrections and valuations at some level, therefore, do become a little more amenable, palatable, I think those will only be good entry opportunities. We still see the overall economic configuration as reasonably healthy. I don't really see a lot of devil in it at this stage.
Got it. We were talking to the Motilal Oswal Wealth team, Tahir, and their research seems to suggest that with the kind of earnings growth that has happened in the SMID space over the last 4 years and the basis having moved so high, could there be a case that the earnings growth, the pace of earnings growth may come off? And if that comes off, does it naturally bring down the valuation? So my question is, would you believe that this, whatever, between 28 to 33 times, whatever number you peg it at, this mid valuation, will it come off because the pace of earnings might come off? Or do you reckon that at that end, with the kind of growth promises that a lot of new sectors are making, we might see elevated multiples for a while?
No, so well, you're absolutely right in saying that, look, I mean, if the growth rate tapers off, and particularly tapers off meaningfully or materially, I think obviously that will lead to a fair bit of compression in the valuations as they stand today. But I would like to think that it's not as much only about tapering. I mean, that's likely to happen at any base. You will have to contend with the fact that, you can't have 25%, 30% compounding every year. You will slow down to some extent. But if it is reasonably healthy and if it doesn't slip down too much, I think what the market will probably focus on is reasonable lower, but is it longer enough and is it sustainable enough for a relatively longer duration compared to what it has been in the past? And if that were to be the case, then probably what we can argue for is valuations being perhaps at least a couple of notches higher than what they used to be in the past averages at the same point of time in the cycle. I hope you know what I mean. So basically, what I'm just saying is that you probably have a case for a re-rating, probably of a somewhat better magnitude on a longer history, and especially if earnings growth is of a better trajectory or a better magnitude compared to what it has been in the past, and the longevity is probably somewhat better than what it used to be in the past.
The other aspect that is confounded, I'm squeezing in themes here, Tahir. Let's say power, let's say renewables, oil marketing, what have you, or PSU linked or policy linked spaces. Okay, that's my clear question. Policy linked spaces. Now, the conversation always has been that people cite past history to say that look at execution slippages that have happened in the past, intentions that have been expressed in the past but not quite fulfilled, and therefore that the run-up that we've seen in some of these themes on the current promise deserves to be brought down. At the other end, the bulls are saying that this time does seem to be different because in select pockets like power, renewables, etc., the targets are so tall and the policy push is there for the companies to execute and execute well, or having the ground to execute well, and therefore earnings growth might surprise on the upside. I'm trying to ask you, which side are you on?
So, we ought to be on the side where you see visibility. And I think you see visibility for, as you said, in the camp where there is a possibility of growth being relatively stronger compared to what it used to be in the past. There have been policy initiatives earlier. There have been policy initiatives now as well. But you have to just try and understand as to what is the stability of these policy reforms and probably what kind of longevity it can bring. You can be in one camp, but you don't have a choice but to then keep assessing and reassessing at all points in time. So even though we may be in the positive camp as of now, we don't have a choice but to continuously reassess as to where what the landscape is looking like and how are our assumptions being fulfilled. And if there is any detraction from that, we as money managers, we don't have a choice but to kind of take the reality into account and start trying to see as to what kind of precautionary measures we need to take or reallocations that we need to do in our portfolios. But as things stand, I think, like as I said, it's all about assessing the visibility, and that there are certain factors which are driving and likely to drive the growth of a particular theme. I think if those come into question and you strongly believe that those questions are merited, I think you don't have a choice but to, irrespective of whatever camp you are, you need to reassess the situation.
So Tahir, where is it that you find the strongest visibility?
So, today goes without saying that, look, the industrial cycle, which has been in reasonably strong momentum and which we all actually should wish continues for relatively longer period of time for the good of India, I think is still in good shape, and that is where much of the incremental opportunities, at least from a point of view of not having to worry about the visibility of growth, is going to come through, and that is where a larger section of our portfolios is obviously directed. But be that as it may, I mean, we have to, we don't have a choice but to also look at value opportunity, which might unfold as a result of the market being significantly attentive or concentrated towards one particular area. It always happens that if a larger section of the market looks at only a certain set of companies and certain set of stocks and industries, there will be laggards or there will be value which will start developing in some other parts of the market. And, so I think from a growth standpoint, clearly the industrial segment is, and everything which is related to the investment cycle by and large is likely to continue to do well. But we try to mix it with some of the value opportunities that we might probably spot at various points in time in different sectors. It could be consumption at some stage. It was pharma, let's say about 3-6 months ago, which is trying to kind of make a reasonably decent comeback. It's played out pretty well, pharma and healthcare. It could be banks at certain points in time, although we may probably find it difficult to actually see triggers around it at this stage. And I will probably also be constrained to give you what would be the catalyst which will probably take some of these banks up in terms of the valuations from here on. But value does tend to develop at certain points in time. And if you believe these are franchises which are reasonable to bet on and they provide value, I think we don't have a choice but as managers to reflect those in our portfolios.
Yeah, and Tahir, the point is well taken, Tahir. I mean, it might be difficult to kind of make a point or give a constructive view on what the immediate triggers would be. But for the fact that there is value, and at some point of time the value will get realized. So understand that point. Tahir, stay on. So much more to talk to you about. You've started off this conversation on financials. We'll extend that a bit further. Talk about insurance and some other stuff on the other side of this very quick break. Viewers, stay tuned on Talking Point.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Back with Talking Point in conversation with Tahir Badshah. He's cited that financials and banks in particular could be a pocket to focus on amongst his wider market view, that don't be too perturbed about valuations, because if growth story stays on, then some of these valuations could well get justified in the times to come. I think that's the aggregate that I got. Tahir, please correct me if I'm wrong there. But since you, sorry,
probably need only go on to add that, as you mentioned, along the way that these valuations sometimes probably become a little, we don't really know whether these valuations are true or not, in the sense that you might probably get earnings upgrades along the way. And especially if the cycle is strong. So what appears to be high valuations might be happening valuations which are high, but underlying and we've seen that happen a fair bit in the last 2-3 quarters, where some of these companies in these sectors which have looked apparently very expensive have turned out to deliver relatively robust earnings. And once upgrades to earnings come in, then the upgrade cycle itself is sufficient enough to drive these stocks.
Yeah, fair point. Okay, so watch out for earnings upgrades in select pockets as well. Effectively, no easy money out there. Please do your own research, study well before investing, or choose mutual funds. Tahir, now you spoke about financials, and that was at the start you spoke about banks, but at the start of the show we also spoke about the newsmakers of the day today, and that was insurance and this IRDAI, sorry, excuse me, tongue twister out there, but IRDAI regulation, status quo on the surrender value of the non-linked products, etc. Do you look at life insurance as a bucket, and do you like it, or do you think there are better plays out there, and why so?
So we do have some exposure to life insurance companies, and very selectively though, but we like the proposition in a couple of cases, especially where the product basket is reasonably well diversified. And last year, when we saw that the changes which were brought about in the 2023 budget with regard to the insurance companies, I think was a reasonably decent value opportunity which got created at that point in time, and some of the reasonably decent frontline insurance companies. And we did approach it from a value standpoint at that time, to reflect it in many of our values and in some of our value strategies, or at least a value portion of some of our of our funds. So I think that is something which we were able to play, but from a value standpoint at that point in time, I think in general, this is a sector which still has growth characteristics. We know that, right? I mean, we might not be underpenetrated as far as life insurance is concerned, but it is still a reasonably decent growth portion of the economy. So and the financial services segment. Incrementally, I think the approach that we've had to financial services, banking and financial services, is also a little different compared to what we've been used to in the past. I mean, 5 years ago, we've always largely focused on lenders, whether it be the banks and the NBFCs. Today, the landscape has changed as far as financial banks and financial services together is concerned, and there are a good number of opportunities on the non-banking, non-lending financial services side, and I think insurance is one part of that opportunity. So it does make sense to look at some of them, particularly where we see the product basket, as I said, being relatively more broad-based and appropriate.
Got it. Okay, Tahir, there is the formation of the newer themes as we've seen in the last 2 or 3 years. Some have taken rebirth, right? Defense, PSUs, railways, etc. And some like PLI formed in the last 3 years, EMS schemes, EMS companies in the last 2, 3, 4 years, if you will. Maybe potentially strong green hydrogen companies coming up in the next few years as well. Where is it that you have the strongest conviction from things that have gotten created or re-christianed in the last 3 years?
We've started off with conviction around a couple of them about a year and a half back, and those have kind of then couple of others have joined the party or joined that proposition as we've gone along. So I still particularly personally like the defense theme. That's something which I believe is something which would probably have stronger legs and more visibility as we go along. And I think that sector is reasonably concentrated in the sense that you have a few players who are dominant in their respective sub-segments of their defense ecosystem, and each one of them have their own important role to play. There are within that as well, we probably like a couple of them over a couple of others, but by and large, I think I'm reasonably constructive on that space. I've been for a reasonably good period of time, and that still seems to, be the best place to be around in this thematic driven or policy driven, part of the market. I think railways is another where we've probably not been able to have a lot of exposure, but that's something which is again quite exciting because there could be a couple of plays which are even in that segment which are not necessarily capital intensive based, in the sense that they're probably not as balance sheet driven as what probably other parts other such segments are. So I think that's something which is another area that we've liked. I think power along the way has provided some opportunities, either in the form of certain utilities or probably even in the case of certain financiers. Those are clearly the ones which have made a very strong cyclical comeback after a very long period of time. Obviously, the cycle as of now is still in their favor, and we're still in the early stages of that cycle, probably is what we would like to think. But then we have to be watchful. I mean, these are some of the segments which have shown certain challenges as the size has grown and as the cycle has tended to become more peakish. So I think we have to be careful about those. We have to be watchful and careful about some of those challenges and risks which are associated. But at this stage, we would like to think that these are still either in the early or in the mid-cycle stages of their life, of the new cycle.
Got it. Tahir, one final question really, and that's on consumption. The volume growth has been absent now for a while. The recent developments around commodity prices shooting up, we hear cocoa is at multi-year highs, wheat is at 3-week highs, palm oil has gone up, so on and so forth. So the input costs for a lot of these companies are also now starting, or will probably start to pinch. Hunt for value there or avoid it?
Hunt for value to some extent, but it's clearly very difficult, Neeraj, and it's we just started nibbling at it, if at all. It's not something that we are able to get our hands around and probably develop a lot of confidence. But like as I said at some point in time in the earlier part of the conversation, that look, we need to kind of be watchful of some of those value pockets which might develop, and we probably may not have the necessary triggers in our. I mean, we might have some expectations, but the triggers may not have fully manifested. So we are approaching it from that standpoint. We're taking some baby steps. We would like to think that there can be a couple of things which can change the fortunes of this sector. I hear you when you say that raw material prices have probably once again started to go up, and that takes away some part of the sheen from this sector once again. It at least supported the companies during the last 12-18 months when volumes were actually a little difficult to come by. But the next leg probably of the story, if at all it unfolds the way we probably think it might, would be from a recovery in volumes. Maybe the margins may not necessarily be as strong at that point in time, but I think this sector valuations do tend to get driven by what we see on the volume side, on the revenue side. And I think if that starts looking up, it would be after a fairly decent gap. And the triggers could probably range from, let's say, a good monsoon, coming through in the next some time, versus let's say what we've had in the last couple of years, or probably some policy changes which start to address some of the low to mid-end segments of the income pyramid. I think those are things which can probably bring back resuscitate this sector as such. But we'll have to wait and watch. So like as I said, there are some triggers in mind, but we don't have a choice but to kind of wait for them to manifest a little more strongly before we move in a lot more confidently than we are today.
Point well taken. Tahir Badshah, always a pleasure talking to you and get your insights. Thanks so much. We may not talk before that, so in advance, have a good holy month of Ramzan and Eid Mubarak. But thanks for joining in today.
Thank you. Same to you too.
And viewers, thanks for tuning into this edition of The Talking Point.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Hello and welcome to the F&O show. This is Meena Nalwala, and Agama and myself will take you through all the F&O action in today's trade, and of course also take you through all that's happening as the markets go into their monthly expiry. It's a holiday truncated week, so we are catching up to global cues from 2 days. But the markets are once again range bound, lacking direction, down about 50 odd points on the benchmark, 22,000 those being respected on the index for now. Well, the breadth of the markets also more or less a 50-50 picture. The broader markets are performing in line with the benchmark. Nothing major really turning heads on the street this morning, except smaller sectors like insurance that are having a pretty pleasant day. Stocks like Max Financial, HDFC Life, ICICI Life, all doing quite well in today's trade. But Agam, lackluster trade, lacking direction one way or the other.
Right, well, certainly, and it's something to take forward to, and what we've come to understand based on expectations of a lot of traders is that we're expecting sideways movement at least in the near term. Well, currently, at the moment, we are keeping an eye on the Nifty, which is at around 22,000. Let's take a look at what's happening in the futures. Now, remember, through the course of the month of March, we have not seen a significant build-up in the index futures, and more importantly, over the past few sessions, we're seeing unwinding. And this is even as the Nifty spot stays at 22,000, and there you have it, another bout of sharp unwinding coming through. So up until this beginning of last week, the overall open interest was well over 250,000. It's now moved below the mark of 200,000. This really begs the question of whether or not there is going to be any traction whatsoever. And I know that there's not more than 3 days left for the monthly expiry to come through, and under those circumstances, it's been a fairly light expiry. That said, 22,000 continues to be one where we continue to see that max OI, a lot of traction when it comes to the options, open interest as well, and something to keep an eye on as well. Perhaps the expectation at the moment is that the Nifty is likely to expire through the month of March around the mark of 22,000. At least that's what the premiums are indicating, considering the overall open interest distribution as well. Let's take a look at the Bank Nifty and take a look at whether or not there is further unwinding there as well. There is another 4.2% decline there in terms of open interest, but this is even as the underlying comes up by around 0.4%. So the Bank Nifty is once again, inching back towards that. Well, I don't know if 46,500 is a pivot of sorts, but it's been moving around that and has been for some time now. While there were some expectations of the Bank Nifty to move back above the mark of 47,000, reclaim it, that really hasn't come to be. And for now, we are continuing to see that lackluster trade for this particular index as well. So all in all, markets are very much in consolidation mode with a slightly negative bias. And I reckon that all the action will continue to be in stocks, Samina.
Indeed, it's the stocks that are still grabbing a little more attention at the benchmark itself. And this is, remember, the trend that we've seen across world markets. It is a holiday truncated week, not just in India, but for most global equity markets. So do not expect very big moves in trade over the next few days. Well, we have with us our guests joining in, but very quickly before that, I'll just highlight the top losers and gainers in trade. Finolex is up 5%. You've got IRFC that's up 4.5%. Avenue Supermart is also doing well at the day's high point. Dr. Lal Pathlabs, EIH, Rail Vikas Nigam, Max Financial are all trading with gains of 3 to 4% each. On the sell side, you've got Tata Investment Corp that hits lower circuit once again, down 5%. Delivery is looking weak. IFL Finance and JM are looking weak on back of that special audit that will be conducted by the RBI on the 11th of April. You've also got Lakshmi Organics, Sun Pharma, 361 that are having a weak day of trade. Adani Group stocks trading with a positive bias. Brijesh now joins in with Ruchit Jain to talk to us about the outlook on the markets and their F&O strategy. Brijesh, I'll start with you first. It's lackluster, lacking direction, rather range bound. Would you at all trade the Nifty right now?
Hi, good morning. So, as you said, definitely the market is lackluster. That aggressive momentum may be missing, but what I can judge from whatever from the morning trade, what I can see is that the market is finding support close to 22,000 mark, and that is one of the reason I think that can be one bargain buy at current price. So may not be too much of a high set, but then from the current level, we are negative by 57 points on Nifty. So more or less, we can recover this 50 points is what I believe. So whenever it comes closer to on a cash level, whenever it declines by another 20-25 odd points, I believe with the stop loss below 22,000, one can trade the long positions. Not too much of an upside, but then maybe this this negative bias might come to the close, or maybe a 10-15 points positive. That would be the view for the Nifty.
Right. So that's Brijesh's view on the Nifty. Ruchit, good morning to you as well. Consolidation does seem like it's on the cards, but is that your opinion too? Are you expecting a direction in the Nifty anytime soon?
Hi, very good morning, Agam. Very good morning, Samina. Well, more or less the view remains the same as you pointed out that most of the data indicates that markets should stay within a range. Now, if we look at last couple of trading sessions, before this long weekend, we did witness some pullback move, but we have not seen any kind of significant long additions in that pullback move. I think it was just a bit of short covering by FIIs. If you look at a net long short ratio, that has improved a bit from 32% to around 35% now. But that is more because of around 22,000, 23,000 short contracts were unwound on Friday's trading session. But no fresh long build-up has been seen, and even if you see the recent up move, then it just seems to be a retracement where 22,100, 150 is a stiff resistance which needs to be surpassed. So, and on the downside, today's trading action indicates a good put writing around that level of 22,000. So 22,000, 21,900, that would continue to act as a support. So I think the best thing to ride this or to trade in this market is to maybe short straddle, where 22,000 call option and put option both can be sold. Both are combined premium is around 240. So with the inflow of that 240, one can keep a stop loss about 330 and expect targets around 90 to 100 rupees.
Very quickly, what's the word on Bank Nifty? Brijesh, do we have a trade on Bank Nifty or IT or the IT pack?
Bank Nifty specifically, I would avoid, because what we can see, it has broken the Friday's low. So the sentiment wise, I think it is negatively placed. And if I do look at the 50-day moving average, 46,400 is the mark. So I'm not pretty confident. Maybe Bank Nifty may remain sideways, but there is always a gap of that 200 odd points on the downside. So it's not pretty sharp. I can't see any positive trade setup in the Bank Nifty. Maybe I can go for a short trade, but that would be a risky bet. But then shorting can be the one of the opportunity. On a bounce close to 46,700, I think one can trade the short trades in the Bank Nifty.
Well, that's the view on the Bank Nifty, and of course, very quickly, as far as how things are panning out in the broader markets are also being reasonably quiet. So not much to speak for there either. Of course, I'm going to very quickly put up what's happening with the Adani Group stocks. Let's take a look at how things are panning. And we've seen some gains of late, and they've been holding on to the levels despite the recent mild volatility that we've seen in the market. So Adani Green is up around 1.8%. Adani Enterprises is also up and about somewhere around 3,100 rupees per share, and it has been maintaining itself there as well. We've had updates from Adani Ports too. Let's pull that up as well. So we have the 1.4% up move there, and well, there you have. That's how things are panning out there. But speaking of the Adani Group, let's hear Adani Group's chairman Gautam Adani speaking at the inauguration of Adani Green Energy's gallery at London Science Museum and outlining the evolving nature of green energy sector. Listen in.
I'm very happy to be here today on this momentous day for the inaugurations of the Energy Revolution Gallery at the Science Museum. We at Adani Green Energy are proud to be the title sponsor of this stunning new gallery. I've always believed that our lives are part of a bigger story. It is a story that connects what our ancestors knew to the future we want to create. In all our actions, we must respect the wisdom of our ancestors while crafting dreams for those yet to born. We are the bridge connecting the past with the future. We are the bridge between generations. It is our duty to take care of our planet, not only for these generations and the next, but also for the generations to come. And I am proud that Adani Green Energy is leading an energy transitions that honors that commitment. As the world's leading solar power developer and India's largest renewable energy company, we are taking very big steps. In Khavda, which is in the state of Gujarat, we are building the world's largest renewable energy park. It will have a generating capacity of 30 gigawatt energy and it is incredibly big. Its area of 538 square kilometers is more than 5 times bigger than Paris. We are also aiming to reach 45 gigawatt of renewable energy by 2030. This will be like providing clean energy to almost every house in England. Ladies and gentlemen, museums are very important because they teach us and inspire us. This new gallery is about more than just a clean air or about moving away from oil and gas. It is about the energy transitions we need, this world needs, and it is about the revolutions that is taking place in the world of energy. This gallery is special because it makes us think, dream, and wish for change. It shows us how our world, our economy, and our own lives can change for the better. And as elegantly outlined by Sir Blatchford, we hope this gallery will teach and inspire people both now and in the future to help create a sustainable world.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Welcome back. You're watching the F&O show. There are a few spots in the market that are showing some green. For example, insurance companies and stocks like Indus Tower are doing okay in trade. Brijesh, we'll start with you. What are your top recommendations today?
Yeah, so I think there is a momentum pick. Stock specific action is there. HAL is something which I think there can be some the positive momentum in the F&O pick at the current price. The stop loss would be 3,235 for the target of 3,300. This would be valid for 3 to 4 trading session. That momentum is started. And next one would be the IPCA lab. So again, there is some positive bias in the IPCA lab. One should go long at the current price with a stop loss of 1179 for the target of 1290.
Okay. What about you, Ruchit? What are you tracking today?
So a couple of recommendations, both on the buy side, and of course it's a very short-term trading perspective. Considering the markets, I expect to be trade within a range. Larsen and Toubro would be my first pick, where one can look for buying opportunities. We have seen a rise in open interest. The stock has seen some consolidation and is bouncing back from its 40 EMA support level. So L&T can be bought with stop loss below 3,550 and expecting targets around 3,800 in this up move. And Voltas is looking a bit positive because of the short covering move today. Last week we witnessed some range bound activity, but last 2 or 3 trading sessions, the short formations which were there, today we are witnessing that short covering. Price up move because of unwinding in futures open interest has been seen. So I think a pullback move could be seen in Voltas as well. And if you compare the stock in last few trading sessions along with the broader markets momentum, then when the broader markets were correcting, the stock has relatively held well. So a relative outperformer when the markets were correcting, and now the shorts are being covered. So one can go long with stop loss below 1,069 and expect targets around 1,120.
Right, Ruchit, you've seen the move among some of these private life insurance players like HDFC, ICICI and Max Life. All of them are up for about 3 to 4%. Any trading opportunities here, you think, Ruchit?
I think they can continue to do well, but I would recommend to look for buying opportunity on some kind of decline. Last week also HDFC Life, we have seen that from lower levels they've already seen some pullback, but the stop loss from here current levels would be below 600, so which is a bit far considering that the upside seems to be restricted around 650, 660. So if we get any kind of dip towards 620, 622 kind of levels, then I think there one can look for buying opportunities with stop below 600 and expect targets around 650 to 660 in the near term. So buy and dip strategy should be kept rather than chasing the gap up move.
Okay, I want to talk about Siemens because this one is making a life high right now, and well, it's been moving from strength to strength. It's been across a lot of momentum and alpha indicators as well. And what we are seeing right now is a further surge. Can we pull up the snapshot, the future snapshot of Siemens, and see how things are panning out for the March futures as well as the April futures to see if there is in fact more traction towards the long side? The question really is that we're so close to expiry. Is there a possibility of some advantage that we can in fact take place? So naturally the March futures will start seeing unwinding. I reckon a lot of this is on account of the rollers which is starting to take place. Let's pull up the April and there you have it. That's the April one. So April one's clearly looking at an increase in OI. Right, Brijesh, how would you take advantage of this? Firstly, what is your view on Siemens? And secondly, is there an expiry play when it comes to Siemens, as well as what would your positional view be as we move on to the April series?
If I do Siemens, if I look the daily chart, I think it's already trading in the positive zone. So the bias is definitely positive. So, but if we need to take a fresh entry in the Siemens, I think we need to wait for some decent correction. Maybe when the rollover and the expiry is dead for the current series, I think there will be some profit booking, and this may come back to the specifically for the April series. I think it can easily come back to 5,000 mark on the downside. So only whenever we see those opportunities closer to 5,000, I think and overall looking at the market scenario, if the market sentiments are positive and Nifty is holding about 22,000. So taking that picture in a note, we can go long in the position. But right now, at this definitely at this point, I won't be taking the risk reward ratio would not be favorable from the F&O point of view. I see a correction closer to 5,000 marks. So only when we see those points, I think we may review and then we later take the call on that.
Right. Ruchit, we've already highlighted some of your strategies, but is there anything else that's catching your attention more from an expiry, monthly expiry time horizon?
I think diagnostic stocks should be kept on radar. We have seen both Lalpet as well as Metropolis showing a good momentum today. In fact, Metropolis is one of the names where the price action has still not come. But we can see that a good amount of open interest build-up has been seen there. About 11 to 12% OI increase indicates a good long build-up. But if the stock surpasses 1650 mark, which is today's high as well, so I think a good amount of short covering can be seen as well, because recently the stock has already gone through some corrective phase. So not exactly at current levels, but in case if we see some price momentum above 1650, if it crosses, then one can go long on Metropolis for potential targets of 1750 to 1800.
Okay, and of course we have some updates coming in from the Tata Motors stable as well. Of course, Tata Motors has been in focus because of the entire group, the kind of changes that they're making to the structure in order to avoid the potential listing of Tata Sons coming this comes September. Of course, they have a lot of time to make changes so as to avoid that. But because of that, several of the Tata Group companies are starting to see a small changes here and there in terms of the structure going in. The question really is that what do you do with something like Tata Motors? Because we are also fundamentally looking at improving numbers and volumes for Jaguar Land Rover, and of course the company has also announced the split of your passenger vehicles with commercial vehicles going in. Not to mention that the DVRs will also merge at some point in time with the full rights Tata Motors shares. The question really is, how does this one look technically at the moment? Brijesh, what's your view here?
I believe that the structure for the Tata Motors specifically is pretty strong. Whatever the after the news, the stock has corrected back to the 50-day moving average and now finding support to bounce back. So I think from the auto space, Tata Motor would be the one I think will be back to the 1000 mark, 1050 mark. So I'm pretty confident with the recent low, which was almost at 1000. Low was 922, but I think maybe somewhere closer to 950 mark. With that stop loss, I think one should take the long positions because I believe we should be crossing 1000 mark, and my target for the Tata Motors would be somewhere near to 1050. So this would be for the next couple of days, but then I think that should be the one positive trade we should be looking at.
Right. Brijesh, Ruchir, thank you very much for joining us today on the show and taking our viewers to the F&O strategies. Just to recap that for you, Brijesh has got a buy call on Hindustan Aeronautics. The stock is up 3% as we see it, but can expect it to go up to 3,255. He's also got a buy call on Ipca Lab, so watch out for that one too. Ruchit has got a buy on L&T and a buy on Voltas. Both those counters are trading positive and firmly in green and are expected to move higher. Well, before we wrap up this edition, a bite is coming in from Vijaypat Singhania, who has stepped down as the Raymon Group's chairman in 2014. He denied any reconciliation with his estranged son, Gautam Singhania, who now heads the textile group. Listen into that clarification.
Since the media is asking, I'll try to clarify my position. On Wednesday, 20th March, while I was on my way to the airport, I received a call from Gautam Singhania's assistant, repeatedly trying to persuade me to come to JK House. When I refused, GHS came online himself and said he will take only 5 minutes of my time over a cup of coffee. I went most reluctantly, not realizing that it was for an ulterior motive of taking my photograph with GHS to send a wrong message to the media. A few minutes later, I came down and left for the airport. Soon after, I started receiving messages with my photo with GHS on the internet claiming Gautam and I had made up, which was totally false. Within a short time, it was all over the media. I don't know what his real motive was, but it was certainly not for coffee, nor to resolve our differences. The fact is, it is the first time in 10 years that I have ever entered JK House, and I don't think I'm going to ever enter it again.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Thanks for tuning in to the SMID Show. I'm Neeraj Shah. And a quick look at what the SMIDs are doing in the session today. We've established what the large caps are through the day, but bring up the mid cap and the small cap indices and let's just see what the uptick is or what the performance is for the mid cap and the small cap end. Well, about 0.45% higher. So it's from the start, which was flattish. I think the mid caps at least have done well. We should drop the list of the BSE 500 winners and losers and just show you the stocks which are doing well today versus the stocks which are not, because we know that life insurance, Indus Towers, etc. are the stocks which have done very well in the session today, and a few others haven't. So, well, Rail Vikas, for example, on an order win is also doing very well. Apar Industries has done very well for itself in the session today, so you're seeing that bit of traction. And retail has had a very good run today. Avenue Supermarts, we should pull up Avenue Supermarts individually as well to just show you the kind of moves that have happened in that stock in trade, because Avenue Supermarts or a D-Mart and a V-Mart have actually had a really good run. On the flip side, what is not done well? Tata Investment continues to grind lower, 5% down in the session today as well. And if you look at the 1 month chart for Tata Investment, you will see that after having a really strong uptick earlier, it's come off and fallen like 9 pins really. So there is a problem there. And today, amongst other stocks that are not doing well, I think somewhere you're seeing individual pockets in real estate succumbing to a little bit of selling pressure in trade. So that's the other bucket to be kept in mind. DLF flattish, of course, the large name, but the mid-sized names have certainly come off in trade. Now, Recently, and you would have seen on our channel as well, that there was a note that came in from Jefferies, brokerage house Jefferies, on March 19th, wherein they said that they initiated coverage on Keynes and Surma, and they are saying that the Indian EMS industry is estimated to post a 35% CAGR growth, led by China Plus One, lower labor costs, and focus on components that companies like Surma and Keynes are doing are going to give them a possibility of an EPS CAGR of 55 to 60% with ROC expansion. So we thought it best that let's get in the management to try and understand what is their game plan with regards to all of this. Mr. J.S. Gujral, MD of Surma SGS, joins us right now on the show. Mr. Gujral, thanks so much for joining in. Much appreciate you taking the time out. This is Neeraj here. Good morning.
Good morning.
When we've spoken in the past, you've kind of established this possibility of long-term growth rates. Back then, there was a slightly different Surma in that you are very gung-ho on the medical sector. ODM was a large portion of your business. Maybe it's coming off a little bit, but things have changed for Surma as well. So I would love to understand, at the beginning of FY25, we are 5 days away. So let's say from FY25 onwards, for the next 3 years, Mr. Gujral, what is the big picture for the space and for Surma SGS?
See, electronics manufacturing, as I have always been saying, has never had it so good because of the positive government policies, the global attention towards India as a manufacturing base. And we are very confident that this sector will grow. Coming to Surma SGS, we have our plans firmly in place to maintain this growth tempo. We have grown at about 50% for the last 3 years, which means the year ending in about 5 days from now. And we expect a 35-40% growth rate for several years from now on is distinctly possible. In the short run, this growth rate will be fueled by the domestic demand, indigenization, import substitution. And as companies like us, which are into the export sector, get integrated to the global supply chains, exports would constitute a significant portion of the growth story in the years to come. Exports have a longer gestation period. So I think we're uniquely placed that in the short run, we have the domestic demand, which will fuel the growth, and the companies which can integrate to the global supply chains will maintain that growth momentum going forward.
Got it. Mr. Gujral, just before I get to the nuts and bolts of what will drive growth for you, I'm trying to understand if this growth can happen at better profitability. Usually companies which want a higher rate of growth give up a little bit on margins because it's okay because growth makes up for it. There are some assumptions being made by analysts that in your case, this 35% or 40% growth that you're talking about for the next 3-4 years could actually happen with expansion of margins and expansion of return on capital. Would you throw some light on this?
Yeah. You see, in the EMS space, what we analyze and what I think analysts analyze is how the margins playing out in each vertical. And each vertical has its distinct margin profile. For example, a medical vertical has a higher margin profile than, say, automotive. So in the short run, once the composition of the pie, the revenue pie undergoes a change, there could be a variation in the margins only because of a change in the mix. So going forward, as the capex cycle pans out and the assets start sweating, assets reach optimum utilization, the operational efficiencies come in, and the ODM business, which currently has gone down in the last few quarters because of a very high trajectory of growth in the OEM sector. So as all these things pan out, we believe that we should be having a EBITDA margin of 7 to 7.5% in the coming year. and outlier being 8% in the coming years. Anything beyond that, we'll count the chickens when they're hatched.
Okay, fair call. Okay, so but when I look at the margin trend, it's actually come off, right, relative to what it used to be in the past. So are you saying, what would the current margins, let's say average margins at the end of FY24 be? And what do you anticipate this number to be? Would this be 7 to 8% at the end of FY26 or 27?
See, the margin profile has changed because of the change in the product mix. For FY24, which is just coming to an end in about 4 or 5 days, we believe that we should be there at about 7% EBITDA margins. 24-25, our first budget sort of calculations show us we should be anything between 7.5. Anything beyond that is an outlier if the product mix composition changes. But based on the plans which we have today, this is the margin profile. And this is the margin profile without accounting for PLI benefits. PLI benefits will account for when the money is in the bank. And that will be an uptick on the margin which I've just shared, which is 7 to 7.5% for the current year.
So could it be
24-25.
Got it. So could it entirely be possible that over a 3-year period, your revenue growth, as you mentioned, let's say we take it as 35% because that is what you said could happen over the medium term as well. But your EPS or PAT CAGR could be about 50 or 60% as well, based on the PLI benefits and the slight margin expansion you're talking about?
Let me put it conservatively, it should be at the lower end of what you have stated. I think we are conservative. And as the operational efficiencies kick in and my medical and the design development efforts also start bearing fruit, but that's a bit distant away. For the current year, which is 24-25, we maintain 7 to 7.5% without the PLI benefits.
And by virtue of all of this, maybe better working capital days as you become larger and have a better negotiating power, if you will, plus better margins, plus better business profile, you reckon return on capital as an indication or as an important ratio could inch higher as well?
It should. It should. And that's one of the sort of very critical metrics which we monitor. We believe that once we are growing and with the better negotiation power, better inventory management, our return on capital should go up. We internally target it should be around 25%. And I think we should be very mindful that when we are a 4,000, 5,000, whatever crore company, the profile of customers is different than you're a 1,000 crore company. So you have bigger customers on your board, and bigger customers have their challenges, but they have their positives also. That you do a higher volume of turnover with a limited number of SKUs. So hence the inventory turn, the asset turn, it all starts yielding results.
25% internal target over 3 years means that you would not inch up, you would gallop higher, Mr. Gujral. Estimates are that your ROCs could be circa 12% in FY24, and please correct me if I'm wrong.
This is 12% is because of certain goodwills internally created legacy of the company without a penny being paid.
Okay.
A lot of the IPO funds not being utilized and like they get into the capital. So if we were to take the operational assets, I'm very confident that currently if we were to sort of normalize over capital employed for these 1 or 2 aberrations, which are essentially the legacy of the old companies, we are sitting at about 18-19%, and from there on we should be able to cross the 22%, 23% mark in the years to come.
Okay, okay.
That's the benchmark we have set for ourselves.
Got it. Point well taken. The other aspect is capex. Now you have a new facility in Noida. Is coming up, which I'm not wrong. Your process is setting up a new facility in Bawal and Pune as well. Would these expansions essentially aid revenue growth in a structural basis over the next 3 years? And is there something else that is on the anvil? Because I see EMS companies come out with some fairly innovative product announcements as well as global tie-ups with customers pretty regularly.
See, we are now migrating from individual unit-based to campus-based development. So we are putting up a campus in Pune, where the first modular manufacturing facility will come up. And as the demand increases in the coming years, more and more such modular facilities will keep coming up at Pune. Then the small expansions are necessitated by the customers. I would love not to have them and do it all at one place, but then in electronics, you have to be near to the customer. So some of the expansions which you have mentioned are more directed towards existing customers and their growth to be funneled from the existing facilities only. So the expansion of the facilities in Noida and Bawal are the case in point. But for all major expansions, we'll be doing campus expansions. We are doing one in Pune. The first manufacturing facility should be ready by middle of this calendar year or financial year. And then we are putting up a new campus in South also, but that's a bit while away as of date.
Okay. One final thing, Mr. Gujral. Is there a risk to this story as things stand? And it's okay to not see, I mean, there are always risks to business, and there might not be too many high risks, but I'm just trying to understand because the growth numbers seem very strong, the internals seem strong, the opportunity size is large. What is the risk to this story?
See, I think the risk is more micro than macro.
Okay.
I'll be very honest. So I think the macro level situation looks good. But if something tomorrow was to happen at a global scale on which I have no control, I don't worry about that. What we believe, the risk is that when you are growing at a rate of 35-40% for 5, 6, 7 years, you need to have an organization. You need to have systems. You need to have procedures which can cater to that. Managing a 2,000 crore company and $1 billion company is a different animal. So I think the industry has to look inwards and start building systems at the back end to cater to this growth. I don't think growth per se will be a limiting factor. It is our ability to manage the growth, which could be a constraint or which could sour up the things if you're not able to have an organization to cater to that.
The $1 billion size was in reference to your ambitions, Mr. Gujral. If so, by when?
Yeah, let's see. We are growing at 40-45%. This year we'll be doing about 3,000 crores. Next year the plans are intact to be at about 4,500 odd crores. So if that trajectory, I think by calculations we can do whether it is 2 years or 3 years or whatever it is. But yes, the ambition is to be $1 billion company sooner than later.
Jai Mata Di, all the best for that. Mr. Gujral, thank you so much for taking the time out and speaking to us. Appreciate your time.
Pleasure, Neeraj. Thank you. And good.
Thank you to you too. Well, that's Sharma SGS. Pretty confident about growth targets, or pretty optimistic about the kind of internals as well, including margins and return ratios more importantly. Take a break. On the other side of the break, news and updates continue.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment.
Well, there's enough and more buzz within the auto space given the fact that the government has come out with a new EV policy to try and break down as to what the opportunities are in this space, to try and get more perspective on what the policy means for the sector in the longer term. We have with us a senior analyst from LKP Securities. We have Ashwin Patil with us to try and break some of these metrics down. Ashwin, talk to us about this development with regard to the EV policy. Is it a welcome step for Indian manufacturers across the board? I'll go into subsectors, but across the board, is it a welcome step, or do you believe that large competition from abroad will also come through and impact the sector?
See, I believe that the EV penetration in India on the PV side is just about 1%, and there is a large room for everybody to come and enjoy the pie. So, prima facie, I think that it will be slightly, competitive scenario for the domestic incumbent players like Tata Motors, Mahindra and Mahindra. For example, like Tata Motors is having a strong market share in the EV side, more than 70%, and that can get hit a bit. But surely they have the first mover advantage and they can take on the competition, very well. So maybe like a slight 5 to 10% kind of market share hit they may get. But definitely the EV policy that the government has come out with, it's a welcome step for everybody. From global point of view, I would say that companies like Tesla, etc., are very eager to come into India and set up their EV ecosystem over here. We recently saw that MG had a tie-up with JSW. So JSW have very ambitious plans in India to on the auto side. To expand on the EV ecosystem. They are doing a lot of backward integration, and they want to be in each and every aspect of the EV side. Similarly, other companies are also fancying their chances of entering into India on the global front. So, for the global players, I would say that definitely it's a big chance to enter into India. But for Indian players, slightly towards at the start of this phase, when the global players enter, it can be a bit competitive scenario. But as I said earlier, the EV space is very wide and large, so everybody can enjoy the EV proliferation that is expected in India, supported by this government's EV policy.
And Ashwin, with regard to just purely ticket size, do you think that the larger ticket size kind of companies will be more interested in or rather will find more benefits from this EV policy than the smaller ticket size companies, and therefore maybe to that extent Tata Motors is a little more insulated, because that's largely the view coming from a lot of analysts on the street.
Exactly, that's what I said earlier also, that Tata Motors may face some, slightly competition at the start, but since they are the first movers and first mover advantage is very big in this market. So the big companies like Tata Motors, Mahindra and Mahindra should get that benefit. But certain companies, smaller companies, may face the heat up to some extent. If they are also having certain ambitious plans, etc., then they are also welcome in this EV space in India, because, as I said, it's quite wide and large over here.
And before I throw this question, into a more open territory to try and ask you your views across the auto space, let me focus in on the policy itself. How would you play this policy? What is the best way to play it from an investor perspective?
See, from an investor perspective, I would say that, for OEMs, definitely it is a welcome step, but it is a bigger welcome step for the auto ancillaries, because companies like Tesla and all, they are, so huge and large that they are providing a very big opportunity for the auto ancillaries, like, like Sona BLW, which is having Tesla as one of their clients. So it will open a wide open door for them to get this opportunity, to grab this opportunity, I would say. And there are certain other companies also in the EV space, like Craftsman Automation is also there. They are having one stream of business which caters to the EV market. Also, there are certain other companies which are having their three different streams of revenues. Like, one is catering to the ICE segment, second is to the EV, and third is EV agnostic. So, such companies also will be benefiting out of that. So I would play the story on the auto ancillary side more than the auto OEM side, because auto OEMs will be facing competition, but at that time, auto expanding their business to a great extent, because the global players like Tesla, Ford, etc., entering into India on the EV front, I think that can zoom up their performance, the revenues of auto ancillaries, up to a great extent in the following years.
Understood. And Ashwin, just purely with regard to the kind of runway this has and the kind of appetite of the Indian consumer, so we've seen that at least at the top end of the income bracket, we've seen very good traction when it comes to EV. Do you think that that can percolate to the bottom end? Of course, two-wheelers as well as two-wheelers are doing very, very well. So that your thoughts around that, on sustaining that kind of growth for two-wheelers as well as for four-wheelers, if you can give us that perspective.
See, from EV point of view, if you say that two-wheelers like scooters are very fast and rapidly getting electrified. On the passenger vehicle side, I would say that still there is a EV wave yet to come, and LCVs are getting electrified also along with scooters. And the third segment, I would say, is the buses segment, which is getting into the EV segment at a very good pace. So these three segments, whichever companies are into that, they will be facing a lot of benefit. So out of the OEMs, I would say that Bajaj Auto, TVS Motors, those are the two companies on the two-wheeler side which are having a good presence on the EVs, and they are expanding also very well. Then on the passenger vehicle side, Mahindra and Tata Motors, also Ashok Leyland on the buses side, and the LCV side, I think they are also getting a lot of benefit, and they should get benefit out of this EV policy and the widespread or the penetration increase on the EV side for the passenger vehicle front. So I think these companies should get more benefit than others.
And the traction will sustain, the demand will sustain now on a higher base?
See, I think that the demand is definitely going to be there. So higher base is still, I mean, last year's base was definitely higher. We know that because the IC segment has been performing well. But if you add EV's performance going forward, in the coming few years, I think the performance of these auto companies is going to be very good. Though we all know that EVs, the margins on the margins front, EV business is not, very lucrative. But going forward, as the volumes increase and battery prices, the batteries become affordable, etc. So and the whole infrastructure on the EV side expands very well in India. I think the volumes, the operating leverage should come into the picture, and that should sustain the margin performance also going forward. So for automobiles, I think that maybe like FY24 can be slightly on the slower side because of the higher base. On FY25, I'm saying would be higher on the higher base of FY23 and 24. We may see some sort of slightly subdued kind of growth. But going forward, FY26 onwards, we think that the auto segment will be having a very good time.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew. This is Ask Profit. This is a show that gets you all of the answers that you're looking for if you're wondering about stocks that you'd like to invest in or stocks that you are currently investing in and whether you'd like to hold on to them or not. Now, before we get into all of the questions that you have sent us, and by the way, you can send those questions to us on the WhatsApp number that is on your screen right now, or in fact on any one of our social media platforms. Let's take a check of where the markets are right now. And you have the Nifty 50, which is trading above the 22,000 mark, but not doing very much in trade. In fact, it's down about 0.2% or thereabouts. And you have a few contributors to both sides. In fact, you have the key contributors on the upside, Bajaj Finance doing quite well for itself in trade today. Contributing about 9 points or thereabouts, 9.5 points to the gains. And you have L&T, Bajaj Finserv also doing quite well. Among the losers, you have Bharti Airtel and Infosys, as well as ICICI Bank and Reliance Industries and HDFC Bank, which are contributing to most of the losses there. So the heaviest stocks on the benchmark that are losing ground. From the broader end, let's take a look at the broader indices also and see where they're trading. In fact, this is positive because you have the mid cap index that's gaining about 0.6%, and you have the small cap index is just about flat at this juncture, recovered from the low point of the day quite substantially at that. And we are going to be focusing on a relatively smaller counter in the focus today, but let me take you through a few key movers. The entire life insurance pack is doing quite well today because there is clarity, if you can call it that, from the regulatory perspective on the surrender value. That was a bit of an overhang. SBI Life is the only one that's down, and we'll come to that if time permits, but HDFC Life up. You have Max Financial, which is up quite substantially in trade today. You have Uno Minda, which arguably is one of the stocks of the day on account of a significant deal that it has gone into. It's up about 2% or thereabouts, but we're going to be focusing on Interglobe Aviation. I'll tell you why in just a bit, but let me introduce our guests for the day before we get to that. We've got Gaurang Shah of Geojit Financial Services joining in, and we've also got Rajesh Palvia, who's SVP Tech and Derivative Research at Axis Securities. Thank you so much, gentlemen, for taking the time, and always a pleasure having you on the show. I want to focus on Interglobe Aviation because there are a few reports that are out today, brokerage reports, and apparently there was a conversation with the management. The stock is currently at the high point of the day, and it is in fact trading at an all-time high. There is reason to be positive on this particular company because it is adding capacity at a very frenetic pace. In fact, Morgan Stanley has pointed to an overweight rating at 4,145 target, which is quite a significant upside from this point as well. It's pointing to the fact that the company is likely to add 1 aircraft per week over the course of 2024. And remember, this is a company that already controls about a third of domestic passenger traffic. So it is a significant addition in a space that is going to see heated competition over the course of the coming years as well. Gaurang, I'll come to you. Of course, there's a lot more than just the capacity addition that is going to be spoken about. But what is your view on a company that is currently trading at all-time highs? Should it be gotten into at this juncture?
Thank you, Alex, and morning to all of you all. So first, a disclosure, we had coverage on Interglobe Aviation during the IPO, and post that on significant quarter-on-quarter, half-yearly and yearly numbers. We were very impressed. We've come out with a standalone buy recommendation, and currently as our recommendation stands, the target price after seeing the third quarter numbers was revised upwards to about 36 to 3,700. Very soon we'll see curtain raiser for fourth quarter, possibly first, second week of April. Aircraft addition has led to a lot of positivity in terms of getting larger market share. And of course, with the kind of initiative that the government has unfolded with respect to Udan 1 and Udan 2, and the number of airports that are going to come up in the next 2, 3, 4, 5 years, I think there's going to be a tremendous amount of capability and capacity that would be needed from the airlines to be in place to capture that market share. The only overhang, Alex, if any, is the issues with the Pleth and Whitney engines and the number of aircrafts which are grounded because of the issues with that Pleth and Whitney engines. If that backlog gets cleared off, I think you will have much more positivity on the stock.
All right, and the stock is in fact gaining even as we speak. So let me very quickly ask Rajesh what the view is on the technicals, because seemingly on the fundamentals it's looking good. What are the levels to watch, Rajesh, if you want to take entry, and should you wait for a little bit or should you get in at these levels?
Morning, Alex. So stock is clearly in uptrend. Stock is enjoying its all-time high trajectory. Looking at the overall structure, we believe that one can even buy at the current market price also, as a very strong buying action taking place. This is the third consecutive week where stock is making higher high-low formation. That clearly shows sustained buying action even at all-time high level. So whatever minor dips we are getting in the stock is again, buyer interest is already there in the stock price. So we believe that, this momentum can extend further, and possibly we can see a target towards 3,600, 3,650 on a higher side on a short-term basis. So buy on dips is the strategy. One can buy and accumulate this stock if you get any opportunity. Keep your stop loss at around 3,360 to buy and accumulate the stock for upside target of 3,600 to 3,650.
Heading very quickly higher. It's now very close to 4% higher. But it's time to jump into the queries. And as I pointed out, that number on your screen is where you can send all your questions to us, and we'll take them to both our fundamental and technical experts. A few of you have already written in, and the first one we'll take. The first question is from Raj. Raj is asking about Tata Technologies, which he has bought at levels of 1,200. He's got 75 shares. So Gaurang, since it's a recent listing, I'm coming to you on the fundamentals. It's given up a little bit of ground, and he's asking whether he can hold or should he average on the dips for the long term, and he's looking at least 3 to 4 years.
So Alex, the floor was 500, and that's the floor where the IPO recommendation from our side in terms of IPO note was given out to long-term investors to subscribe for the IPO in Tata Tech. From the 400, from the floor of 500, the stock made high of about 1400. And from that time onwards, a downward mode and a very long period of consolidation between that 1000 and 1100 mark. Based on that IPO note from a long-term point of view, since he got in at about 1200 rupees and the stock is trading very close to that 1030 zone, which is kind of making a base, if you will, very positive as far as the business outlook is concerned. So if he's in for about 3 years or more, I think he should possibly add on to the stock. At current levels, you can add some, not completely, but closer to 1000, or if it slips below that, which I have a doubt, he can possibly add more over there. But stay invested and hold on, and average would be the recommendation.
Okay, it's not too far away from that 1000 mark, just about 25 rupees or thereabouts. IRFC is up and about in trade today. In fact, we couldn't take this question on Friday, and I promised that I would take it today. Rajendra is tuned in. Rajendra is asking about whether or not he can invest at this current level. It's up over 5%. Rajesh, what's the view on the charts?
So after a significant corrective move, now stock is showing again, buying interest. Overall long-term structure is bullish, and looking at the recovery since last couple of trading session, we believe that, if its stocks now continues to hold above 142 level, then possible pullback can extend further, and we can see target towards 158 to 165 for the stock in the short-term basis. But those who wish to hold it for long-term perspective, I think they can hold on, as overall structure is bullish, and we believe that this stock has potential to again move back to all-time high trajectory, and possibly we can see 190 to 200 kind of target also on a positional basis. So long-term view is bullish. For short-term, keep stop loss of 142. Target is 165.
Understood. We've got a question on Sigachi Industries, and let's try and pull up that chart. Monica Sharma is asking this question. She has bought at levels of 80, and the share is currently trading at just about 60 or very close to that mark. It is a pharmaceutical company, and the question is whether she should hold on, should she average right now, should she sell at a loss? Any fundamental coverage on this, Gaurang? And if not, is there an alternative that you can suggest in the space?
Well, honestly, Alex, I have no clue about this company on the fundamental side. So without referring to this particular company, in case if Monica wants to, and I would advise her one thing, that if you bought in at 80 and if the stock is trading at about 58, 90, I don't know with what time horizon she had bought it. I think everyone should be a little bit aware about protecting the capital also, because if you let your capital get damaged to this extent, then first of all, the recovery of the capital becomes difficult, Alex, and then you have to wait for profit once your capital gets recovered. Having said that, again, no specific comments on Sigachi, but if I have to pick pharmaceutical, maybe mid-cap, small-cap names, Granules India would be one. Other than that, we like names like Aurobindo Pharma. We like names like Zydus Wellness, Zydus Life are the other recommendation other than the large cap stocks. And once again, go with quality names. Don't go by someone's recommendation or just because the stock is trading at double digit or single digit.
Let me try and get a technical view as well. Just while we're talking about Sigachi, quite a bit of erosion, as Gaurang has already pointed out, Rajesh, on capital. What advice on the technicals would you suggest?
So we have seen a significant corrective move in the stock in last couple of weeks. Stock corrected from 95 level and now it's trading around 60 level. Looking at near-term, short-term structure is weak, and if stocks breaks below 55 level, then possible down move can extend, and we may see further lower level also towards 45 also. So at this moment, if you are still holding the position, I think they should now follow the stop loss because 55 is the important level at this moment. If at all stocks hold this level, some pullback action we can see towards 65. That is again, a supply zone for the stock. So our advice would be to try to exit in the stock in the pullback. 65 and 70 are the immediate supply zone. If you get opportunity around those levels, try to exit and or trim down your position.
Okay, which would in a sense be selling at a loss, but at least hopefully you will reduce the amount of loss that you are taking. The next question is on IDFC First Bank. Let's pull up the stock and see where it's currently trading. It was bought at 89 rupees by Karthik, who's writing in from Karnataka. And it's not very far from that mark. In fact, let's pull up the slightly longer term charts to see what it has done. Not too much is happening in the banking space, and if anything, everybody is waiting for something to give, Gaurang. We still got a lot of potential that will likely play out over the course of several years. But for a stock that has gained about 45% or thereabouts, and if you've gotten at slightly elevated levels, should you, if you are still holding on to the same fundamental view, should you average at these levels?
This one is a tricky one for me to answer straight away, Alex. We started covering the stock at around about 35, 40 odd levels. Then, of course, on fallback of earnings improvement and some of the big bad names turning good in terms of NPA going bad and then recovery process coming through. Numbers improving, we constantly raise our targets. The recent targets that we had was about 95 rupees. The stock crossed just over about 100 rupees. 100 rupees 70 paise was the all-time high, correct me if I'm wrong. And at that level around, we came out with the sell recommendation. And as I speak to you, Alex, the coverage on IDFC First Bank is under review. From targets achieved, we had a sell recommendation, and that sell recommendation is under review. So I won't comment specific, but it's got a strong balance sheet. Let's hope that the earnings are going to continue to improve going forward from here on in terms of gross and net NPA coming down, margins improving. But I can't give a straight out recommendation because our coverage is under review right now.
Okay, fair point. Very quick view on the charts then. Rajesh, what should one do if you've gotten at 89 levels, if I'm not mistaken?
So if we can hold on for long-term perspective, I think again stock may cross those buying level. But for near-term perspective, some pressure is visible on the near-term chart, and stock is now trading below to 20-day, 50-day moving average. This is the third consecutive month where stock is facing some sustained supply pressure. But if we look at the long-term structure, stock is now trading near to its important support area of 75. That is important to watch for in this corrective move. If at all stocks hold above 75, then some pullback action we can see, and then stock may gradually start recovering. But for near-term perspective, there would be some pressure. But for long-term, yes, he may get his rates again, but he has to wait for another 6 month to 1 year time frame to make this investment profitable. Possibly on the longer term time frame, 120 could be the target.
Okay, which is a considerable upside. We have to slip into a very quick break. Gaurang, Rajesh, do stay with us, and viewers, we'll be back before you know it. Do stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Welcome back. You're watching Ask Profit. This is where we get all of your stock-related questions answered. And I would like to think that we cater to a wide gamut of investors, those that are just cutting their teeth and those that have been investing for some time. We've got a beginner, and he calls himself that, Vinayak Kulkarni, who's writing in, and he's saying that he would like to invest in a few stocks to begin with. He's asking what the minimum investment is. Of course, that is something that you'll have to decide for yourself, Vinayak, and usually this is something to decide in consultation with an advisor. But then broadly, this depends on your risk-taking appetite. You form a portion of your portfolio into equity. Now, assuming that you want to buy individual stocks, Gaurang, not spending too much time on this, but 5 stocks at this market with Nifty 50 at 22,000 or thereabouts that he can buy for the next 10, 15, 20 years.
So I'll advise Vinayak to do a SIP, but please go and open an account with a SEBI registered renowned broker.
Yeah.
Because today's world, you have a lot of unsolicited, unregistered international universities like WhatsApp and Google and YouTube. Having said that, Vinayak, I think stick to the basics. Don't try to do something which is adventurous. Don't try to be Robin Hood. And first of all, have high risk appetite in case if you are planning to invest in equity market. So the 5 names, Alex, would be L&T, Reliance, HDFC Bank, M&M, and TCS. I think how much you can buy one share also, Vinayak. I mean, it depends upon your capability and capacity and what kind of time horizon you have. But stick to the basics. Buy quality, don't buy quantity.
Fantastic. All right. And you can continue to buy on an ongoing basis whenever you have the opportunity to. We've got the next question coming from V.S. Mohan. He's writing in from Talcher and he's asking about Bajaj Finance. And it's at quite a run today. In fact, he's bought at slightly elevated levels. It's trading, if I'm not mistaken, very close to 6,900 right now. And it's up about 2%. It's a top gainer on the Nifty 50. He's bought at 7,200, which is slightly elevated levels. What can he expect in the near to medium term? Rajesh, on the charts, how does it look?
So stock is showing recovery. Though stock was in corrective move and stock has formed a base at around 6,500 level, and this is the second consecutive week where we are seeing recovery trend is taking place in Bajaj Finance. Looking at the near-term, short-term structure, yes, stock has potential to continue furthermore upside from the current level also. So I think he should hold the position, and possible immediate target where stock can move is 7,050 to 7,100 kind of zone. As stock has already given breakout on the near-term consolidation, so I think he can hold on the position as recovery is taking place. I think he may get again back to his rates also, And if it's a hold above 7150 level for some more couple of weeks, then possible next target on the higher side we can see towards 7400 also. But at this moment, your stop loss should be at around 6800 to hold the long position.
Okay. Gaurang, do you have a view on Ashoka Buildcon? We've got a question coming in from, I'm trying to figure out who's asked this, but Arpit is asking about Ashoka Buildcon, bought significant quantity, 10,000 shares, bought at levels of 110. The stock is currently at 161. He's asking, should he hold on? He's got a view for the next 2 to 3 years. Gaurang?
Well, Alex, I don't know with what objective he bought 10,000 shares. And I pray to Lord Almighty that this is not the only investment. And we always tell investors, Alex, not to focus on one particular sector or one particular stock. It increases your risk in case if there is something negative. Having said that, we maintain a positive stance on Ashoka Buildcon. But like I mentioned, I hope this is not the only investment. He's got diversified investment. In case if this is the only investment, you need to rethink on your investment strategy.
Okay, quick view on the charts then, since he's made quite a bit of money in this. Ashoka Buildcon, should he hold on, Rajesh, or should he book some profits?
I think Ashoka Buildcon right now is trading near to its important multiple support area of 160. That is important level to watch for. If it's hold this level, I think he may exit around 175 to 180. That is the pullback area where we can again see stock in near term to short term. So at this moment, I think trailing stop loss should be at around 158 and hold the position. If you get chance around 175, try to book some profits around those levels.
Okay. BSE and CDSL, both capital market related stocks. Sri Kishore Sharma from Bihar is writing about this. He's bought, I think, September 2022 is when he bought these two. Gaurang, should he add more is a question to get more benefit is what he's pointing out, because I think he's made quite a bit of money, at least in BSE.
So CDSL and BSE, Alex, I won't comment directly, but let me give you an industry perspective. So all those entities which are associated with the Indian stock market, now whether they are platform providers, whether they are services providers, or whether they are depository services providers. Look, if you expect the Indian equity markets to give you a 12 to 15% return over the next maybe about 5 years or more, then all these companies which are associated, whether they are exchange related, whether they are depository services related, or whether they are brokerage related. I am not giving any specific names because we don't have coverage on these two. But these companies will also do well because the volumes are going to increase, the number of investors are going to increase, and we've seen record number of new account getting opened over the last 3 to 6 months. So it's a strong sector. You should look at credible companies over there.
Restaurant Brands Asia, the next counter, Satya has got this question. He's looking to buy for the next 1 to 2 years. On the charts, how does it look, Rajesh?
So stock is in corrective move. Looking at the near-term, short-term structure, there is a supply pressure on the stock prices. Looking at the longer-term time frame, the major support area at this moment is placed at around 95, 96 zone. So as he wants to hold it for 1 year to 2 year time frame, the stop loss should be placed at around 95. If it's hold those levels, some pullback action we can see. 120 is the major hurdle for the stock. If the stock crosses those level on a monthly closing basis, the next target on the high side we can see towards 145 to 160 also. But at this moment, if you are holding the position, keep your stop loss at 95.
Okay. A quick follow-up to you on Geo Financial Services, and this is from Suresh Suri. Should he buy at this level? Let's pull up the year-to-date chart in 2024 itself, and the stock has gone higher, quite substantially higher. Should he buy at this level?
Yeah, definitely he can buy, as overall structure is looking bullish, whatever data we have till now. So looking at the near-term, short-term structure, also stock is consolidating since last 4-5 weeks, and looking at the overall structure, we believe that once a stock crosses over 355, 360 zone, then possible target on the higher side we can see towards 390 to 410 kind of zone on the higher side. At this moment, yes, buy. You can buy at current market price also. Keep your stop loss at around 330.
330. Okay, this is a question that I think Animesh Gautam from Gurgaon is also asking, and hopefully it has gotten answered. MRPL, a very quick view, bought at levels of 203. This is Rajkumar's question. Should he hold on, Rajesh?
Yeah, I think he can hold the position. As stock is now on a verge of giving breakout on the daily chart on a falling trend line. I think if stocks manages to cross about 227, then possible really can extend towards 240, 45 also. At this moment, yes, hold the position with the trailing stop loss of 215.
Okay. All right. Unfortunately, we're completely out of time. We could go on. There are several questions that are already still filtering in. But Gaurang as well as Rajesh, thank you so much for joining in, for answering all the questions that you did. Viewers, well, we couldn't answer all of your questions, but we did try. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy one.
Benchmarks continue to trade in the red amid weak signals from global peers. Nifty tests 22,000 mark. Meanwhile, broader markets recoup the morning losses. Indigo flies high in trade after getting a big thumbs up from brokerages. The houses see strong capacity and passenger growth in the coming years. And it's an NDTV exclusive. Sources tell our channel that Tata Sons is looking to monetize assets for the first time. More stake sales could be on the horizon. And London's Science Museum unveils Adani Group-sponsored gallery. The museum shows how humans have a role to play in deciding our energy future, group says. Gautam Adani. Welcome, this is Hard Money. I am Magam Vakil, and in this show we will take you through all the stocks which are buzzing in trade, as well as those which have been in the flavor of the past few weeks. But at the moment, we're taking a look at the markets which are currently trending marginally in the red, and the sideways movement continues for the Nifty. Even though this is a truncated week, the expectation is consolidation, and that is exactly what we have seen so far. The Nifty hanging on to the 22,000 mark, the Sensex as well, just marginally in the red at the moment, down by around 0.3%. The Bank Nifty, of course, will be in focus, not necessarily because of the index itself, but a lot of banking names, and that will have an impact on the Fin Nifty, because it is, of course, the Fin Nifty expiry, the final Fin Nifty expiry of this calendar year. It's something that we are going to keep an eye on. For now, it does seem like consolidation continues for this one as well. The question really is, where do we end? And let's take a look at the constituents of the Nifty to see whether or not there has been a big plug change. And so, all in all, largely, we are looking at HDFC Bank and ICICI Bank weighing on the indices. Reliance Industries along with Infi as well contributing to that decline. And as far as your gainers are concerned, those which are providing some amount of support to the Nifties, Bajaj Finance, L&T, NTPC and Bajaj Finserv. Let's take a look at the broader markets too. And overall, there is a little bit of an outperformance in broader markets once again, with a 0.7% advance for the mid-cap index, and the small-cap index is marginally in the green. So not too much to speak for when it comes to the small-cap indexes. A lot of activity perhaps towards gains in the mid-cap index. And speaking of mid-caps as well, let's take a look at where we are seeing more traction. So in terms of gainers, we have IRFC, which has resumed its uptrend, and IRFC is now up 5.2%. That's followed by Oil India, also up around 5.1% as we speak. And besides that, keeping an eye on something like Max Financial, also advancing by as much as 5%. And Torrent Power is the other one which is gaining a lot of traction of late, up around 4%. On the losing end, some amount of weakness in delivery, that's down 3%. Trident is also under pressure, that's down around 2.2%. And we have, consolidation largely for something like Trent, which is also down around 2.2%, rather 1.8%, pardon me. So on the whole, we're not seeing too much traction on the losing end. A lot more coming through the buying side, specifically in the broader markets, and it's something that we will continue to give you an update on. But in today's show, what are we talking about? Well, we are certainly going to be discussing Interglobe Aviation. We're going to be talking about a whole host of other counters as well. So Indus Tower and of course the Tata Group companies. We're also going to take up the insurance sector as well. And we're going to take this up with Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities, who's joining us on the show. Sunny, good afternoon. Thank you so much for joining in. Sunny, before I come to you, let me get in Mahima to tell us a little more about the latest update on Interglobe Aviation, who in fact had an analyst meet, and there were several takeaways from here. Let's see what Mahima has to bring us. Mahima.
Interglobe Aviation is one stock, as you rightly mentioned. The brokerages are really bullish on this particular stock. I'll start with Citi. Citi maintains a buy with a target price of 3,700. They've said that the supply growth and the demand acceleration are likely to double the Indian aviation passengers by FY30. They're saying that the addition of A321 XLRs will expand the service radius and aid further passenger growth. They expect some increase in salary expense from the regulatory changes. However, this will be passed on to the passengers. Key key risks include higher ATF and crude because of rising crude prices and higher cost pressures because of depreciating INR. Morgan Stanley has also rated it overweight with a target price of 4145, which is an upside of 25%. The company will add 1 new aircraft per week in 2024 is what they believe. The management aims for a double-digit growth capacity by FY25, which is much more than the brokerage's estimate of 6%, and Indigo will launch airline for New Jewar Airport in Delhi. We also had MK, where MK has maintained ad with a target price of 3,500. The fleet addition continued with 8 planes between Jan to Feb, and at present the total airline stand at 366. The aircraft on ground to peak in the next 1 to 1.5 years is what they believe, and new airports like Noida and Navi Mumbai will aid the volume growth in the next FY25 to 26, where Motilal Oswal has also maintained neutral with a target price of 3510 on Interglobe. They believe that firm is working on increasing its international presence by entering into strategic partnerships. The competition in international markets is intensified. However, the Indian aviation market will grow with rising airport infra, aircraft capacity additions, etc. And India can become the third largest aviation market by 2035. So this is the overall view of all the brokerages who have maintained bullish stance on Interglobe Aviation.
Right, Beima, thank you for getting us those updates on Interglobe Aviation. Sunny, good afternoon and welcome to the show. What's your take on Interglobe Aviation? Are you also positive about the prospects of the stock going ahead?
Yeah, good afternoon and thanks for having me on the show. Definitely, I think it's a golden period as far as the aviation sector is concerned. So we are seeing a uptick in passenger traffic growth on a month-on-month basis. And that is the reason we have seen a buoyancy in the stock price of Interglobe Aviation. Also, company has close to more than 60% market share. So out of every 10 planes, 6 planes are being applied by Interglobe Aviation. But what I feel is that with the recent uptick in crude oil prices hovering close to $85, $86 to the barrel, I think post the recent run-up, I would like to take a step back and wait for the stock to cool off a bit and then re-enter for a medium to long-term investment horizon. At the current juncture, I would like to maintain a neutral stance. Maybe buy on dip is the right strategy to ride this aviation sector through Indigo or Interglobe Aviation.
Okay. Well, we move on to the oil and gas space, and we understand that the LNG spot prices have hit a 3-year low. What can be the implications here? We have Mihika now who's joining us to help us better understand the impact. Mihika.
Yes, so we have stocks like GAIL India, Gujarat State Petronet, Torrent Power and Indian Oil all up 2 to 5% in trade today. And this is mainly on the back of LNG prices that have hit a 3-year low. Now these are LNG spot prices which are trading around $8.3 to $9 per million metric British thermal unit. Prices are down 56% year on year and 87% since their record high during the Russia-Ukraine war. Now why the prices are falling? One is the weakness in demand across Asia and Europe as unexpectedly warm winters have lowered the demand for natural gas for heating purposes, and this has led to high inventory in Asia and Europe while there is a significant and continuous growth in LNG production. Now when you talk about the impact on the companies, the lower prices allow companies to expand their sourcing and also increase their sales to the power, fertilizer and refining sectors. There have been newspaper reports that are suggesting that companies like GAIL India, Gujarat State Petroleum and Indian Oil are buying the spot LNG cargoes at the lower prices, and the cheaper sources could impact the margins positively, and they could also pass some of the benefits to the consumers.
Right. Thank you so much, Mihika, for getting us that update. Sunny, what is your take on the latest when it comes to LNG prices moving lower?
I think the lower gas prices, obviously, I would like to ride this story through building material companies. So companies like Kajaria, Ceramic or Somani, these are the few companies ultimately who will benefit out of that. Because the gas companies are the companies which source locally and then probably with marginal markup, they downsell it to all these gas consuming companies. So whether it is building material company or for that matter, fertilizer company, these are the few beneficiaries or the gas fired power plant. So these are a few companies ultimately that will benefit out of that. And again, I would like to bet my money on Kajaria Ceramic at the current juncture.
Okay, that's an interesting take. It is the building products, which is another way by which you can in fact play the decline in your LNG prices. But we move on to the next stock that we have on our radar, and that's Uno Minda. And the latest to make yet another move in the EV space. So we understand that it's actually entered into a technical license agreement with StarCharge Energy, and the agreement is to manufacture and sell EV equipment in India. Further, this builds up the AV-specific product portfolio for the passenger vehicle segment for Uno Minda. And based on that, and because of that, we have Jefferies, who's maintained a buy with a price target of 820 odd rupees per share. Of course, it's currently trading at 662 rupees per share. So if we are looking at an upside from current market levels. This naturally bodes well for the sentiment for not just the stock, but the sector as a whole as well. But Sunny, do you track Uno Minda? What's your take on this one?
Yeah, we continue to remain bullish on auto ancillary as a pack, and Uno Minda again leading from the front in terms of technology type and the product portfolio. I think the recent type will definitely augur well for the company from a long-term perspective. However, it will take some time to make a significant dent on earnings. So we continue to remain bullish on Uno Minda, and the stock can be added in a long-term portfolio.
Okay, positive on Uno Minda. And on that note, we slip into a short break, but don't go anywhere. On the other side, we get you a lot more in terms of stocks. Stay tuned in.
Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment.
Welcome back to Hot Money. We shift focus to the insurance sector and the latest updates. The Insurance Regulatory and Development Authority has changes its special surrender value computation. We have Mona Sangvi who's joining us to make us understand the implications here. Mona, good afternoon. What do you have for us?
Hi. Yes, so it's a positive for life insurance companies. Let's begin with that. They've barely quite changed the regulations from what is currently in force. So if we were to look at the surrender value that is currently computed for single premium policies, which is a lump sum policy. It's around 75% and 90% for within 3 years and 90% for the total. For non-single premium, that is when you pay premium for every year, you cumulatively add, depending on the number of years, you get a percentage value, as we can see. Now, this is quite a positive because overall policy holders will not have an issue when they have to return the policies, and Emkay Global believes that for persistent policy holders who hold the policy until the end of the maturity, it will not reduce their returns, which was what was proposed in the December draft. Also, it will not impact the value of new business margins for life insurance companies. So overall a positive for insurance companies, a slight negative for policy holders who were planning to give back their policy before the end of maturity period, because the December draft was quite positive. But however, overall a positive.
Sure, Mona, thank you for getting us those updates and making us understand how things can perhaps be implied to life insurance companies. But Sunny, what is your take on the latest that we have from IRDAI in terms of changes towards surrendering, and how would you take this forward?
Yeah, definitely a big breather to the insurance company. So there was an expectation that the surrender value can be far higher earlier, and now I think the changes have been in line with expectation. I think it's a win-win situation for basically all the life insurance companies. And again, here I would like to bet my money on two companies if I have to pick from a life insurance sector. One is HDFC Life, and second is LIC India Life Insurance of Corporation.
Okay, and well, that's your view on the life insurance sector, and Sunny is positive on HDFC Life as well as LIC, two of the biggest life insurers out there in India right now. But let's move on and talk about Indus Tower then. And this one is in focus because we have another broking note this morning where they have a buy with a price target of around 320 rupees per share. It's a good target, of course, is a good, well, about 45 rupees higher from current market levels. They are of the opinion that there could be an upside from here onwards. That is, Citi believes that ADC debenture conversion to equity would mean lesser cash outgo for Vodafone Idea in FY25, and that has a positive implication on Indus Tower. And they expect to generate about $40 billion that in free cash flows by FY25. That is the expectation. And the target could potentially eventually rise to as high as 380 to 400 rupees per share as well for Indus Tower. So again, it does seem like at least Citi is constructive on Indus Tower. But Sunny, are you as well? How are you seeing this one?
Yeah, definitely a cash generating machine. Only trouble was the funding for Vodafone, which is one of the big clients. And there was a big dues which Indus Tower need to recover from the Vodafone. And as the funding for Vodafone is getting in place, I feel the re-rating of Indus Tower is imminent. And I think, again, we are also bullish on the company with a price target of 350 plus. In case the Vodafone funding issue is resolved ASAP, I think we will very soon see levels of 350 on Indus Tower.
Okay. And well, on to the next big story that we have, and this is of course an NDTV Profit exclusive, where we understand that the sources have well told your channel that Tata Sons is looking to monetize assets for the first time. We have my colleague Sajit Mangat who's joining us to give us more on this one. Sajit, what are you gathering from your sources here?
Tata Sons, which is the holding company for the entire Tata Group, is now pivoting itself into monetization of assets within the group. Remember that Tata Sons hasn't been looking at monetization for a long time, and now there is a policy change which is coming up in Tata Sons, which looks at raising funds using monetization of current assets, which could be listed or unlisted. In case if they're unlisted, it's going to be through listing and getting strategic investors. years. But this is a monetization which is very significant for the group, because in the recent times, in the last 2 to 3 years, Tata Sons have moved from traditional businesses to new age businesses, which include semiconductor fabrications, lithium-ion batteries, or green energy, and all these are huge investment businesses, and Tata is looking to raise funds. Tata Sons is looking to raise funds to support these businesses in the incubation period there. If you look at some of the kind of monetization that has happened so far, the recent TCS sale of 0.65% stake, where Tata Sons raised nearly 9,300 odd crores, was part of this change in strategy, and where they are looking at monetization. So it doesn't mean that Tata TCS will be further monetized, but there are many more assets within the group which can be monetized going forward, which includes listing of some of the companies like a Tata Play, which has already filed a confidential filing with SEBI. There are financial services businesses which includes Tata Capital. There is insurance company like Tata AI and Tata AIG. In the infra space, you have Tata Realty, Tata Housing, and Tata Projects. These are all big businesses with good revenue potential and profitability. Apart from that, Tata have already invested more than 18,000 odd crores in the digital businesses, which includes Tata Click, Tata 1MG, Big Basket, Chroma. So these are some of the big businesses which it holds in its as investments in its books, and it will look to monetize many of them in the next couple of years as it looks to incubate many of the new businesses.
All right. Well, so there you have it. Sunny, the real question out here is that what do you do with Tata Group companies? My first question around this particular subject is, do you have any preferences in Tata Group companies? Where do you actually pitch that there is in fact a potential, notwithstanding the current restructuring that the group is carrying out? What's the way forward here? Anything that you like, anything that you potentially want to avoid at this point?
Yeah, so again, my topic among the Tata Group will be Tata Motors to ride on basically entire passenger vehicle and commercial vehicle segment. So we all know that all these cylinders are firing simultaneously for the Tata Motors. So Tata Motors is one of our topic. On food and beverages side, Tata Consumer, again, Tata Consumer is one of the company where we feel that there is a long runway as far as growth is concerned. And at the same time, with the monetization of Big Basket, in case it goes through, definitely I feel that Tata Consumer will also be one of the beneficiary of that.
Okay. Sunny, just a very quick question on the electronic manufacturing services space as well. We're getting diverse movements from across, of course, companies like Dixon Technologies and Amber on one side, which actually are very consumer oriented. And on the other side, you have something like a Keynes Technology or a Surma SGX, which is also a little more inclined to the needs of industrial and medical. Of course, that's not to say that they do not cater to the consumer side of things. But as things stand right now, do you have any preferences in this particular sector? I do understand that the prospects of the sector are positive, considering the government target, of course, is the production from EMS is about $300 billion by FY26 as compared to about $100 billion in FY23. But going ahead, how are you viewing the sector and what are your top preferences here?
Again, we continue to remain bullish on this entire EMS as a sector because there's long runway in terms of growth. And again, here we have got a coverage on Surma SGS. So we all know that since last 2 quarters, the margins of the company are under pressure, and that is purely due to the change in product mix in favor of consumer segment, which is a high volume, low margin kind of segment. But if somebody looks at the order book, it's a very pretty robust order book, close to 4,700, 4,800 crore order book. And majority of that will be executed over the period of next 4 quarters. So I think during the next 4 quarters, we may see a very robust execution of order book. At the same time, as the product mix shift away from consumer post this execution of order book, we may again see margin going back from current 5 to 6% to 8 to 9% band. And again, so it's a good opportunity to add the business in the portfolio with a price target of close to 600 rupees over the period of next 12 to 18 months.
Interestingly, we have spoken to Surma SGX today itself, so don't forget to log into that particular conversation where the management has in fact said that they are looking at a very conservative growth number in terms of revenues of around 35 to 40% on the top line, and they also expect to maintain margins of 7 to 7.5% moving into FY25. You can certainly track that conversation on our website as well. But on that note, going to take a moment to thank Sunny for joining us and taking us through his views on the several stocks and themes that we wanted to talk about today. And with that, it's also a wrap on this edition of Hot Money. But don't go anywhere. Lots more lined up on the other side. Stay tuned to NDTV Profit.
Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Thanks for tuning into the Portfolio Manager. It's a show where we try and peek into the minds of the portfolio manager to figure out how she or he is positioning the portfolio for creating alpha over the course of the next 12 to 24 months or longer. Our guest today is Naveen Chandramohan, founder and fund manager at ITUS Capital. Naveen, great having you. Thanks for taking the time out.
Good afternoon, Neeraj, and good afternoon to everyone on the show. Thank you so much for having me here.
The pleasure is entirely ours. Now, I'd love to understand, how are you thinking about the portfolio construct currently? Is it more defensive than aggressive in nature because of the valuations, or do you believe being aggressive might still pay out?
So I think if you allow me, Neeraj, I would like to tune out a bit before I then go into the question. I think I've always believed in the value of cycles, and that comes again from studying history a lot. So I think the cycle that we are in is what I call a GDP beneficiary cycle. It's quite contrary to what we saw in terms of global markets as well as Indian markets between 2010 and 2020. So effectively between 10 and 20, you didn't see GDP expand, not just in India, but globally. And post-COVID, post the inflationary regime that we are in, which I think we will continue into over the course of the next 3 to 4 years, I do believe that GDP-facing sectors should show better growth. So within that broad framework, I would want to position portfolios towards those areas. So if you look at the portfolio from a top-down perspective, we would be overweight cap goods, we would be overweight power, energy, auto and auto ancillaries. We have been underweight banking, and we have been underweight consumer. We don't have any IT exposure, and effectively that is how our portfolios are constructed.
Sorry, IT services, 5%?
So IT services, the only company that we have is an ER&D services company.
Okay.
So it's not the typical services-based company. It's more so engineering R&D services-based company that we own there.
Okay, and I'll come to that. But first, it still doesn't answer my question, Naveen, about whether the portfolio is aggressive or is it defensive? Even in power or even in auto ancillaries, you can take aggressive bets or you can take defensive bets by virtue of the nature of the businesses that you're betting on. So is your portfolio aggressive or is it defensive in nature?
So again, I don't know how we qualify aggressive and defensive. So for me, a portfolio construct where liquidity is taken into effect and earnings growth is roughly between 18 to 20% is what I would look for.
Yeah, but even if it's coming at a higher valuation?
So the valuation, if you look at a trailing PE perspective of our portfolio, it's roughly 12-month TTM is around 27.5. So in order to get an 18 to 20% earnings growth, you have to pay up a bit. You're not going to be able to buy at today's valuations a TTM of 10 to 12 PE. That doesn't exist. So the question is, how much are you willing to pay up? You can go into the consumption space where you have to pay up a lot more to own these businesses. We are not willing to do that. You can go into cap goods, you can go into power, where I still think the valuations are reasonable. So we don't think about it in the traditional sense of saying IT and pharma are conservative and the rest of the businesses are aggressive. To me, equity is aggressive. So the question is, equity means volatility. My job as a fund manager is to reduce that volatility. If I can do that consistently across time, returns are an outcome. So we still own pharma. We still have an overweight in pharma. Does that mean that's a conservative bet? I don't think so. That's not a defensive to me. That still is aggressive.
Yes, most certainly is. Okay, so viewers, the market cap orientation of ITUS Capital, large caps 47.5, mid cap about 19.2, and small caps about 13% as of the last data that has come in. Now, Naveen, would love to understand some of the bets that you've taken, and we'll get into the more obvious ones in the second half of the show. Right now, I'm trying to talk about the ones where you are either large overweight or an underweight relative to the street, right? Auto ancillary intrigued me simply because while people have been constructive on autos, and you are constructive on auto as well with 7% weightage, but 9.7% weightage on auto ancillary shows that you are really constructive out there. Now, give us your thought process here.
So end of the day, again, auto has and will continue to be an extremely cyclical sector, right? Now, if you go back 10 years in the past, and when you study auto ancillaries, you have very few scaled up businesses in auto ancillaries. Auto ancillaries don't lend themselves into pricing power at all. So they always have been a cost plus business. Margins are, if you can get to a 10% EBITDA margin, that's like a dream come true because you get squeezed day in and day out. Now, with manufacturing moving here, there are a lot of technopreneurs who have been in this business for the last 35 years. They either have been playing on the back of import substitution, or they have a unique niche R&D that they have established, which has lent itself into what you call deemed exports. These two put together tend to have characteristics of giving you a high teens EBITDA margin with a sensible debt profile. If you can get these, that's the space I would be overweight. So I'm not saying we own businesses across the board. It's a technopreneur that we are backing. It is R&D ability. There is a lot of import substitution, so you have the ability to expand your margins. Your today's ROEs would roughly look at 16 to 17%. Many of them have actually put up capex on the back of import substitution orders, which means they can expand from 16 to 17 to closer to 20 to 21. And that's the space that we are backing.
Okay. So again, just to clarify so that our viewers understand, auto ancillary is a very wide bucket.
Correct.
Forging companies, wiring harnesses, tires, what have you, right? And now the EV thing as well. What have you chosen within this this auto ancillary space? What kind of themes? I don't know if I'm at liberty to name companies, but whichever way you can help our viewers understand why is it that you're betting and what are the kind of auto ancillaries that you're betting on.
So for example, if you go back in time, let's say 7 years back, and take an M&M, right? When most of their powertrains that they manufactured would actually stay in-house, because the machining requirements of a typical ICE engine, the powertrain that you manufacture, mostly are commoditized. So end of the day, for you to scale, there was no powertrain manufacturer in India who was generating more than 1,500 crores of top line 7 years back. Today, you actually have companies doing north of 5,000 crores in top line, doing powertrain both for the deemed exports as well as you're transitioning into an EV, you cannot have the same machining requirements. The machining requirements in terms of precision, the torque transfer requirements are going to be a lot higher. So you have niche components in the south that we are backing, that we are heavily overweight on. When I say heavily overweight, for us, 3% in a particular company would be overweight, considering, as you rightly pointed out, auto ancillaries by their very definition in India are low, mid to small caps by nature. The largest auto anch company in India is a market cap worth 24,000 crores, right? So historically, auto ancillaries haven't lent themselves to scale. And as auto exposures go up in terms of market caps going up, you will see certain auto anchs with an R&D component behind it expand too. Those are the companies that we would want to pick. So it's purely bottom up, it's purely balance sheet driven, and that's what we would back. It's a mix of both four-wheeler and two-wheeler as well.
Okay, so you're shying away from calling, let's say for example, for argument's sake, a Samvardhana Motherson with 80,000 crores market cap as an auto anch, or a Bharat Forge as an auto anch per se.
I wouldn't call a Bharat Forge certainly as an auto anch. They have a much wider portfolio. And a lot of what they do is an EBITDA margin of what they do is a machining plus precision. So that's not the space that I'm looking at. Though they should do well as well.
Yeah. Okay, fine. Get the drift. And you have a 7% addition in autos as well. That has stayed. So you're constructive on autos. Is it four-wheelers? Is it two-wheelers? You clearly have Maruti as one of the overweights out there. So you are bullish on four-wheelers that I can see. Are you constructive on two-wheelers as well?
I think if you look at the last 10-year volume growth of two-wheelers, it's been 3.2%. For a country that is actually relied on saying that two-wheeler volume is the go-to market, the actual data points tell you completely otherwise, right? So today, for the first time in the last 3 quarters, you're seeing two-wheeler growth after a 10-year period. So the question then becomes, where did, let's say, a Bajaj Auto or a TVS Motors growth come from in the last 5 years? It came from two aspects. It came from exports. And it came from pricing power. So many of these companies who actually upped the model CC in terms of where they went up the value chain, that's how their revenue growth came from. Today, for the first time, after a period of 10 years, you're seeing volume growth come through. And I think that could last over the next cycle. When I say cycle, I'm not talking more than 3 years as we speak. So I think two-wheelers can surprise on the volume side. That's a space that we would want to own. And four-wheelers, we continue to be bullish on.
Yeah, but and you're right. Cycles too have gotten compressed in a big way, right? I mean, these days, cycles by themselves are very different from what cycles probably used to be, economic or otherwise. Just as an extension, you mentioned ER&D. You are so constructive on autos. Is the ER&D presence an auto-specific presence or not necessarily so?
Auto is one of the components. So engineering R&D will lend itself into capex-driven businesses. It could be oil and gas. It could be aerospace, auto, telecom. So all of these sectors, if you look at it, didn't have great volume growth between 10 and 20. All of these sectors basically had degrowth. And as the capex cycle revives, and it's one of the things that I keep saying, I think we are in an inflationary cycle. We are not in a rate cut cycle. Maybe you will see, because of political pressures, 1, maybe 2 rate cuts. 2 is already an overextension as far as I'm concerned. But I think we are in an inflationary cycle and not a deflationary cycle. So end of the day, I think in an inflationary cycle, GDP facing sectors should do better. You look at what happened in the US between the 70s and 80s. I don't want to use the India example between 03 and 09 because the base effect as well as the growth that you saw was extremely non-linear. And I'm not sure you're going to get that level of growth in this cycle. But I think US between the 70s and 80s is a better example of an inflationary driven growth. So metals, oil, energy, these are the sectors that should do well.
Okay, and we'll kind of talk about that as well. Remember, viewers, as I said, we'll talk about spaces where Naveen is materially different in the market. Would have loved to talk about IT too, and we'll probably do that, but we have to do it after this break because we really need to slip into a commercial break. Stay on, Naveen, lots more to talk about. We'll be right back, viewers. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you Back with the portfolio manager in conversation with Naveen Chandramohan. He spoke about how that IT exposure just after autos are asking him, and he mentioned that that's not as much IT services as ER&D, which means, Naveen, I'm taking that conversation forward, that you are not seeing green shoots in IT. I've been questioning now for a while what is it that people see there, but Accenture's numbers finally show that amongst the largest companies is not talking about any turn in demand. But is this the time to buy IT, or would you wait for some evidence and say that it's okay to buy it 5-10% higher, but at least let the tide turn?
So Neeraj, I think rather than get into the price, for me the question is, am I seeing visibility of growth? And I don't see that yet. Today, the reason margins look accretive is because many of them have managed their employee costs much better. For me, as a core business, what I want to see is top line growth translating into operating leverage and hence margin profile. And you not just running efficiency in terms of your cost base well and getting an EBITDA margin expansion. So broadly for me, I would put my hand up and say I would rather stay underweight because I don't see any green shoots of growth. If growth does surprise to the upside, I'm happy to relook at it. But for this growth, I don't think the valuations are cheap.
Okay. There is, amongst the largest allocations that you have is auto ancillary, capital goods. But when I look at your top 10 holdings, I don't see auto ancillaries there. I don't see capital goods unless you classify the ports company as a part of that. But it's infrastructure and not
Correct.
ports. So you obviously have spread out your capital good bets across multiple companies in small measures.
Absolutely correct.
Where is the largest conviction within cap goods then?
So cap goods with a power angle is where the conviction is. So a lot of capital goods which actually manufacture for the power sector and the energy sector, that's where the higher conviction is. Because today capital goods don't come cheap. And
yes.
Your non-linearity has come in between 21 and 24 in terms of growth. So the growth from here is going to come on a higher base. So I would pencil in a 15 to 18% growth from here, which is not trivial growth either, but the valuations that which you're paying up for that growth is not cheap. So I would want to build in starting exposures today with the ability for me to size up higher over time if I can get more volatility.
So the likes of power cables, etc., come into play, or what's the exposure within cap goods?
I mean, in terms of large caps, for example, we own an ABB, we own Cummins, we own Thermax.
You're not shying away from high valuations, I see.
Again, so we use this word very loosely in our conversations, Neeraj, because let's take ABB for an example, right? Again, I'm not saying someone needs to be buying ABB today. It's not a recommendation at all.
Yes.
But you go back to 21. ABB was available at a TTM of what from a PE perspective? Assuming PE is the easiest metric for someone to relate to, was at 65, right? So was that cheap for a company which actually had 3-year growth of 11%? Or are you going to say that when I'm getting a 23% CAGR in growth with a future growth potential of 15 to 18%, a 75 PE multiple is something that I'm okay to pay up? So my question is not starting off by saying what is cheap. My question is starting off by saying where am I seeing growth and where am I seeing sustainability of growth? And for that, what is the valuation I'm paying? I'm not saying these valuations are cheap, but then the question is how do I position size this in order to ensure if I'm going to pay up at an overall portfolio level, my portfolio construct doesn't get affected. So it's not one name that's going to drive my returns. It's basically saying for this valuation, for the visibility of growth that I'm seeing, do I want to be staying out of this sector? Answer is no, because that's where I see visibility of growth.
Nice. And in some sense, viewers, a good way to follow this might also be comparing the past valuations or historical valuation cycles as well, because a lot of times some stocks tend to trade expensive. For the longest time, people question why is Growth Finance trading at the valuations that it is, and at some point of time it will correct, and it never did. That is not to say that the likes of ABBs won't. Maybe they might. And remember, Naveen mentioned that none of the things that we are recommending or speaking about here are recommendations. They are illustrative examples, so please keep that in mind. I mean, there's just that disclosure from our end as well. The other aspect is power. Now, tall targets, a lot of scope, but a lot of people cite past execution misses and execution risks not being factored in. What is your sense around this?
So, let me play both sides of the coin, Neeraj, right? I'm going to make a fairly tall claim by saying that you are going to see over the next cycle maximum number of solar bankruptcies that you've ever seen. Because the cost at which and the IRR at which some of these projects are getting bid up and some of the smaller companies are setting up solar capacity doesn't make any sense on the ground, right? So end of the day, obviously there is going to be enough and more supply that comes in because demand for the first time after a period of 12 years is growing at a CAGR of 9%. End of the day, power in terms of supply side will and should grow at the cost of GDP. Now, basically over 2010 to 2020, when you kept setting up supply and GDP was at 3.5% over a good part of the decade, you had excess capacity. And hence, a lot of the companies went into significant debt on their balance sheet, and you saw a huge amount of value erosion over the last 12 years. For the first time, you are in a power deficit cycle. And that deficit basically meant because you have not invested for a good part of 10 years in an aggressive way because demand didn't come, for you to set up a greenfield in thermal does take 4 years. Whereas if you go into solar, it takes 12, 14 months. So it's a lot easier to set up solar capacity than it is to set up a thermal capacity. So, and one of the reasons that India is in a much, much better position is we didn't take this ESG tall-headed claim of saying that we will not burn coal, because coal is extremely essential. And today, many of the countries in Europe are realizing that. They did that, and now they've gotten killed on the other side. So if I am going to bet on power, which we are, I would much rather bet on a large portfolio, which has a good mix of thermal on one side and an element of renewables on the other side. Because renewables, it's good, they will see growth, but at the same time, I am not really as bullish on renewables where the IRRs will be close to mid-teens on a sustainable basis, because these are all what you call plugging the gap. Wind energy is not going to be self-sustaining. Solar energy can be, but the kind of bidding that is happening on the ground is not very comforting. So I would still back a thermal-led portfolio into renewables rather than a renewable-led portfolio into thermals.
But effectively, then you're telling me about the power generation companies.
Yes.
It's a wider bucket out there. Below that too, power financiers, power ancillaries, so on and so forth. Anything in that bucket, or is it only generation?
I mean, I think we don't own power financiers. Today we find them a bit expensive. They still can do very well, right? But that's not the space that we are looking at from a lending perspective. Power generators is one space we are bullish on, and hence that will translate into a power transmission also. Because end of the day, in order for power to get into the grid, the transmission capacity has to go up in a significant way. So I think transmission and generation is going to benefit as a result of this. Financiers could, we don't own them, so I don't have a very strong view. Easy thing to say is valuations are expensive, but I don't think that's a prudent statement to make.
Last question. You have an outsized position in pharma relative to markets again. One of your top holdings is not a traditional pharma firm, but a pharma company, CRO, CDMO, what have you. What bucket of pharmaceuticals are you most constructive on?
I think today many fund managers have dissected pharma in a beautiful way, right? So I'm not going to break it down. Indian pharma is pretty much works like an FMCG business. It's a branded business. Everyone would want to own that. No one wants to own US generics for all the right reasons, because it's a commodity play. You don't have pricing power. But I also feel that cycle, in terms of the rate of change of price erosion, is reduced. You still don't have price increase, and I don't think that's coming back anytime soon. So in terms of what we like in pharma, we like product portfolios with an Indian-facing angle, as well as CDMO manufacturing. That's a space that we think has significant tailwinds. You're seeing businesses which have no background in CDMO acquiring, deploying capital and getting involved. Capital misallocation does happen at a time where capital is abundant, And free cash flow of many of these quality corporates is abundant. So you're going to see a lot of capital allocation into those spaces. So the company that we want to be owning are those that have 10, 15, 20, 25 years of track record in manufacturing. They've done this. They have sticky B2B businesses. We also do have businesses which have a US generic component as well, because that cycle has not played out, could play out in the next 2-3 years. It has played out from a margin expansion perspective in the last year, and I think in the next 6 to 8 quarters you could see more runway for that. So broadly we have a mix of CDMO manufacturing, Indian branded play, as well as a US portfolio as well.
Great. Naveen, on that note, thanks so much for taking the time out and being with us and for coming to our studios. Really appreciate you taking the time out.
Thanks a lot. Appreciate this, Neeraj.
Yeah. And viewers, thanks for tuning into this edition of the Portfolio Manager.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Benchmarks continue to trade in the red amid weak global signals.
Nifty tests 22,000 mark. Meanwhile, broader markets recoup morning losses. Indigo flies high in trade after getting a big thumbs up from brokerages. The houses see strong capacity and passenger growth in the coming years. And it's an NDTV exclusive. Sources tell our channel that Tata Sons is looking to monetize assets for the first time. More stake sales could be on the horizon. London's Science Museum unveils the Adani Group-sponsored gallery. The museum shows how humans have a role to play in deciding our energy future, the group says. Hello and welcome. You're watching Market IQ and I am Pallavi Nahata. Now, before we can go further into the show, let's have a very quick look at where the markets are at first. So, not too much happening there, to be honest. It's, however, looking like early signs of a week of consolidation. The markets are marginally in the red, but the Nifty 50 is still managing to cling on to the 22,000 mark. The Sensex 2 down by about 0.25%. The Nifty 50 down by about 0.15%. But let's have a look at where some of these sectors are at. We're looking at the Nifty oil and gas being among the key gainers in today's day of trade. Nifty PSC, Nifty Realty, Nifty Metal, all up by about 0.5%. What's not performing well is the Nifty Media. It's down by almost about 0.75%. Nifty Bank, Nifty IT, Nifty Finance 2, all trading in the red, down by less than 0.5% though. But let's have a look at some of the key constituents of the Nifty 50, how those are performing. We're currently actually seeing a higher number of declines there than the number of advances. Bajaj Finance and Hindalco among the top performing stocks. Britannia too up, as well as Adani Ports. All of these are up by about 1.5%. Bajaj Finance is actually up by about 2.5% though. What's not performing well is Power Grid, Eicher, Divi's Lab, Bharti, Airtel, SBI Life. All of these stocks are down roughly by about 1%. However, what's interesting is that the broader markets appear to be performing better than the benchmark indices. The Nifty Midcap 150 is up by about 0.75%, while the Nifty Small Cap 250, while in the green, is up by only about 0.25%, but both outperforming the Nifty 50 and the Sensex, to say the least. But before we can actually move on, let's also take a quick look at where we are at with the rupee. Now, like we know, Friday, of course, was not a particularly good day of trade for the rupee. It was at a record low. However, it's actually fairly stable today. It remains range bound and it has staged a recovery in today's day of trade. It remains to be seen how volatile the next few days may or may not be. So we're closely going to be watching out for how the rupee performs over this week. But with that, let's move on to an NDTV Profit exclusive. Sources tell your channel that Tata Sons is looking to monetize assets for the first time. My colleague Sajit Mangat, who's on top of the news, joins us now. Sajit, what are you gathering from your sources?
Tata Sons, which is the holding company for the entire Tata Group, is now pivoting itself into monetization of assets within the group. Remember that Tata Sons hasn't been looking at monetization for a long time, and now there is a policy change which is coming up in Tata Sons, which looks at raising funds using monetization of current assets, which could be listed or unlisted. In case if they're unlisted, it's going to be through listing and getting strategic investors. investors. But this is a monetization which is very significant for the group, because in the recent times, in the last 2 to 3 years, Tata Sons have moved from traditional businesses to new age businesses, which include semiconductor fabrications, lithium-ion batteries, or green energy, and all these are huge investment businesses, and Tata is looking to raise funds. Tata Sons is looking to raise funds to support these businesses in the incubation period there. If you look at some of the kind of monetization that has happened so far, the recent TCS sale of 0.65% stake, where Tata Sons raised nearly 9,300 odd crores, was part of this change in strategy, and where they are looking at monetization. So it doesn't mean that Tata TCS will be further monetized, but there are many more assets within the group which can be monetized going forward, which includes listing of some of the companies like a Tata Play, which has already filed a confidential filing with SEBI. There are financial services businesses which includes Tata Capital. There is insurance company like Tata AI and Tata AIG. In the infra space, you have Tata Realty, Tata Housing, and Tata Projects. These are all big businesses with good revenue potential and profitability. Apart from that, Tata have already invested more than 18,000 odd crores in the digital businesses, which includes Tata Click, Tata 1MG, Big Basket, Chroma. So these are some of the big businesses which it holds in its as investments in its books, and it will look to monetize many of them in the next couple of years as it looks to incubate many of the new businesses.
Thank you so much for that, Sajid, and we'll of course continue to bring to you more on that as and when we have any updates. But before we can move on, let's also listen into what Tata Group Chairperson N. Chandrasekaran had to say about the group's foray into new sectors.
The Tata Group has been going through a significant transformation over the last few years. All Tata companies have embraced the megatrends of artificial intelligence and energy transition. We also fully recognize the need for a global, resilient supply chain and India's role in creating that resilient supply chain. The Tata Group is spearheading this movement and has committed itself by making significant investments and foray into such sectors. Apart from our traditional sectors and the companies that we have been running for several years, recently we have pivoted towards electric vehicle mobility, new energy in wind and solar, and we announced our first semiconductor fab, India's first, in Dholera recently. We are also creating the first indigenous assembly unit for semiconductors in Assam. The group has also forayed into batteries, and we are building a lithium-ion battery facility for 20 gigawatts in Sonand. The group also is producing the technology for 5G and beyond.
Now, moving on, state government bond issuances have exceeded targets for 3 consecutive weeks. But what's caused the sudden spike in state borrowings this month? Vishwanath Nair joins us with the details. Vishwanath?
So what we do understand from the data that the Reserve Bank of India is putting out is that in the week starting March 12, then later the week starting March 19, and then this current week which starts today, that's 26th of March, essentially the state government borrowing or the bond issuances listed for an auction are significantly higher than what was indicated in the calendar earlier this year. And this is primarily happening because there have been some dip in the grants from the central government. There has been a spike up in the fiscal deficit. So state governments are trying to borrow money from the markets to try and adjust these costs. What experts are also pointing out is that probably they have commitments towards putting in money at the national pension scheme, which is driving this increased sort of bond issuances from certain states. Primarily it's coming from Uttar Pradesh and Maharashtra, which are showing these spikes. What market sources are also telling us was surprising is that in the last week, the week started March 19th, essentially the bond issuances were supposed to be close to about 30,000 odd crore, and it was significantly higher than that, what the issuances that actually happened. Similarly, this week as well, the expectation was 30,000 crore, but the bonds actually listed for issuances are about 60,000 crore. If the market is able to take all of that in, then during this month, during March alone, the total bond issuances would exceed about 1.9 lakh crore, which is significantly higher than the 1.75 lakh crore that was expected earlier. Having said that, Jan-March is not likely to breach the expectation. For the Jan-March quarter, the expectation was about 4.13 lakh crore worth of state government borrowings, and the actual borrowings are going to be around that range, so nothing to worry about there. But the expectation is that at least during this month, during the current week, the bond issuances by state governments is going to exceed what was detailed out in the calendar earlier.
Thank you so much for that, Vishwanath. Now, going by the limited information we have so far, we're looking at an aggregate state's fiscal deficit of about 3.1%. That's going to be a tad higher than what the 15th Finance Commission had recommended at 3%, but that data, of course, is highly variable across states. But moving on, the oil and gas space is in focus. The index is one of the top gaining sectors today. LNG spot prices have hit a 3-year low. Mihika joins us to help us understand the impact on LNG stocks.
We have stocks like GAIL India, Gujarat State Petronet, Torrent Power and Indian Oil all up 2 to 5% in trade today. And this is mainly on the back of LNG prices that have hit a 3-year low. Now these are LNG spot prices which are trading around $8.3 to $9 per million metric British thermal unit. Prices are down 56% year on year and 87% since their record high during the Russia-Ukraine war. Now why the prices are falling? One is the weakness in demand across Asia and Europe, as unexpectedly warm winters have lowered the demand for natural gas for heating purposes, and this has led to high inventory in Asia and Europe, while there is a significant and continuous growth in LNG production. Now when you talk about the impact on the companies, the lower prices allow companies to expand their sourcing and also increase their sales to the power, fertilizer and refining sectors. There have been newspaper reports that are suggesting that companies like GAIL India, Gujarat State Petroleum and Indian Oil are buying the spot LNG cargoes at the lower prices, and the cheaper sources could impact the margins positively, and they could also pass some of the benefits to the consumers.
Now, on that note, let's actually listen into what Petroleum Minister Hardeep Singh Puri had to say about OMCs and their performance to my colleague Tamanna Inamdar from the sidelines of the NDTV's Indian of the Year Awards.
Change is staring you in the face. Suddenly the public sector, I'm talking about perception now. I can come to individual companies. I'd be happy to share one or two examples. Public perception used to be that public sector companies are like the bureaucratic setup of the rest of the government. People come to office at 9 o'clock, run away at 5 o'clock, they are risk averse, they don't go out and grab the challenges which are available, and by and large, and there are some other allegations that the oil public sector companies or the OMCs are also excessively amenable to some of the big private sector giants, that they are able to control them. I think the good news is that public sector in general is doing very well. I also happen to be Minister for Housing and Urban Affairs. HUDCO has done very well. HUDCO has got what, a Maharatna status now. The OMCs, somebody said, but the market is rising. Yeah, market is rising, but the market rose 43% and the OMC valuations rose in multiples thereof, some 120%, 160%. Why? Because they've done a good job, and in a time of crisis, in a time where there was challenge, they proved their mettle, and the marketplace, I don't use words like the magic of the market, but the market has a lot of very intelligent people who can make assessments on what is happening, and that's how valuations go up.
Well, Zomato was in focus last week in the wake of its controversial announcement of a pure veg fleet. Dipinder Goyal, who received the Entrepreneur of the Year at the same event, the NDTV's Indian of the Year, talked about the rationale behind the decision. Listen in, and we will be back after a short break.
We did a large survey saying what will make you order from Zomato more, and this came up that we want a pure veg fleet. Okay, and I mean, the way we grew up, we don't know the meanings of these words and what is the historical context, and none of our team actually knows this. So we are actually indifferent to this, right? And I think that's the purest form of letting go of any casteism, any religion, any biases. Like, we are actually indifferent to it. So, I mean, we just went on and did the change. But when we got the feedback, we actually understood that, okay, this makes sense. And we were actually on a Zoom call for the next 20 hours just trying to fix anything that we needed to fix.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health.
Welcome back. You're watching Market IQ on NDTV Profit. Let's re-look at where the markets are at very quickly. The Nifty 50 again and the Sensex both continue to remain marginally in the red while broader markets continue to do better. So actually, let's take a quick minute to look at where some of the top performer stocks are at in the Nifty Midcap 150. Now, Torrent Power is actually up by about 6%. While Thermax, Maxfin, Dr. Lal, all up by about 5%. What's not performing too well in the Nifty Midcap 150 is delivery. The stock is down by over 3%, while Sumitomo and Kajaria Ceramics are another couple of stocks that are down by almost 3%. But yes, we're pretty much where we started off the show at. Broader markets continuing to outperform, while the benchmark indices clinging on to where they were at. It does continue to remain a tight day of trade. We're not seeing too much of movement, but we'll continue to see where we actually close the day at. But moving on, the Insurance Regulatory and Development Authority changes its special surrender value computation. Monal Sanghvi joins us to help us understand the implications on the life insurance sector. Monal?
So it's a positive for life insurance companies. Let's begin with that. They've barely quite changed the regulations from what is currently in force. So if we were to look at the surrender value that is currently computed for single premium policies, which is a lump sum policy, it's around 75% and 90% for within 3 years and 90% for the total. For non-single premium, that is when you pay premium for every year, you cumulatively add, depending on the number of years, you get a percentage value, as we can see. Now, this is quite a positive because overall policy holders will not have an issue when they have to return the policies. And Emkay Global believes that for persistent policy holders who hold the policy until the end of the maturity, it will not reduce their returns, which was what was proposed in the December draft. Also, it will not impact the value of new business margins for life insurance companies. So overall a positive for insurance companies, a slight negative for policy holders who were planning to give back their policy before the end of maturity period, because the December draft was quite positive. But however, overall a positive.
Thank you so much for that, Monal. But coming back to some stock-specific news, actually, a list of brokerage reports poured in today on Interglobe Aviation, on the back of which the stock jumps over almost 5.5%. Let's talk to Mahima, who joins us with the reports. Mahima, what are brokerages saying?
Interglobe Aviation is one stock, as you rightly mentioned. The brokerages are really bullish on this particular stock. I'll start with Citi. Citi maintains a buy with a target price of 3,700. They've said that the supply growth and the demand acceleration are likely to double the Indian aviation passengers by FY30. They're saying that the addition of A321 XLRs will expand the service radius and aid further passenger growth. They expect some increase in salary expense from the regulatory changes. However, this will be passed on to the passengers. Key risks include higher ATF and crew because of rising crude prices and higher cost pressures because of depreciating INR. Morgan Stanley has also rated it overweight with a target price of 4,145, which is an upside of 25%. The company will add 1 new aircraft per week in 2024 is what they believe. The management aims for a double-digit growth capacity by FY25, which is much more than the brokerage's estimate of 6%, and Indigo will launch airline for New Jewar Airport in Delhi. We also had MK, where MK has maintained ad with a target price of 3,500. The fleet addition continued with 8 planes between Jan to Feb, and at present the total airline stand at 366. The aircraft on ground to peak in the next 1 to 1.5 years is what they believe, and new airports like Noida and Navi Mumbai will aid the volume growth in the next FY25 to 26, where Motilal Oswal has also maintained neutral with a target price of 3,510 on Interglobe. They believe that firm is working on increasing its international presence by entering into strategic partnerships. The competition in international markets is intensified. However, the Indian aviation market will grow with rising infra aircraft capacity additions, etc. And India can become the 3rd largest aviation market by 2035. So this is the overall view of all the brokerages who have maintained bullish stance on Interglobe Aviation.
Thank you so much, Mahima. Another stock that's in focus is Syrma SGS. Brokerage reports from Jefferies came out with a note on the EMS space, describing it as one of the surprise sectors. We spoke to JS Gujral of Syrma SGS, who says it has ambitions to be a billion-dollar company. Let's listen in to what he had to say on the targets.
Managing a 2,000 crore company and a billion-dollar company is a different animal. So I think the industry has to look inwards and start building systems at the back end to cater to this growth. I don't think growth per se will be a limiting factor. It is our ability to manage the growth, which could be a constraint or which could sour up the things if you're not able to have an organization to cater to that.
The billion-dollar size was in reference to your ambitions, Mr. Gujral. If so, by when?
Yeah, let's see. We are growing at 40-45%. This year we'll be doing about 3,000 crores. Next year the plans are intact to be at about 4,500 odd crores. So if that trajectory, I think by calculations we can do whether it is 2 years or 3 years or whatever it is. But yes, the ambition is to be a billion-dollar company sooner than later.
Well, sustainability is the buzzword as India guns for growth in the ever-changing geopolitical scenario. Indian conglomerate Gautam Adani, the Gautam Adani-led group has announced that the Adani Green is aiming to produce 45 gigawatt of renewable energy by 2030. He was speaking at the inauguration of the Energy Revolution Gallery at the Science Museum. Listen in.
We are the bridge
between generations. It is our duty to take care of our planet, not only for these generations and the next, but also for the generations to come.
No, the statement is not from the recently released and much talked about Netflix sci-fi drama Three Body Problem, but Gautam Adani, the chairperson of the Adani Group, laying out the need for sustainability while inaugurating a new science museum gallery in the United Kingdom. The Indian billionaire spelt out the near-term plans of the world's leading solar power developer and India's largest renewable energy company, Adani Green.
We are also aiming to reach 45 gigawatt of renewable energy by 2030. This will be like providing clean energy to almost every house in England.
Adani also told the gathering that Khavda in Gujarat will soon see the world's largest renewable energy park come up. It will have a generation capacity of 30 gigawatts of energy and is spread over an area of 538 square kilometers, an area 5 times bigger than Paris. Bureau Report, NDTV Profit.
Disclaimer, NDTV is a subsidiary of AMG Media Networks Limited and Adani Group Company. Well, that's all we have on the show for now. Do stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah, and we're going to be talking about a couple of key aspects around mutual funds, more so from a perspective of how you can analyze your existing funds. As usual, we will have queries and we'll get our guests to answer those queries as well. But what we will be doing today, amongst other things, is discussing if flexi cap funds have been consistent outperformers or underperformers relative to the benchmarks, and based on the outcome of this math, should you take a decision to either get out or stay in or increase the allocation to some of these funds. Remember, this can be done for any category. We've chosen flexi caps as opposed to either large caps or mid caps, simply because currently having that flexibility to move between large caps and mid caps in a market which is looking so polarized on valuations, I think it is very important, and hence flexi cap is the cornerstone of this conversation. Our guest today, Rushabh Desai, founder of Rupee with Rushabh Investment Services, and Kshitij Mahajan, managing partner and CEO of Complete Circle. Gentlemen, both of you, thank you so much for taking the time out and being with us. Really appreciate your time. Let's start off with how should one analyze the 10-year rolling returns or any other form of return for flexi cap funds, and what would the best way to do it? Rushabh, you had sent me this message first, so I'd love to start off with you. Would you look at rolling returns over the longer period as the best way to do this, or is there some other way that you would do this?
Neeraj, thanks so much for having me on the show. I think I completely agree with you that, doing an exercise on a daily rolling basis over a longer period of time makes more sense. Because what we have observed is that on a short to medium term perspective, whether it is 3 years, 5 years, or even on a 7-year point of view, funds can underperform. And it's very natural, for funds to underperform in a short to medium term perspective. I have taken an additional point over here from a 10-year point of view, because 10-year gives a broad picture, like a complete cycle, of how the funds have done. Now, quite a lot of funds have done quite well, in terms of delivering outperformance against Nifty 500 TRI index. What a lot of investors do is chase returns. Actually, the whole purpose of investing in a product like FlexiCap, right, is to give consistency and to give little higher returns than Nifty 500 is something what I truly believe. Alpha, we can discuss on how much outperformance can a fund generate, or alpha can a fund generate. But even if a fund is generating an outperformance or an alpha of say like anywhere between 1 to 3%, I think that's a decent outperformance from a long-term perspective. Some top performing funds which have had 100% outperformance strike rate since the inception has been Aditya Birla Flexi Cap Fund, Franklin India Flexi Cap Fund, Kotak Flexi Cap Fund, Parag Parikh Flexi Cap Fund. These have been the top performance where they have given 100% outperformance strike rate over a longer period of time, which is on a 10-year rolling basis. I think an ideal outperformance strike rate should be 70% and above. But even if a fund doesn't do that great, for example, like a quant mutual fund, which has been recently taken over, and rebranded itself, and Sandeep has done a fabulous job. So it is important to look at from a long-term perspective since the fund's inception, and also from, a recent point of view as well, that gives a clear picture of how the fund has been doing recently. So, even on the recent times, if a fund is generating or is consistently outperforming for a couple of years, I think that is a very good sign.
Okay, I think we've just getting a slightly tougher feed there, but you got some sense of that. This is just the initial starter. So Kshitij, good afternoon. And I would love to understand how you would go about and measure the attractiveness of a flexi cap fund, a mix of course, performance, but other parameters that people should keep in mind. Please do keep in mind that not all of our viewers would have the access to the same kind of data sets that you would.
Well, good afternoon, Neeraj, and I totally agree that sometime at our level we have access to a better reports, better data points. But let's say on a common man per se, somebody who's an investor doing investment himself or using some partner through which they are investing. I think one, obviously what Rishabh has mentioned about rolling returns, that is one parameter which is there. Having said that, one is you analyze fund, the basis of what the performance or outperformance on a rolling return or various metrics basis is there, or let's say vis-a-vis index, what's the outperformance is there. Excuse me. At the same time, what becomes more important is that when you are analyzing a fund, the reason you are analyzing is to look at a future view or take a future view on those funds. That yes, you're looking at funds to invest. That's why you're analyzing funds. So I think for an investor when they are looking at past performance and outperformance on these parameters is important. But at the same time, what is important is the number one point is longevity of a fund manager with a fund house or with a fund. So in a fund, what matters is that who's the fund manager and for how long he's been managing a fund. Second is investment philosophy, whether it's in line with your philosophy or not. Third important parameter, as Rishabh mentioned, rolling return is there. Fourth, there are various metrics which are very much available on web across portfolios that how you want to analyze these funds. Like sometimes it is evident that for 20-25 years, there are a few funds which have outperformed, which have given return of 19-20% compounding. But yes, short-term performance is important. And short-term, I'm talking about 3, 5, 7 years also. I'm not talking about 1 year or 6 months. That is also very important because it gives you a perspective on how the funds have been doing in such a dynamic markets. Look, 5 or 10 years back, markets have not been that volatile or dynamic, which has become right now. Cycles have shortened of various, investment arenas. So things have become very, very fast when we talk about in recent times, and it becomes evident that fund manager has to be a very dynamic fund manager to manage situation now. So you have to look at a current scenario also. At the same time, what in addition, what we look at, which data points little which we have available on our side, are valuation metrics, which includes your price to earning, price to book value, price to sales, price to volumes, and many other expected earning growth in future earnings also, which help us to understand that whether what you are buying right now into a fund, whether it is rightly placed in terms of valuation. Price, why all these metrics becomes evident when we do some shortlisting of funds is because it gives you a perspective on how and what level you're entering into a fund, where you're buying into a fund. So I think it becomes important for any investor or any analyst that they should look at these parameters. Having said that, if you have done a basic due diligence of what you are holding as top 5 stocks, 10 stocks, and top 5 sectors, it gives you a little impression about or give you a little indication about how the funds are going to behave as you can zero down on the various metrics of these stock holdings also.
Fair point. Okay. So the rolling returns piece is common between both the gentlemen, and I'm sure some of the other parameters also would be agreeable to both. Now, what we will do is we'll try and ask both our guests as to, based on the parameters that they've laid out, what is it that has stood out? I mean, Rishabh was making a small mention to quant having done so within the last 2 years, but let's assume standard parameters involved out there. And Rishabh, good to have you back again. So let's assume you've analyzed these rolling returns for the last 10 years or maybe since last 2004. What is the takeaway, Rishabh? What are the funds that stand out as consistent performers? And is that outcome a means for somebody who's watching the show to invest into some of these funds as a decision making?
Neeraj, that's a great question. And I also agree with Sitish that, along with rolling returns, it's very important to look at, the AMC, who the fund manager is, what is their philosophy, right? What is your thought process? How is your team? And whether the whole process of what the AMC is following, is it matching with your risk and your philosophy as well? Because we know that there are two styles available in the market and fund managers follow, which is growth and value can be very cyclical at times and underperforming on a 7-year return basis as well. So I think, see, from a data perspective, there have been 4-5 funds which have done extremely well, which is Aditya Birla Flexi Cap, Franklin India Flexi Cap, Kotak Flexi Cap, Parag Parek has done phenomenally well, DSP, HDFC. So these are the funds which have done really very well, in terms of delivering consistency, right? So I think, in my view, having a balanced approach, while creating a portfolio, select different funds, different AMCs of different styles, have a balanced approach between value and growth, and don't have more than 25% exposure in a particular fund. I think because what happens is that even there have been many funds which have been underperforming on a 10-year return basis as well.
Right.
So you cannot avoid underperformance. What you can do is you can select a quality fund, right, based on the past performance and based on the existing philosophy and the team of the AMC, but at the same time also diversify across different styles and AMC. I think that would be a best way to minimize the underperformance risk.
Sure, Rishabh. So based on all of this, what are the funds that stand out?
I think, there are 5 funds which I recommend to my clients in the Flexi Cap category. One is Parag Parek Flexi Cap Fund. Second is Franklin India Flexi Cap Fund. Third is the DSP Flexi Cap Fund. Fourth is Canara Robeco Flexi Cap Fund. And fifth is UTI Flexi Cap Fund. So these are the 5 funds what I think I really like, and one can create an equal proportion, 20% each portfolio, in terms of lump sum as well as SIP.
Okay, and viewers, remember, this would change depending on the nature of the investor that you are, but because our guests don't have the idea of how tailor-made specifications are for each, there is a standard piece being given. Rishabh recommends these 5, as these 5 could be recommendations with equal allocation, not knowing anything else specific that might be there in your portfolio. Assuming you're starting the portfolio afresh, assuming you're at average age with average earning power and average investing power. Shit, this is the same question to you. Based on the parameters that you've analyzed, the 3, 4, 5 things that you spoke about, including longevity, etc., what are the funds that stand out?
So I'll just put a caveat here that I'm talking about fund which I like from a future perspective, depending on what they've done in the past. So we like HDFC and we like Franklin on the Flexi Cap side. As I said, and I echo Rishabh on the quant side, although the performance which we can analyze quant is for 10 years, but yes, last 3-4 years have been really good. Sandeep has done a great job there with the Flexi Cap fund also. In fact, the metrics which we just spoke, various valuation metrics, all these 3 funds are actually below their industry average as well as below the index, which gives a very positive view from the future perspective also. So these are 3 funds which we are looking at, which one can look at.
Okay, and Kshitij, just one follow-up there. What are the average returns that one can anticipate from investing in Flexi Cap funds with a, let's say, with a 5-year perspective?
So you can look at actually doubling your money in 5.5 years' time. 13-14% compounding is something which one can look at. But you actually enjoy the power of compounding as eighth wonder if you give much more time to that. Sometimes you might see that returns coming much earlier. Sometimes it takes maybe half an hour, a year more. But it becomes really important that although we say that at least large cap and flexi cap, one should look at 5 years time, but equity investing is forever. I always say that, boss. You can align your goals, but if you really want to enjoy the benefit of equity, look at 2 flexi cap funds. Last 25 years, Franklin and HDFC, Neeraj has given 20% plus compounding return, which means you have doubled your money every 3.5 years. So I'm saying for that, but you have to wait for 25 years to see that type of compounding happening. Their NAV is more than 1,000, by the way, Neeraj. That means these 2 funds are 100 baggers. We keep on talking about stocks which are 100 baggers. We have mutual funds which are 100 baggers.
Okay. Jaman, stay on. So much more to talk about. We need to slip into a quick break. We have a few queries that our viewers have given. So we'll try and talk about those on the other side of this very quick break. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investment. Back with the mutual fund show right here on NDTV Profit. We have about 7 minutes left on the show, so I think what we'll do is first try and get in a couple of queries out of the way. Time permitting, we'll try and take a topic on small caps, or we'll probably talk about that next week as well. Small cap funds ain't going anywhere, trust me. Okay, let me first get the queries out of the way. First, the first query is from Santosh. Santosh Kumar, he's aged 32 years. The goal that Santosh has is to retire early. Santosh joined the gang. Now, Santosh is saying, I want to retire by the time I'm 45. He has no mutual fund investments thus far and can invest up to 5,000 rupees a month. What funds can be recommended? Kshitiz, I'll start with you on this one. I don't think he has a particular goal of an amount in mind. All he has is a number that he can invest currently. Now, can you maybe recommend something to Santosh with regards to this?
So I will recommend either first, before sharing the fund name, first he should have much more amount to invest in a SIP. If he can't right now afford to have much more allocation toward his investment, then he should increase the retirement age, because at 5,000, if he grows his money at 13% also for the next 13 years, because he's 32, he's planning to retire at 45. He'll not have more than 42 lakh rupees as total corpus, subjected that the money will grow at 13%. But if you increase this step up of SIP to, let's say, retirement goal to 55, he might have around 3 crore rupees. And as inflation is a big monster here, I think 42 lakh rupees for any person right now who's actually looking at investing or getting retired early will be a very less amount at 45 years of age. So Neeraj's problem right now with all of us, or let's say any investor who's investing into this, is not that how much money you make. Problem is that if you live long, and chances for you living long is increasing day by day thanks to medication, healthcare and everything, then you have how you're going to sustain or survive or let's say sustain your lifestyle the way you have retired. You want to sustain at least that type of lifestyle. For that you need inflation beating assets. That can be real estate or equity investing only. And real estate is not liquid, but yes, equity investing is liquid. And then you can have SWP going your way to maintain your lifestyle. So having said that, if you want to start with 5,000, I think the best way to do is he can have two SIPs. One is obviously what we discussed, Flexi Cap fund, and he can have one large and mid cap fund on his side. He can choose any of the three funds which I spoke, and there's no recommendation. This is something which I like. And then on larger mid-cap fund, you have option from Tata, which is good, Kotak, which is good. So one can choose between them. So that's what we like. So this is how he can start a portfolio. And if right now he can step up, at least on a yearly basis, he can do some step-ups which can help him to get a better performance.
Okay, I think valuable advice. Rishabh, come to you. I mean, would you advise a step up as well? And beyond the step up, what else, what kind of funds can Santosh have in his portfolio?
Neeraj, I more or less agree with Kshitij. I think retirement early is not the solution because, life expectancy is increasing day by day due to fantastic healthcare. And, a lot of people are living up to 85, 90 years now quite comfortably. So I think 5,000 is not going to be enough for an SIP. Do and step up of, 10 to 20%, year on year. And, out of whatever you're earning, say like if you're earning, say $100 per month, try to save and invest around 20 to 30 into equity mutual funds, because unfortunately we are not a pension friendly country, especially in the private sector. So I think whatever we are going to save and invest is going to be very beneficial and fruitful towards the later part of our lives when we are not working. So I think, starting with a simple product like, Nifty 500 index fund with a 5,000 rupees SIP would be great. As and when, the SIP amount, as and when he increases the SIP amount, he can look at investing in flexi cap funds, mid cap funds, and even small cap funds, because, mid and small caps are equally important, to maximize in terms of returns potential over a long period of time.
Okay. Fair advice, Santosh. I hope that helps. Now, the second query is from Krishnan. Krishnan is 46 years of age. The goal is, well, lump sum returns. And Krishnan is saying that he's invested about 10 lakh rupees in a Aditya Birla PSU fund in January 2024. Now, the returns from this fund have been fluctuating since Krishnan started investing. We'll get this query on the normal screen as well. But the returns from this fund apparently have been fluctuating since Krishnan started investing. Should he switch or to some other fund, or should he stay invested? Rishabh, I'll start this with you.
Neeraj, PSU is a sectorial fund. It's going to be very cyclical. Unfortunately, he's entered at a very wrong time. January 2024 was the peak of the PSU sector in terms of price and returns. If he would have asked me this question, say probably 2-3 years back, then I would have said, PSU is the right place to be in, because the valuations were extremely reasonable at that point of time. To put it very simply, if he is in profits right now, I would suggest him to switch from this fund towards a flexi cap fund, because flexi caps would be more consistent over a longer period of time. Sectorial funds, especially PSU funds, would require precise entry and exit in terms of generating optimum returns. So if he's in profits right now, then switching to a flexi cap fund is something is what I recommend. But if he's in losses, then of course, then just be patient, hold your horses, and just wait till the fund turns profitable and then switch. Because even if you hold the product, from a long-term perspective, say like probably 5-7 years, I think the returns are going to be little moderate and disappointing, because he's entered at the peak of the price and valuation point. So just be in flexi cap funds is something what I would suggest. And if he wants to take sectorial bets, then of course entering at the right prices and valuations is something what I would suggest.
And for that, some bit of basic research around what the PSU cycle, etc., might be would be very, very important. This will not be as easy an investment as a basic diversified one would be, Krishnan. But Kshitij, I don't know what your thoughts are on this.
Very much in line with what Rishabh is saying. In fact, I will like to add that if he can invest more, then he can look at adding flexi cap or focus fund through STP route over next 5 to 6 weeks. And if he have this much capital only, then maybe if he has some losses also, still I will recommend that 50% he should switch to flexi cap and 50% he should remain in your PSU funds only. And yes, you have to time the market when it comes to your sectoral bets, because the funds, the sector has already moved up really well, and I'm sure it will do well. But yes, single allocation, that to lump sum allocation, can be awarded going further in future for his future allocations.
Okay. Point well noted. Gentlemen, both of you, thank you so much for taking the time out and being with us. I look forward to seeing you maybe next week or week after when we talk about the small cap end of the market as well, something that we had planned on talking today. But well, the queries plus flexi cap was a tall order. Thank you so much, both of you.
Thank you.
Well, that's the view on the mutual fund show. Keep in mind that the markets are trailing at just the levels that they were when we started the show. That's all the time that we have on this edition of the mutual fund show. Stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some...
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and stocks buzzing in the back of higher volumes. But before we go forward with what we have on for you in the show today, Agam, how do the markets look like right now?
Again, Amiga, very, very quiet start to the truncated trading week for now because we began slightly above the mark of 22,000 on the Nifty, and that's exactly where we are. 22,050 and thereabouts for the Bank Nifty as well, looking at a 0.5% cut, not too much change there either. And considering the Fin Nifty expiry, that's where perhaps there will be a little bit more focus at the moment. We are looking at a very quiet day for the Fin Nifty as well. In terms of the key contributors to the Nifty, it is essentially some of your larger cap names like HDFC, Reliance Industries and ICICI Bank weighing on the index. And what's keeping and giving some support to the index is L&T, Bajaj Finance, NTPC and Axis Bank to counter the losses provided by some of your other private sector banks. All in all, if you consider the broader markets, we don't have too much traction in general overall. However, there is some sort of an up move for something like the mid cap in 150 index, which is up around nearly 1%. The small cap indexes are marginally higher as well. So we're seeing gains there. It essentially is a day which belongs to the mid cap index because a lot of counters from there which are up and about in trade. Some of these would include something like a Torrent Power. That's up 6.1% as we speak, and good advances coming in, building on good volumes as well. We have Oil India as well, which is also up around 5%. That's up and about in trade. And then, of course, we also have Dr. Lal Path Labs. That's up as much as 5%. Max Financial Services also up by significantly. In fact, the advance decline ratio on the broader markets is 73 to 27, at least as far as the mid-cap 100 is concerned. On the losing end, if you consider something like a Delivery, that's under pressure. That's down 3% at the moment. And we also have Trident, which is looking at just a little bit of weakness in today's day of trade, declining by around 2.2%. But say for that, we don't have too much in terms of momentum downside. We certainly do have a lot of strength in some of these counters. So that's something that we need to keep an eye on. All in all, a fairly evenly poised day. And it is something that we'll continue to take into consideration. But Amiga, I believe you have something for us when it comes to Indian metals.
Yes, so Indian Metals and Ferroalloys, which is a producer of something called ferrochrome, which is primarily used in the production of stainless steel, is up in trade today. It's down its highs, but it was up 9% on an intraday. And when you look at the year-to-date trajectory for Indian Metals and Ferroalloys, it's up 24% year-to-date, and it's up 2.3 times in the past year itself. Now, volumes were over 5 times its 30-day average, with total volumes at 5.33 lakhs, with buyers outnumbering the sellers. Now, the latest update was the company has announced that they're going to hold a board meeting on March 29th, and they're going to consider a special dividend for FY24, and the record date set for the same is April 8th. Now, when you look at the dividend yield history, we'll pull up that chart soon. In FY21, it was 0.66%, whereas in FY23, it was 4.39%. And in the last 12 months, it's at 1.95%. So depending on the quantum of the special dividend that the company does consider, the dividend yield could be seeing, a rise in the trajectory that it has been witnessing for the past 3 financial years. And the company also received a compensation a few days back from the coal ministry itself. It received a compensation of 132 crores, and this was towards the land for Utkal C coal mine block, and it was lower than the expected of 353 crores that the management didn't mention, but they did receive it nonetheless. And when you talk about the capex plans of the company has set large expansion plans. They're going to spend 600 crores for their furnaces and 1,000 crores on their mining segment over the next 7 years. They're going to increase their furnace capacity by 33% to 384,000 tons by September of 2025. And they're also targeting a mining capacity of 7.3 lakh tons in FY25. And they're going to add 2 furnaces in the Kalinganagar. And they're also going to invest 100 crores in hybrid renewable power. And this is going to help with their revenue growth, with expansion coming into stream. And the management also expects higher ferrochrome prices, and the positive demand outlook for stainless steel is prevalent in the market. But moving on, Agam, life insurance companies have been in focus today.
Yeah, they certainly have. And of course, we have updates when it comes to final regulations on surrender value for life insurance companies. But I'm going to say no more and get in with Tarun Chugh, the MD and CEO of Bajaj Allianz Life Insurance, to have a conversation around the latest updates with respect to surrender value. And we have with us also our colleague Monal Sanghvi, who is going to lead this conversation ahead. Tarun, good afternoon. Thank you so much for joining in. And with that, Monal, it's over to you.
Thank you, Agam. Hello, sir. Welcome to the show.
Yeah, hi.
So our basic read of the surrender value regulations almost indicates that they're similar to what it was in the existing. And this has been quite the talk of the town since the draft came out in December, where the surrender value was going to go up by quite a substantial number. So what do you gather now with the existing regulations and the final regulations that have come out? How do you think this is going to pan out?
I think it's a very balanced approach that IRD has taken on the surrender values. So there are surrender values that have been changed, the special surrender values. But the modification is largely on going to impact the non-par plans where there was lower surrender value earlier. So that modification has come through. It will be largely neutral to companies. And the slight impact can, of course, be absorbed. And it will be also productive for the customers. See, if the draft regulations, when we looked at the math behind it, because this math has never been done really, is that we would have had to change our entire ALM, the way we look at our asset liability matching, because surrender values, if they start getting acquired from almost putting in the first year, means that surrenders can start almost immediately. In which case, you cannot invest a significant sum that we invest today in equity. So all these plans usually have 20 to 25% equity. That would have gone off, and we would almost have to keep it in overnight cash, which of course becomes a significant hit to the IRR or that a customer would have gotten. So all in all, I'd say it's a very balanced set of guidelines for both customers and for the insurers.
Sure, sir. So if you could help us understand what is the change now on the special surrender value that you mentioned, when exactly does that come in, and to what extent will it impact policyholders as well as companies?
So see, the IRD had talked about threshold value concept. They've replaced this with a special surrender value. The special surrender value fundamentally comes into play from the second year of the life insurance policy, and then gradually increases over a period of time. So, and over the last 2 years, almost gets to be near 90 to 100% of the entire value of the policy itself. That is significantly positive because life insurance products are largely for the long term. In fact, rarely is a life insurance product for the short term. What they've also nudged companies to do, and companies are taking stock of that, and we'll soon be coming up with a special segment of products which will have surrender possible at a very initial stage and at a very high surrender value. That category of products will be separate from the ones that you see initially. And these ones will afford more liquidity. So if a customer is unsure of his or her cash flows and wants to invest in highly liquid life insurance plans, then the second category will come into vogue and be more relevant, albeit it could have a little bit less returns versus the ones that exist today, because today, as I was explaining, it is a significant investment is made in equities that will go off in the case of the second category. Over a period of 2 years, I find this to be stabilized because we'll have data on the second category of products as well. But currently, as actuarial valuations will demand that we basically invest very less in equity in the second kind of plans.
So if I were to summarize this, does it mean that the new line of products are yet to be introduced, or do they already exist in the market?
No, they are going to get introduced. So we've had active discussions with IRDA. Sometimes you could introduce new versions of the existing products with higher surrender value, which can happen quite fast, and it won't take like long. In any case, most of these changes are more relevant from next year, given the fact that we are in the throes of our last month of the year, which is usually a highest earner in terms of customers investing as well. The tax season ends here. So this will happen soon.
From what I understand, if we have the newer products coming in, it also means that the premiums would be higher on these products, and typically there would be no impact in terms of value of new business margins on your financials?
So there'll be a slight impact, but the impact is manageable, and it's surely far lesser than the threshold value concept. And yes, you're right, absolutely, Mona, it's a good analysis that the premiums will be higher in the new category.
So overall, what do you think is the impact for policy holders? Does it mean that the people who are going to surrender early will stand to either gain or lose? I'm not able to exactly bucket them on how is going to be the final impact.
So I think the impact remains the same. What the IRDA's charges us to do further is to make more declarations, disclosures at the time of selling a life insurance policy. So if a customer wants to buy the category which has surrender values coming in later and not early in the policy years, then of course it gets better and better in terms of returns. So only positive impact. And if customers want a highly liquid plan, then of course it will be a new category altogether. So there is no such thing today.
Thank you so much, sir, for joining us today. Over to you, Agam.
Well, thanks so much for that, Monal. Of course, that's the latest update with respect to life insurance companies. Well, on that note, let's step into a short break. And on the other side, we get you the list of large trades that we want to discuss.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back to NDTV Profit. You're watching at Large Trades, and let's look at the large trades that we do have in focus today. We have something like a Mankind Pharma, Apar Industries, Phenolics Industries, as well as Dr. Lal Path Labs. And up first, we have Apar Industries, and it's jumping on the back of high volumes, up 8.6% currently. And let's bring in my colleague Anushi with more details.
Hey Mika, when coming to Apar Industries over here, the stock has seen some decent gains, about 9% of an intraday high over here, while the volumes have remained about 5 times its 30-day average now. So the stock is buzzing on back of its larger volumes over here. But let's go back to the fundamental side of the business. The fundamental story also looks quite strong. If you have to look at the last earnings itself, the revenue saw about a 1 to 2% of an uptick, while the margins gained significantly, about like 137 basis points of expansion over here, and net profit about a 28% of an uptick. Now, if you have to look at the context of the market cap, which stands at about 27,000 crore, the company's order book culminates to almost about 7,000 to 8,000 crore in between. So about 6,000 contribution coming in from the conductor side of the business, while 1,000 emanating from its cable business. Again, if you have to look at the overall picture of what is going on in the order book for the business, the US order intake had been slow, but it is now showing signs of revivals after the company has said that it has now moved on from its post-inventory rationalization. Again, this 25% of the order book mentioned will get executed post FY25. So this gives a decent percentage which would be in focus in FY25 onwards. Now on to the future outlook for the business. The cable business continues to remain strong, about a 25% of a CAGR growth expected in the course of next 2 to 3 years, while the margin profile is the one which should be in focus, wherein they are saying about a 12 to 13% of a EBITDA margin going forward, which is higher compared to the 10% EBITDA margins that they had clocked in the last quarter. Again, some meaningful capacity expansions also planned, which will lead to about 15% growth going forward in FY25. So these are all scenarios that are going in Apar Industries, which is keeping it in focus so far as we lead.
Right, Anushi, thank you so much for getting us that update. Remember that Apar Industries, which is up around 8.5% at the moment, is also trading at a new life high, and it has actually taken out a lot of the previous life highs as well, very recently made. It just keeps on going from strength to strength, and the last 6 months specifically have been very strong for this particular company. There you have it, those are returns over the last 12 months. So it's certainly been a multi-bagger of sorts. But we move on to Phenolics Industries, which is also in focus, and this is the stock which is buzzing in volumes as well. Let's get in Puneet to understand what's going on behind this one. Puneet.
Yeah, thank you, Agam. And as you rightly said, the stock is up intraday high of 6%, while volumes have been 3.5 times its 30-day average. Now, do note that in the quarter gone by, they had a revenue fall of roughly 9%, but the EBITDA was up roughly 30% compared to last year. Volumes have been a problem for Phenolics, and it's for PVC resin, which is the raw material, the volumes were down 30%, while for PVC pipes, the volumes were down roughly 10% for the quarter gone by. Now, overall, the management commentary is one of the key triggers going forward. They've said that volumes have been down due to weak agri demand, while the non-agri and the construction business has been up 15%. They say that the resin price correction, they had some resin price correction in the quarter gone by and had some inventory losses also because of that. Finally, as per some guidance in the in the con call, they said that the non-agri and construction, they estimate a growth upwards of 15% going forward, while the agri demand, they expect high single-digit growth. And finally, the infrastructure segment, which they have another segment called Plasin, which is an export business for them, has been doing good, and they don't see any kind of Red Sea crisis impact on the raw material for Finolex Industries. Back to you.
Thank you so much, Puneet, for those details. Up next, we have Dr. Lal PathLabs. It's up 5% in trade today. This is on the back of Kotak Institutional Equities, which issued positive calls on Dr. Lal PathLabs and Metropolis Healthcare. We have our colleague Varsha joining us to tell us more details. Over to you, Varsha.
So yeah, Mihika, as you rightly said, so shares of Dr. Lal PathLabs and Metropolis are up. Now this is on the back of a Kotak's report on healthcare services, wherein they have double upgraded Dr. Lal PathLabs from sell to add, and they've raised Metropolis price target as well and maintain a reduced rating for the company. Now, as per the pricing exercise done by the Kotak sees increasingly pricing sanity in diagnostics over the past 1 year. Now, latest trend across 7 cities suggests further improvement in pricing trends as well. However, they see limited possibility of volume growth as large incumbents' price remains 2x that of cheapest alternative. Also, this may not hinder volume growth for Dr. Lal and Metropolis as due to a benign competitive landscape. Now, speaking about the individual stocks, the increase in price target for Dr. Lal is after a prolonged period of stock underperformance, and as we know that shares of Dr. Lal have seen a correction of almost 15% in last 1 month. Now, Kotak attributed this correction due to exit of company CEO. However, Kotak sees that Dr. Lal has an able leadership team in place, that is Om Manchanda as MD, and appointment of Shankha Banerjee as CEO will also provide continuity. Now, in comparison to 1 year forward price to earning premium of 20% plus, Dr. Lal is now trading at discount to Metropolis Healthcare. Now, also while the brokerage has increased Dr. Lal PathLab price target, but they've also raised in Metropolis Healthcare target price to rupees 1600, but has maintained reduced rating on the stock citing fair valuation. And lastly, if you see the raise in target prices for both the diagnostic places led by the increased growth estimates beyond FY26 and as they build in lower competitive intensity.
Right, Varsha, thank you so much for getting us that latest on the diagnostic space, and of course Kotak Institutional Equities giving us that positive stance on some of those diagnostic companies. But we move on to yet another healthcare company, that's Mankind Pharma, and perhaps the biggest block that has taken place today. Let's get in Beima to tell us a little more about this one. Beima.
Right, Agam, so as you rightly mentioned, there's a huge large trade that's taken place today. Around 11.9 million shares were exchanged. Now, this was traded at around 2,160 per share, and total traded value stands at approximately 2,400 crores. The potential sellers, buyers and sellers, we don't know yet. However, sources to NDTV Profit suggest that Beej Limited can be the potential seller. It holds around 2.9% as of now. Beej Limited held around 7.46% in December. In December also they sold around 4.6%. So their stake approximately in the company at present is 2.9%. In Feb also there was a stake sale by promoters. Sheetal Arora, Arjun Juneja and Pooja Juneja sold around 1.62% in Mankind, and the stock is buzzing in trade today, where it touched an intraday low of 4.38%, volumes around 40 times its 30-day average. If we talk about the overall stock performance, well, the stock has been up 27% in past 6 months. 1 year, the stock has given around 56% returns. And lastly, if we talk about the major shareholders at present in Mankind Pharma, well, there is Hema Kepif, which holds around 2.2%. There are mutual funds like SBI Midcap 150, which holds around 1.1%, Axis around 1.2%, and ICICI Prudential around 1.5%. So by the end of the day, we'll know who the buyers and sellers are exactly. And back to you, Agam.
Thank you, Mahima, for those details. Up next, we have Adani's Ports and Special Economic Zone in focus. It's up 2% in trade today. And this is on the back of a stake acquisition in Gopalpur Ports, which is seen incrementally positive and will help it grow its market share, according to City Research. We have our colleague Anushi joining in for more details.
Right, Mihika, as you look at the company, it has been performing well in trade today, about 2% of gains. Now, this is also on the back of the Citi note, wherein it has retained a buy rating on Adani ports and has in fact picked it at its top pick going forward also. The price target for same is at 1,564, which showcases about a 16 to 17% of an upside over here. Now, again, this is on the back of the news of it acquiring up to 95% stake in Gopalpur port for a cash consideration of about 1,350 crore. Now, what Citi says is that this acquisition remains favorable, seeing the valuations that the company has picked it at, which implied about a EV EBITDA of 13 times for FY24 and 10 times for FY25. Again, with this acquisition, the company is standing at a positive direction going forward as well. Now, apart from that, this is on the one side of the business doing well, but even if you have to look at the other aspects of the business, Citi has continued to remain bullish on this one stock. Recent results also show some strong traction going forward in the logistics business as well. So again, that remains on focus going forward as well as how it would translate. Now, again, moving on, some visible market share gains that we are seeing going forward. And this is also on the back of the balance sheet, which continues to remain healthy. So a lot of fundamental factors adding up for Adani Ports, which is why the Citi has given it this rating.
Right, Anushi, thank you so much for getting us those updates on Adani Ports. A standard disclaimer that the channel that you're watching is a part of the AMG Group, which is also an Adani Group entity. But we move on and we tell you about the conversation that we've had with Naveen Chandramohan, who is the founder and fund manager at ITUS Capital, about what his outlook on the power sector is. Here's a slice of that conversation.
I'm going to make a fairly tall claim by saying that you are going to see over the next cycle maximum number of solar bankruptcies that you've ever seen. Because the cost at which and the IRR at which some of these projects are getting bid up and some of the smaller companies are setting up solar capacity doesn't make any sense on the ground, right? So end of the day, obviously, there is going to be enough and more supply that comes in because demand for the first time after a period of 12 years is growing at a CAGR of 9%. End of the day, power in terms of supply side will and should grow at the cost of GDP. Now, basically over 2010 to 2020, when you kept setting up supply and GDP was at 3.5% over a good part of the decade, you had excess capacity. And hence, a lot of the companies went into significant debt on their balance sheet, and you saw a huge amount of value erosion over the last 12 years.
And with that, we are completely out of time, but do stay tuned as we have lots more lined up on the other side. India Market Close coming up next.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards...
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment.
all you have to do
Is ask Profit.
Thanks for tuning into India Market Close. It's a day wherein the mid caps and small caps are doing much better than the large caps. We'll come up on your screen the performances, and you will see that while the index is about 1/3 of a percent or thereabouts in the red, nothing too dramatic there, but the mid cap index is up about 1%. So good going there. We have this very nice depiction of what the rates are versus the intraday move in half a screen, and that will also come up. But the small cap index too, maybe not as strong as the mid cap index, but has performed well, and which is why I reckon that the market breadth currently would be at the best position of the morning thus far. Look at that. It started off well, then kind of slipped a little bit, and while the advanced decline ratio is still in the favor of the declines, it's much better than how it was for a better part of the trading day today. Bring up the heat map and show you what's happening at the large cap end of the market at least. More red than green, but there are individual stocks which have done very well for themselves. So Britannia, after starting off weak, is up about a couple of percentage points and amongst the top 3 names. Adani Ports up about a couple of percentage points on the acquisition. Bajaj Finance is the top performer and a far cry from the 6200, 6300 levels that it was trading at some time back. There is some traction in PSUs by and large, because you're seeing from BPCL, NTPC, ONGC, Coal India, that whole clutch of stocks do well. What has not done well? Autos taking a bit of a backseat after being in the driving seat earlier in the day. There is iShares, which is amongst the top losers. There's Reliance, Infosys, ICICI Bank. So clearly, the heavyweights are down in trade. And just before I hand it over to Samina, if you just look at the contributors list today on the Nifty, the weight contribution of the Nifty on the losing and the gaining side, you will see heavyweights here. Reliance, HDFC, ICICI, Infi. Between them, they haven't corrected too much. But whatever little they have corrected is leading to this pressure, a slight pressure that we've had on the index today. But Samina, the broad end of the spectrum, and while the advanced decline may not be depicting that, the indices by themselves have done really well.
Yeah, not too bad. The broader markets are seeing outperformance as compared to the benchmark. Remember, this is a trend we've gone back to after many, many weeks. Remember, after that whole blower that happened in terms of broader markets being very expensive, it was the broader markets that was underperforming the benchmark consistently. Today, like we said, is better and different with the stock-specific trade, smaller sectors that are actually picking up trader interest in the session. So on the face of it, may not look great, but it's actually not a bad construct in terms of today's trade. Couple of counters that are moving the index today and have seen a good go from the get-go in early trade this morning. Uno Minda tops the list on that. Uno Minda has had a pretty good run. They've had a partnership where they've signed up an agreement to manufacture and sell EV battery chargers. They've also gotten upgraded on back of that. So all those factors really helping Uno Minda in trade today. The stock is off the day's high point. It's still looking very good in terms of volume play. You've got Avenue Supermart. A bunch of brokerage upgrades have come in with upgrading Avenue Supermart, on back of which the stock sees a 4% up move. Well, Finolex is topping your gains in the list today. There's no apparent reason of why Finolex is doing well, but the stock is up and about. It's up 6% as we see it. Interglobe Aviation, again, brokerage upgrades there, 25% upgrade, 25% upside on Interglobe Aviation from current prices, what UBS believes, on back of which the stock is looking very, very well placed, consistently seeing buying from the get-go. This morning, the stock is up 6%. Private insurance players are having a good day of trade. So you've got Max and HDFC Life both looking pretty good in today's day of trade. Gujarat Pipavav is the other big gainer. And you've got GM and IFL on the sell side in today's trade on back of expectation or back of a special audit that is expected to be undertaken by the regulator starting 11th April. So those are some of the big movers and shakers. Indus Towers continues to do well. It's a 4% up move as well. After a 9% rally the stock saw last week, continues to see traction in today's day of trade. So Neeraj, stock-specific trade, and I think that's what's driving this trade. Lots of opportunity for traders to make money for sure.
Certainly, let's try and enhance those opportunities. Get in Kunal Shah, Senior Technical and Derivative Analyst at LKP Securities with his thoughts. Kunal, good having you. Thanks for taking the time out. Kunal, this slightly divergent performance within the indices, despite the fact that the overall market breadth isn't positive, but as an index, mid caps and small caps doing well. How do you analyze the trade on the specific indices, Nifty, Bank Nifty, or anything else?
Good afternoon, Neeraj. I think this is the truncated week what we have, and because of this truncated week, we will be having moves where the index will be a sideways, but mid cap and small cap will continue to gain some traction. So I think the entire week is going to be like that. I don't expect any big momentum coming in either of the index, that is Nifty and Bank Nifty. My range for Nifty is 21,850 and 22,200 on the upside. So I expect this range to be maintained. And for Bank Nifty, on the higher end, 47,000 is an immediate resistance. So once that is taken out decisively, then we will see some short covering coming towards 48,000 on the upside. But my sense is even Bank Nifty would be stuck in a broad range, which the mid cap and small cap is where we'll be seeing the action for the next couple of days. So I'm bullish on the mid cap and small cap space. But for the headline index, I may see some consolidation move in the coming days.
Kunal, the stock of the afternoon is Indigo. Started the day pretty well, built on to those gains. Fundamentally, of course, there are enough and more news triggers indicating a 25% upside from current level. On the charts, does Indigo look good? Is it still a buy at these levels for trading gains?
Yes, I think definitely even at the current levels, the stock looks very attractive. The stock has given a fresh breakout, and it is up by more than 5%. So obviously those who have already purchased it from the lower levels continue to hold it. For a fresh entry level, if you get any dip, that would be ideal. Since the headline index is a little bit weak, you might get some opportunities on the lower end. 3450, 3460 is an ideal level where probably one can initiate fresh long positions. So 1% downtick move, what you get, that would be an ideal point to enter again. That is the support zone. I expect Indigo to go toward the levels of first is 3,650 and second is 3,725. So I think a good upside even from the current levels is visible from Indigo.
Right, that's the technical view coming in on Indigo. And like we said, a list of brokerages are gung-ho on Interglobe Aviation. UBS expects a 25% upside from current levels. Beima is standing by with more on that. Beima, it looks good. It's looking good rather for Interglobe Aviation. At least that's what the brokerages think.
Absolutely, Samina. So a lot of brokerages came in for Indigo today, and they've maintained bullish stance. I'll start with Citi. Well, Citi has maintained buy with a target price of 3,700. They've said that the supply growth and the demand acceleration will double the Indian aviation passengers by FY30. The addition of A321 XLRs will expand the serviceable radius and aid further passenger growth. Then there was Morgan Stanley, which is maintained overrate with a target price of 4145. Which is with an upside of 25%. Well, they've said that the company will add one new aircraft every week in 2024, and management aims for a double-digit capacity growth in FY25. There was also an MK note which maintains an ad with a target price of 3,500. They've said that the aircrafts on ground will peak in the next 1 to 1.5 years. And lastly, we also had Motilal Oswal, which believes and maintains neutral on Interglobe Aviation with a target price of 3,110. They said that the firm is working to increase its international presence by entering into strategic partnerships, and India could become the third largest aviation market by 2035, and this could benefit Indigo overall. So this is the overall view of what the brokerages are making out of Interglobe Aviation.
Well, Beima, stay on, because I mean this is clearly strong. And you know, the beauty about the Indigo move today, it's not that it started off 6% higher. It's had a very nice trending day today. It gave ample opportunity to traders to go in, buy the stock, and now enjoy as it's trending higher and closing in, or seems to be closing in at the high point of the day. You know, the other, and Kunal of course gave us his view on Interglobe Aviation. The other one in focus today is Avenue Supermarts, because that also is surging. Like, pull up the intraday of Avenue Supermarts and you'll see that 4%, maybe not as much as Indigo, but it's surging very, very well. And I'm guessing here too, there is some positive commentary coming in, as well as the fact that the stock has not done anything in the last 2 years, which might be giving a bit of a base effect as well. But Beima, what our brokerage is saying about Avenue Supermarts?
Right, Neeraj, so I'll start with what ICICI is saying about Avenue Supermarts, where they've maintained an ad rating with a target price of 4,800, which is a 12% upside from its closing price as of Friday. Well, they say that DMart's revenue performance has been stable at between 18 to 21% of 4-year CAGR, and despite of the lower contribution from their margin accretive segment of April, their margins have remained stable at 5.6% in 9 months FY24. And the performance of Avenue Supermarts is driven by premiumization in non-food segment and improvement in the distribution efficiency. They also said that DMart is turning conservative in terms of offline retail expansion, which will aid growth in the near-term future. There was also a CLSA note which is said that last week it initiated buy with a target price of 5,107. They see that the total addressable market will grow by $2.3 trillion in the next 25 months, and they see that DMart's share in this will rise from 1% at present to 5%. And they've also seen that they're also saying that DMart's store will increase 3 times by FY34 from 341 at present, and they see potential over 7,000 DMart stores in the next 25 years. Overall, if we talk about analyst recommendations, well, 12 say buy, 5 say hold, and 9 say sell. So this is the overall brokerage view of Avenue Supermarts.
Right, that's the call coming on Avenue Supermart. It's having quite the field day in today's trade. Kunal, do you track Avenue? It's taken a while to make moves, but today it is turning out to be one of those days when the counter is drawing enough and more attention from traders. At the current price, is there a trading opportunity, or it's a missed one here?
Yeah, I think majority of the moves you can say has been missed here. The upside next resistance on the technical chart for DMart is at 4,600. So 4464 it is currently trading at. So even if you look from the current levels, there's good 150 points upside still there, which is almost equal to 4 to 5% over here. So I think those are already holding it from the lower levels, continue to hold. There's still upside left. For fresh entry, wait for opportunities on dip. Now the support for the stock is at 4,400. So if you get the stock in the range of 4,420 to 4,430, that would make a good risk to reward opportunity for you as well. So accumulate at those points at 4,420, 4,430 levels. Look for targets of 4,600 on the upside.
Okay. And before we hit that break, Kunal, what are the stock recommendations for the afternoon from your end?
See, my stock recommendation first would be Finolex Cables. I think a very beautiful technical setup what we have got here. The stock has given a double bottom breakout on the technical charts with a good rise in volumes as well. We can expect a good up move in the stock in the coming days as well. Finolex Cable currently trading somewhere around 960, 950 zone. So one can buy at the current levels or any dips towards 950. The downside stop loss should be placed at 890. I'm looking for targets of 1100 on the upside. So this will be a bit of positional call, but I think a very good setup on technicals what you have got and a confirmation of a breakout.
Right. Kunal, stay with us. Those are a few of his buy calls, trading opportunities, stocks like Indigo, Avenue, Finolex grabbing quite a bit of attention in trade today. We'll take a quick break. We'll come back. We'll talk more to Kunal and understand better about what is happening in the markets this afternoon as we gear up for the last half an hour of trade.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing. All right, back with India Market Close right here on NDTV Profit. While we've spoken about a lot of stocks which have gained today, and yes, a lot have gained quite significantly today, a few losers. Hindustan Construction Company, for all the fanfare, is down about 5.5% in trade today. So that's not done all that well. There is weakness in Adani, that's down about 8%. JM Financial and IIFL have looked slightly wobbly in the session today. So both of those have corrected. And real estate, we mentioned at the start of the day as well, some specific stocks. Brigade, for example, is down about 3.5%. But some of the others too. After having a very good run the whole of last week, Brigade, Soba and some others have pulled back a bit. So before we do that conversation on gas, Kunal, just a quick word on real estate. Very weak performance in the week before last. Last week it bounced back, the index up 5%. Today again a bit soft. How do you trade this?
Yeah, I think there is going to be consolidation in the entire real estate space after the massive outperformance what we have seen in the last 1.5 to 2 years. And I think it will be now a stock specific approach which one should take when it comes to the real estate space as well. Two stocks which I would like to highlight over here from the reality spaces. One is DLF. And I think that is ready. The stock is ready to hit its all-time high mark as well. I think DLF is something which is looking very bullish even from the current levels. And second, a stock which I would like to highlight over here is Prestige. I think after a decent up move, we have also seen a decent correction in the stock. And I think the stock on a fundamental perspective is also available at a very reasonable value. Plus on the technical front also, I can see a decent upside from the current levels as well. So Prestige and DLF, these are the two stocks which I'm bullish on from the real estate space. The entire space might go into a consolidation space, but within that space, you will have outperformer, and DLF and Prestige are my top two picks.
Well, certainly doing well, and the real estate index per se has done well, but a clutch of those stocks have come off as well, so that's to be kept in mind. What's done well though is the gas companies, and GAIL and the likes, GSPL, etc., are all up in trade today. Now, one of the reasons could be, you could argue that one of the reasons could be that spot cargoes for LNG are trading or rather the prices are trading close to 3-year lows. Does that materially benefit some of these companies? And that's the question that we pose to Harshvardhan Dole. He's Vice President at IIFL Securities and tracks this whole space very closely amongst other things. Harshvardhan, thank you so much for taking the time out and speaking to us. Good afternoon, Neeraj here. What have you made of the drop in pricing for LNG, and whether this is materially beneficial for some of the companies that we're talking about?
Hi Neeraj, thanks for having me on the show. So yes, the LNG prices are at couple of year lows, and looks like the outlook will remain fairly benign for the next foreseeable period in time. Now, India should be a net beneficiary of this because we have a huge latent demand, and more so because now the government is trying to persuade a lot of users to move to this clean fuel. And to that extent, whosoever is engaged in essentially transportation or trading of LNG will be actually in a sweet spot. Having said that, I think companies like GSPL, who actually earn a utility kind of model, may not be directly gaining out of it because at the end of the day, they earn a regulated rate of return. However, companies like GAIL, who actually consume natural gas either for their own or for trading purpose and essentially market and earn margin thereof, may stand to gain disproportionately. So between these two companies, I think somebody who can benefit a lot more is certainly GAIL.
Okay. I hear you use the term disproportionately, and I'm guessing you don't use it loosely. So could you explain, Harsh, how do you think of these kind of gains for a company like GAIL, considering the businesses that it is present in, and what does this immediate price fall might mean for them?
So GAIL actually gains through weak LNG on account of two things. One is they have an active trading LNG business, whereby they source LNG from various sources internationally and sell in the domestic market. Now, at a time when these LNG prices tend to be weaker, their ability to source it from diverse sources at a very, very competitive rate kind of goes up. And since India is sort of energy deficient country, they're able to mark it up fairly well to gain in terms of the trading numbers. So what GAIL management had guided for the whole year for FY24, they've actually managed to deliver in terms of EBITDA in 9 months alone. And to that extent, there has been a marked uptake essentially in the overall EBITDA for GAIL. If the outlook on LNG prices sustains, I think there will be further upgrades to their LNG trading business, which is at least 30% of the total profits. So that is one business where GAIL gains. Second is they also use LNG for their petrochemical business. Here, the gains might actually be much lesser because a lot depends on what the petrochemical prices might be. And if there is a recovery at a time when raw material prices are weak, then there is one more leg for GAIL to see an upgrade in terms of overall earnings. So in my opinion, while some upgrades have happened, if the LNG weakness continues, there is further upgrade likely in FY25 as well as 26.
And are you, based on the assumptions that you might be making, are you upgrading or have you recently upgraded GAIL, part one? And part two, while GSPL may not be a major beneficiary, are valuations exciting enough for you to maybe give a constructive call there too?
So I'll take the second one first. Well, GSPL is certainly a good franchise. But again, the growth out there has been pretty muted on its own. Whatever earnings growth that they've reported has largely been on account of the 57% stake that they own in Gujarat Gas, for which consolidated earnings look far, far better. On its own, I think the earnings will look much better if they start spending more on the network and get permissions from the regulator to lay more network on the ground. I think that's the key event for which the stock is kind of trading cheap. I will wait for the event to play out and then take a decisive constructive call. With regards to GAIL, Well, GAIL has always been one of our preferred trading ideas in the sector because A, it was cheaper, and B, the weak LNG actually benefits GAIL a lot more than anybody else in the sector. So we have always liked GAIL, and we think that it is a good trading idea in the short to medium term.
Harsh, this is really good. Thank you for patiently explaining to us what this could mean for a very specific subset. Look forward to talk to you on the broader space pretty soon as well. Well, that's the view from IIFL Securities and GAIL, the principal beneficiary, and you heard the rationale there as well. Very quickly, Kunal, GAIL at the highest point of the day or thereabouts, would you trade this one?
So I think if we look at the long-term chart for GAIL, the long-term chart looks very good. GAIL has been trading in an uptrend with high low formations. With the recent market correction, what we got in the mid-cap and the small-cap space, you could see that GAIL has not corrected even much. So I think there's a good upside even from the current levels. Specifically in today's trading session, there has been a breakout with volumes. The past 1 week high has been surpassed with volumes, plus the 20-day moving average has been taken out. So I think a good time to enter into the stock from the current levels. 190, 195 could be an immediate target. And for a positional basis, it can also head towards 210.
So the word coming in on GAIL. Another space that is doing pretty well in the markets today is the diagnostic stocks. Stocks like Dr. Lal's is up and about and trade with a gain of over 6%. We believe, I guess the day does belong to brokerages and their calls because everything moving in the markets is largely being led by brokerage calls. Kotak Institutional Equities now has issued a positive call on Dr. Lal Path Labs and Metropolis Healthcare. Varsha is joining us to tell us more. Varsha, why is Kotak getting excited about this space?
So right, Samina, so as you rightly said, so shares of Dr. Lal Path Lab and Metropolis is up on the back of Kotak's report on healthcare services, wherein they have double upgraded Dr. Lal Path Lab from sell to add, and they've raised Metropolis price target as well, maintaining a reduced rating. Now, as per Kotak, a pricing exercise, latest trends across 7 cities suggest further improvement in pricing trends. However, Kotak sees limited possibility of volume growth as large incumbents' price remain 2x that of cheapest alternative. Now, but this may not hinder volume growth for Dr. Lal and Metropolis as per Kotak. Now, this is due to an increasingly benign competitive landscape. Now, speaking about the individual stocks, the increase in price target for Dr. Lal to rupees 2,360 is after a prolonged period of stock underperformance. Now, shares of Dr. Lal has seen a correction of close to 15% so far in 2024. Now, Kotak attributed that the correction was led by exit of the company's CEO. However, brokerage believes that Dr. Lal has an able leadership team in place with Om Manchanda as MD, and the appointment of Shankha Banerjee as CEO will provide continuity. Now, in comparison to 1 year forward price to earning premium of 20% plus, Dr. Lal is now trading at a discount to Metropolis Healthcare. Now, while the brokerage has increased Dr. Lal price target, it has also raised a Metropolis Healthcare target to rupees 1,600, but has maintained its reduced rating on the stock, citing fair valuations. Now, the raise in target price for both the diagnostic players is led by increased growth estimates beyond 2026 and as they build in lower competitive intensity. So, this is the reason we are seeing uptick in these diagnostic stocks.
Right, Varsha, thanks for that. That's what brokerages believe the play in diagnostic companies is. Kunal, very quickly before we slip into a break, is there any of these stocks that you like? Dr. Lal Path, Metropolis, they're all up and about.
I think the entire lab space had witnessed a sharp correction from the higher levels. But whatever bounces, what we are getting from the lower levels are not getting sustained. Again, we have got a bounce in today's trading session, but how sustainable this bounce is a question for me. So I think if I talk about Metropolis in particular, the stock has taken a support at a rising trend line, but it is very important for the stock to sustain above the mark of 1600. So earlier also the stock had taken a support at those levels, but again, it is not able to maintain it. So if for 1600 we close today above it, and we are able to sustain above this mark of 1600 for a couple of days, then we might see some attraction coming towards levels of 1700, 1725. So a good bet to take at the current levels on the long side because of the risk reward ratio but this is a space which has been very vulnerable, and we don't see any consistency coming in the near term. So if it stays above 1600, one can continue to be long, looking for targets of 1725 on the upside.
Right. Kunal, sure. Stay with us. We'll take a break. It's getting to 3 o'clock. We're gearing up for the last half an hour of trade. It's not been a bad session. We'll take you through all that and a lot more on the other side. So stay with us.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy one.
Welcome back. You're watching India Market Close. We've got 30 minutes to go. It's looking like an okay day of trade. The broader market's not doing quite a bit, actually. The stock-specific action is what's driving trade. But remember, it's a holiday truncated week, and it's also the monthly F&O expiry. Agam is standing by with more on the futures and options picture. Agam, what's it looking like? Not too bad. I think today's market has given traders a lot of opportunities to make money.
That's true, Samina. Specifically, if you are an options seller, you are certainly making a lot of money today because it's been a smooth ride, a smooth decade through the course of the day without any large or sharp movements on an intraday basis, which means that, it's been a fairly quiet day as well. What stands out for the Nifty, though, a continuation of what we've seen over the past 3 to 4 sessions is further unwinding in open interest. This time, once again, about another 10% shed in OI as far as March futures go. I reckon that this is largely on account of the rollover shifting through towards the month of April. Though that said, we are about a 0.5% cut for the Nifty, still hanging on around the mark of 22,000. The Bank Nifty, the futures, again, of course, this number will, we're looking at about 2% increase in OI, but I reckon that at the end of the day, we will see a decline in the March futures as well, even as we start seeing positions being taken on in April and rollovers taking over as well. But of course, the spot has come up by around 0.6%. That brings me to the options market. As we move into the final 2 expiries of this month, and do remember that from this month onwards, even on the monthly expiries, the Bank Nifty and the Nifty will have separate own expiries, which means that tomorrow we are moving into Bank Nifty expiry. But for the Nifty, keeping an eye on still around the 22,000 mark. We are looking at a wide range for now, 21,700 on the lower end and on the higher end, 22,500. Even in terms of change in open interest, or your overall distribution, we continue to see 22,000 as the one with the max OI at the moment. Of course, on the higher end, the 22,500 call also will give you a little bit of a resistance of sorts. But as far as your Fin Nifty is concerned, now, well, we are around 20,600. So a lot of these markers are completely out of the picture. Let's move on and talk about stocks then. And well, we do have a lot of stocks in focus, where in fact we have longs in Manappuram Finance, HDFC Life and Metropolis. Info Edge and Godrej Consumers looking at some amount of shorts, and in terms of stocks which are seeing unwinding, that's where the numbers will look larger because of naturally rollovers. Well, we do see short covering in Laurus Labs and Muthoot Finance. It's a wait and watch as to what kind of traction the April series brings for a lot of these stocks. And I reckon that, well, from today and tomorrow onwards, a lot of the focus will shift towards April as well.
Okay, thanks a lot for that, Agam. So that's some stocks to keep an eye out, and we'll keep an eye out for that, but have to mark the flashes on your screen as well. Zee Entertainment, the board has constituted well, a few things, amongst other things, a special panel to review the management's performance, also forms a 3M program, which is a monthly management mentorship program, targeted margins proposed by the MD and CEO, and so on and so forth. Music business, a separate vertical. So they are trying to do multiple things, but the stock price doesn't seem to be really benefiting from anything whatsoever. The deal called off was the big bummer for them as well.
It would be interesting, Neeraj, to see what the stock was trading at pre any whiff of the deal, right? Whether we've gone back and returned to those levels. Because post the deal, the stock rallied up. But from what it looks like you said, no matter what is said and done, there's just nothing that helps the stock at this stage. But whether or not it's gone back to those numbers would be interesting to know.
I think below. So it started rallying from, if I'm not wrong, 160 all the way to
116 or 160.
160, and I think now. So if you pull up the last 12-month chart, viewers, we'll tell our team to do that, and then we'll get in Vinit Bulinshkar's views on this. But if you pull up the 12-month chart, look at the volatility there. From 160 went up all the way to 280 or 290, and from there it's just crashed. It's currently trading at 140. Vinit Bulinshkar, any thoughts on Zee, and can something rescue this ship?
I don't think that there is any positive encouragement in this stock as of now. So you have corporate governance issues, you're facing some very stellar competition where you need a lot of funds. And your pricing power is going to be determined by what the competition is charging you. And if you want to do content, which is superlative content, you have to invest. So I think they're going to be a little bit on the defensive side. And I expect this stock to move gradually down toward 100, 110 levels.
Well, clearly under pressure, though, Zee Entertainment 139 and counting, and not doing that great. The fundamental, the positives of today, and we've spoken about the charts at length on these stocks, but fundamentally, Vinit Bulinshkar, in a falling market, for Interglobe Aviation to do what it has done is nothing sort of exceptional. We've heard the brokerage calls already. Would you be a buyer in Indigo, or would you look at other aviation opportunities? It could be a SpiceJet, it could be a GMR, airports, infra, it could be something else.
So we like Interglobe Aviation. Obviously, they have the business bandwidth, they have the market shares, and they are well tuned to take part in the overseas operations also, which will drive their margins further. So we believe that this company is well placed to milk this kind of situation where you have limited competition. SpiceJet is getting their act together. They struck a deal recently. I was not too sure about the numbers. I couldn't count but I believe that if that company can get its act together, then this stock can do some spectacular things. So this would be a very high risk, high reward kind of trade for me as far as SpiceJet is concerned. But if you want to go with safety, surety, I believe that Interglobe Aviation is the company to be in. As far as airport plays are concerned, I think there is one small SME play called Avalon Technologies, where you can have a look. This SME counter, and they specialize in playing your airstrips. So they do not have a lot of competition out there. So that is one company that we like. Apart from this, GMR Airports, and we also like Adani Enterprises because of the incumbent play of the airports listing happening within a year's time.
The better way to play the airport game is potentially, like Vineet said, through Adani Enterprise, which is an incubator for Adani airports. Vineet, Avenue Supermart, it's taken its time, but today there have been a whole bunch of brokerages that are fairly constructive on Avenue Supermart, and you're being able to see that excitement in the counter. From a medium-term sort of time horizon, Avenue Supermart is a good value buy, you think?
See, I believe that their econometric modeling was very, very strong. Unit economics were very strong. They were only suffering on the fashion business, which was seeing lower margins. But with retail and rural spends picking up, good, Rabi harvest 8% higher, I think this is going to play out, and that is going to augment the margins. And this is what is causing the turnaround in the stock. I think a 20% upside from current levels over a year's time is what we'll be looking at.
Okay, now watch out for Avenue Supermarts as well. We've given you both the technical and the fundamental call. Just trying to look at stocks which have had some price movement on the back of volumes jumping up as well in the session. There's a small stock called Deep Industries which has gained yet again and is up on very high volumes, so watch out for that. We've spoken about APAR Industries, and look at the up move in APAR Industries today, both on price and volumes. It's now trading at 9.5%, almost 10% higher for APAR. Has it hit just about that circuit levels, but a very, very strong up move that has come into APAR Industries, so that's the other one to focus on. And then there are others like PVP Ventures, or for that matter Max Health, which have had a good move, and a Time Technoplast, which is up about 11% as well. But APAR clearly right up there. RR Cable on that brokerage call, Samina was saying about how today has been a brokerage call day, and RR Cable is no different. Very strong move there on the back of this as well. Just a quick word on any of these names, Kunal, that you may have spotted, particularly APAR Industries or let's say a Time Technoplast.
See, I think if we look at Time Technoplast, that is one stock which looks very interesting on technicals. The reason being is, if we look at a long-term chart, that is the monthly chart for it, it is a classic double top breakout what we have got from the stock. So I think there's good upside available even from the current levels on a positional basis. Already the stock has rallied a lot, so if you are holding it from the lower levels, continue to hold it. For fresh entry, the resistance on the higher end, which was placed at around 240. If you get at those levels, that would be a good opportunity to enter long. So 240 to 235, keep it as a fresh entry range. One can look for positional targets of at least 300, 320 in the near term, which is like almost 20% on a positional basis. For a short-term perspective, one can immediately look for at least 265 to 272 on the upside.
Right. Well, that's the call coming in on Time Techno. Well, let's move on from there. And Popular Vehicles is the second automobile retailer which to get listed on the exchanges after Landmark Cars. But of the two, which one should you be betting on? Puneet has done some research on this and is here to present us with the analysis. Puneet, what is a better bet if you want to play the space? Landmark, or is Landmark topping the list, or do you have something else?
Yeah, thanks, Amina, for that. And as you rightly said, the second listed space in the as an auto retailer after Landmark. Now, do know that Landmark listed on the bourses in December 2022 and has been up 55% since those levels. Now, if we just look at what kind of brands do these automakers offer. Now, for Landmark specifically, it works in the premium to luxury space, where it works with brands like Mercedes, Jeep, Volkswagen. While for Popular Vehicles, They operate in the mass to premium space, which where they cover brands like Maruti, Honda, and also have a couple of showrooms for JLR, but that is at a very lower base. Now, moving on, they also work with someone like Tata Motors and Daimler in the commercial vehicle space. And going forward, we'll see the other aspects they work in. Now, out of the two, which one should you work for? Now, specifically, the luxury penetration in India for passenger vehicle is very low at just 1% of all passenger vehicles sold in the country. So for the last calendar year of 2023, there was roughly just 47,000 vehicles sold out of the 40 lakh vehicles sold in the four-wheeler space. Now, moving forward, when we look at the kind of revenue split both these segments have, for new car sales, which is primarily in the business they operate in, for Landmark, it's up 77% of all revenues come from new car sales, while for Popular, it's at 68%. Now, do note that the new car sales is a lower margin segment which is an industry-wide phenomena. And the interesting bit is here, which is highlighted in blue, which is the after-sales market. Now, that's roughly 20% for Landmark, and this is a very high EBITDA margin business of roughly 18 to 20%. And for Popular as well, we see that segment of after-sales is little lower compared to Landmark. And as you can see, while for new is just 2.4% EBITDA margins, this was affected in Q1 due to lower launches. We see that after-sales is high for Landmark at 18% EBITDA margins. Moving forward, the same thing for Popular. We see that new car sales has lower EBITDA margins of roughly 2.7%, while after sales, just similar to Landmark, is at 19%. So the after sales segment is key here to watch. And the main thing for your Landmark has a higher after sales segment. They also have a pre-owned segment, which both these car makers operate in, but we don't have any kind of EBITDA margin data for that. But it is supposedly higher than the new car vehicles. Moving on, we see that the percentage of sales for Landmark as per the auto OEMs. Now, what this means is that for every 100 cars the Mercedes sells in India, 16 are almost sold by Landmark. We see that the other, as per Honda, Jeep, Volkswagen, all have higher shares. Now, Jeep is another notable, where they sell 24 cars out of every 100 are sold by Landmark in India. While we see, comparing the outlets, we see that Mercedes has roughly Landmark operates roughly 21 outlets for Mercedes in India. And we can see that the share is increasing. These are the top 5 for Landmark. We'll see the top 5 for Popular next. While we see this is a marked shift. Now, Maruti is one of the key segments that Popular operates. Now, they have roughly 64% of sales are of Maruti Suzuki. So that's one big margin, and that operates in the mass to premium segment, so lower average sales. For Honda and going forward, Tata Motors CV is one of the key which is up at 13 outlets, while Bharat Benz, which is the commercial vehicle of Daimler, is roughly at 8. Moving on now, roughly there are 117 outlets that Landmark has versus 130 of Popular. So neck and neck, both are quite similar. Now, this is the most important slide. Now, if you can see the revenue, Landmark is roughly just 50% lesser than something of what Popular does. But look at the gross margins, look at the EBITDA margins. Gross margins, they are at 20% for Landmark versus just 15% for Popular. So even though on a percentage basis, when you see the number as a whole, it just does look lesser for Landmark, but when you take it as a percentage, so 304 crores on 1400, roughly 20%, that's the higher gross margin, and that translates to the EBITDA margins as well for Landmark, which is one of the key segments. Finally, moving on, as you can see, 20% for Landmark, 15% for Popular, and that's where we see the valuation difference. And at the end, as per an ICICI Securities report, Landmark currently trades at roughly 39 times its current price to earnings, while Popular, which we have just taken numbers from, its DRHP, is at 22 times. Interestingly enough, 2 years forward, FY26, Landmark trades at 22 times. So that's where the valuation differential is. The market is giving a higher premium for Landmark cars, but that's the bottom line for which we'll see, and as to which one will take the baton forward. Back to you.
Indeed, Puneet, it's interesting given that only 1% of luxury cars sold are in the luxury segment. But Kunal, you want to do this on the charts? I know not too much data given that some of these are very recent listings. But Landmark versus Popular, what looks better on the charts? And of course, then I'll come to Vineet for a fundamental view too.
Yeah, I think if we look at landmark cars on technical charts, there has been clear-cut a top which was made at 900 mark. And post that top, we have seen a decent correction towards 700 levels. Now the support for the stock stands at 680 zone. So we are currently trading at 690. So we are at a very critical support zone of 680, 670 zone. So at the current levels, I'll be in fact a buyer in this stock for a contra bet where one can initiate long positions as well. 690, 680 has been typically a zone from where earlier also we have seen strong buying with volumes as well. So I think a good risk to reward ratio at the current levels as well. So one can buy at the current levels, keep a stop loss of 670 on the downside on a closing basis because at the support level, closing basis stop losses are very important. So 670 as a stop loss, and one can again look for a pullback at least towards 740, 760 zone on the upside.
Vineet, do you have a preference? Do you even like this space, landmark versus popular vehicles? If you had to buy one stock, which one would it be?
Well, definitely landmark cars, because we expect a faster growth of, foreign branded vehicles, number one. So we expect this segment to sustain growth. Second is we expect margins to move higher because, only 20% of the business comes from servicing. And here we expect steady growth in margins. And, the used car resale business is also quite picking up quite nicely. So keeping all these things in mind, I think that landmark cars provides you with a better bang for the buck compared to popular vehicles.
Right. Vineet, you want to recommend stocks to our viewers? Anything that you like specifically? I know you can't make daily calls that are fundamental in nature, but tactically, any of these counters that have caught your attention that you're adding to your portfolio at this stage?
So Adani Enterprises is one. I keep talking about it. So apart from that, SBI looks very strong. We like SBI. We think that in FY25, the stock could probably be one of the best banking plays. Apart from this, we have spoken about Indigo, Interglobe Aviation. We like Philips Carbon Black. We believe that the company is doing a very strong turnaround in terms of becoming a specialty chemical play. And recent forays into batteries is also very encouraging. So we expect these few stocks to do very well going out into the new fiscal.
Right. Talking about Adani and the group itself, sustainability is also the buzzword as India guns for growth in the ever-changing geopolitical scenario. And Gautam Adani has announced that Adani Green is aiming to produce 45 gigawatts of renewable energy by 2030. He was speaking at the inauguration of the Energy Revolution Gallery at the Science Museum in the UK.
We are the bridge between generations. It is our duty to take care of our planet, not only for these generations and the next, but also for the generations to come.
No, the statement is not from the recently released and much talked about Netflix sci-fi drama Three Body Problem, but Gautam Adani, the chairperson of the Adani Group, laying out the need for sustainability while inaugurating a new science museum gallery in the United Kingdom. The Indian billionaire spelt out the near-term plans of the world's leading solar power developer and India's largest renewable energy company, Adani Green.
We are also aiming to reach 45 gigawatt of renewable energy by 2030. This will be like providing clean energy to almost every house in England.
Adani also told the gathering that Khavda in Gujarat will soon see the world's largest renewable energy park come up. It will have a generation capacity of 30 gigawatts of energy and is spread over an area of 538 square kilometers, an area 5 times bigger than Paris. Bureau Report, NDTV Profit.
Well, that was Gautam Adani unveiling his plans for green energy. A disclaimer, NDTV, the channel you're watching, is a subsidiary of AMG Media Networks, which is an Adani Group company. Well, Kunal, we've got another 7-8 minutes to go before we wrap up trade. Any buy today, sell tomorrow, sell today, buy tomorrow trades for our viewers?
I think what we discussed on the show as well, I think the reality as a space has specific counters which will continue to do well. From that pick, my would be DLF, even at the current levels. So 874 is currently where DLF is trading. So one can initiate longs at the current levels. Keep a stop loss of 850 on the downside. Look for first target of 910 and second target of 930 on the upside.
That's a few of the buy trades coming in from Kunal on the charts. We've highlighted most of those counters that are doing well, but another space, Vineet, I don't know whether you've been tracking OMCs recently. There's been so much back and forth from being very expensive to getting very beaten down to crude now at 87, the dollar looking a lot stronger. The uncertainties have only sort of multiplied for OMCs, even though they probably are probably the most cheap, the cheapest PSUs currently available. Any of those OMC names you're constructive on, Vineet? Vineet, that's for you. OMCs, is that a space that you're tracking or you like?
We are very positive on BPCL as well as HPCL. BPCL is our preferred play, and we believe that if you do discounting and or you use your traditional ratios, we believe that stock price of 1,000 is what the stock price should warrant over the next couple of years. And so we are quite positive on this. And if you look at it even from a perspective of how the business model of the companies are changing, they're getting more into green energy, their spends are getting more leaner. They're doing some of the largest capex, keeping in mind India's requirements. So, and they're good dividend plays. So, what PFC and REC were last year as a play, I think BPCL and HPCL are my favorite plays on the PSU basket.
In fact, we did get a chance to catch up with the Petroleum Minister Hardeep Singh Puri. And let's listen into what he had to say about the performance of OMCs in that conversation.
Change is staring you in the face. Suddenly the public sector, I'm talking about perception now. I can come to individual companies, and I'd be happy to share one or two examples. Public perception used to be that public sector companies are like the bureaucratic setup of the rest of the government. People come to office at 9 o'clock, run away at 5 o'clock, they are risk averse, they don't go out and grab the challenges which are available, and by and large, and there are some other allegations that the oil public sector companies or the OMCs are also excessively amenable to some of the big private sector giants, that they are able to control them. I think the good news is that public sector in general is doing very well. I also happen to be Minister for Housing and Urban Affairs. HUDCO has done very well. HUDCO has got what, a Maharatna status now. The OMCs, somebody said, but the market is rising. Yeah, market is rising, but the market rose 43% and the OMC valuations rose in multiples thereof, some 120%, 160%. Why? Because they've done a good job. And in a time of crisis, in a time where there was challenge, they proved their mettle, and the marketplace, I don't use words like the magic of the market, but the market has a lot of very intelligent people who can make assessments on what is happening, and that's how valuations go up.
Well, that's Hardeep Singh Puri talking about the valuations of some of those OMC stocks. Well, Vineet, Kunal, thank you very much for joining us today on the show, taking us to the last hour of trade. It's not been a bad trading session. In fact, a very steady one. If you're an option seller, you'd have been making quite a bit of money. And also, if you were playing stock-specific action, you would have earned quite a bit of a premium, given that we started off steady and remained steady, but the day was dominated by stock-specific trade. We're going on with a small cut, still about 22,000 is where we close. 81 points lower on the Nifty 50. That's pretty much where the index started off today's trade, and going on with that at the end of the day as well. The broader markets did slightly better than the benchmark in today's day of trades. The mid-cap and the small-cap index witnessed some outperformance. In fact, a lot of outperformance. The mid-cap index was up about 1% when the broader markets actually went home with a cut of 0.4%. Small-cap index also doing better than the benchmark, 0.5% lower in today's day of trade. Well, let's take a look look at what the big movers and shakers were, like we said, the action was concentrated in the broader market pack. The breadth of the market for the Nifty 50 was clearly biased towards the losers, but nevertheless, worth a mention of a few gainers that we had in today's day of trade. Bajaj Twins did okay. Hindalco, Britannia, Adani Group companies were up 2%. NTPC, L&T, BPCL, despite high crude prices, has gone home with a marginal gain. Coal India, Axis Bank went home well as well. On the sell side, Power Grid was down 2%, Bharti, Aisha, HDFC, so banks, IT, despite a stronger dollar, some of your metal counters, auto companies have all seen cuts in today's trading day. Well, if I can just quickly get some of the gainers and losers across the broader markets, it'll give us a more conclusive picture of where trade really was. Stocks like Uno Minda, Interglobe Aviation, Finolex, that was one of your top gainers in trade today. No apparent reason, no brokerage calls, the stock went home with a gain of 10%. Today's day and today's drive in terms of trading activity was led largely by brokerages and their buy calls. So you had a couple of counters that did well. Interglobe had a buy call by UBS with a 25% upside. Kotak Institutional Equities is optimistic on diagnostic companies, on back of which the likes of Dr. Lal Path actually went home higher. On the sell side, you had Tata Investment that for the, 7th, 8th trading day has gone on with a 5% lower circuit. Timken did quite badly as well. GM and IFL also had a draft on back of a special audit that's going to be conducted by the regulator. You had Garvade Technical, Kajaria Ceramics also going home with cuts. But all in all, not a bad day of trade. While the benchmark went home flat and the breadth of the market across the Nifty 50 was weak, broader markets saw enough and more action. In fact, that sector or that vertical of the market actually went home with a gain of 1%. With that, we're completely out of time on India Market Close. Thank you for watching.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
Thanks for tuning in to the Smith Show. I'm Neeraj Shah. And there was a note that came in from Jefferies, brokerage house Jefferies, on March 19th, wherein they said that they initiated coverage on Keynes and Surma. And they are saying that the Indian EMS industry is estimated to post a 35% CAGR growth, led by China Plus One, lower labor costs, and focus on components that companies like Surma and Keynes are doing are going to give them a possibility of an EPS CAGR of 55 to 60% with ROC expansion. So we thought it best that let's get in the management to try and understand what is their game plan with regards to all of this. Mr. J.S. Gujral, MD of Surma SGS, joins us right now on the show. Mr. Gujral, thanks so much for joining in. Much appreciate you taking the time out. This is Neeraj here. Good morning.
Good morning.
When we've spoken in the past, you've kind of established this possibility of long-term growth rates. Back then, there was a slightly different Surma in that you are very gung-ho on the medical sector. ODM was a large portion of your business. Maybe it's coming off a little bit, but things have changed for Surma as well. So I would love to understand, at the beginning of FY25, we are 5 days away. So let's say from FY25 onwards, for the next 3 years, Mr. Gujral? What is the big picture for the space and for Syrma SGS?
See, electronics manufacturing, as I have always been saying, has never had it so good because of the positive government policies, the global attention towards India as a manufacturing base. And we are very confident that this sector will grow. Coming to Syrma SGS, we have our plans firmly in place to maintain this growth tempo. We have grown at about 50% for the last 3 years, which means the year ending in about 5 days from now. And we expect a 35-40% growth rate for several years from now on is distinctly possible. In the short run, this growth rate will be fueled by the domestic demand, indigenization, import substitution. And as companies like us, which are into the export sector, get integrated to the global supply chains, exports would constitute a significant portion of the growth story in the years to come. Exports have a longer gestation period. So I think we're uniquely placed that in the short run, we have the domestic demand, which will fuel the growth, and the companies which can integrate to the global supply chains will maintain that growth momentum going forward.
Got it. Mr. Gujral, just before I get to the nuts and bolts of what will drive growth for you, I'm trying to understand if this growth can happen at better profitability. Usually companies which want a higher rate of growth give up a little bit on margins because it's okay, because growth makes up for it. There are some assumptions being made by analysts that in your case, this 35% or 40% growth that you're talking about for the next 3-4 years could actually happen with expansion of margins and expansion of return on capital. Would you throw some light on this?
Yeah. You see, in the EMS space, what we analyze and what I think analysts analyze is how the margins playing out in each vertical. And each vertical has its distinct margin profile. For example, a medical vertical has a higher margin profile than, say, automotive. So in the short run, once the composition of the pie, the revenue pie undergoes a change, there could be a variation in the margins only because of a change in the mix. So going forward, as the capex cycle pans out and the assets start sweating, assets reach optimum utilization, the operational efficiencies come in, and the ODM business, which currently has gone down in the last few quarters because of a very high trajectory of growth in the OEM sector. So as all these things pan out, we believe that we should be having a EBITDA margin of 7 to 7.5% in the coming year, and outlier being 8% in the coming years. Anything beyond that, we'll count the chickens when they're hatched.
Okay, fair call. Okay, so but when I look at the margin trend, it's actually come off, right, relative to what it used to be in the past. So are you saying, what would the current margins, let's say average margins at the end of FY24 be? And what do you anticipate this number to be? Would this be 7 to 8% at the end of FY26 or 27?
See, the margin profile has changed because of the change in the product mix. For FY24, which is just coming to an end in about 4-5 days, we believe that we should be there at about 7% EBITDA margins. 24-25, our first budget sort of calculations show us we should be anything between 7-7.5. Anything beyond that is an outlier if the product mix composition changes. But based on the plans which we have today, this is the margin profile. And this is the margin profile without accounting for PLI benefits. PLI benefits will account for when the money is in the bank. And that will be an uptick on the margin which I've just shared, which is 7 to 7.5%. for the current year.
So could it be
24-25?
Got it. So could it entirely be possible that over a 3-year period, your revenue growth, as you mentioned, let's say we take it as 35% because that is what you said could happen over the medium term as well. But your EPS or PAT CAGR could be about 50 or 60% as well, based on the PLI benefits and the slight margin expansion you're talking about?
Let me put it conservatively, it should be at the lower end of what you have stated. I think we are conservative. As the operational efficiencies kick in and my medical and the design development efforts also start bearing fruit, but that's a bit distant away. For the current year, which is 24-25, we maintain 7 to 7.5% without the PLI benefits.
And by virtue of all of this, maybe better working capital days as you become larger and have a better negotiating power, if you will, plus better margins, plus better business profile, you reckon return on capital as an indication or as an important ratio could inch higher as well?
It should. It should. And that's one of the sort of very critical metrics which we monitor. We believe that once we are growing and with the better negotiation power, better inventory management, our return on capital should go up. We internally target it should be around 25%. And I think we should be very mindful that when we are a 4,000, 5,000, whatever crore company, the profile of customers is different than you're a 1,000 crore company. So you have bigger customers on your board, and bigger customers have their challenges, but they have their positives also. That you do a high volume of turnover with a limited number of SKUs. So hence the inventory turn, the asset turn, it all starts yielding results.
25% internal target over 3 years means that you would not inch up, you would gallop higher, Mr. Gujral. Estimates are that your ROCs could be circa 12% in FY24, and please correct me if I'm wrong.
This is 12% is because of certain goodwills internally created legacy of the company without a penny being paid.
Okay.
A lot of the IPO funds not being utilized and they get into the capital. So if we were to take the operational assets, I'm very confident that currently if we were to sort of normalize our capital employed for these 1 or 2 aberrations, which are essentially the legacy of the old companies, we are sitting at about 18-19%, and from there on we should be able to cross the 22%, 23% mark in the years to come.
Okay, okay.
That's the benchmark we have set for ourselves.
Got it. Point well taken. The other aspect is capex. Now you have a new facility in Noida. Is coming up, which I'm not wrong. Your process is setting up a new facility in Bawal and Pune as well. Would these expansions essentially aid revenue growth in a structural basis over the next 3 years? And is there something else that is on the anvil? Because I see EMS companies come out with some fairly innovative product announcements as well as global tie-ups with customers pretty regularly.
See, we are now migrating from individual unit-based to campus-based development. So we are putting up a campus in Pune where the first modular manufacturing facility will come up. And as the demand increases in the coming years, more and more such modular facilities will keep coming up at Pune. Then the small expansions are necessitated by the customers. I would love not to have them and do it all at one place, but then in electronics, you have to be near to the customer. So some of the expansions which you have mentioned are more directed towards existing customers and their growth to be funneled from the existing facilities only. So the expansion of the facilities in Noida and Bawal are the case in point. But for all major expansions, we'll be doing campus expansions. We are doing one in Pune. The first manufacturing facility should be ready by middle of this calendar year or financial year. And then we are putting up a new campus in South also, but that's a bit while away as of date.
Okay. One final thing, Mr. Gujral. Is there a risk to this story as things stand? And it's okay to not see, I mean, there are always risks to business, and there might not be too many high risks, but I'm just trying to understand because the growth numbers seem very strong, the internals seem strong, the opportunity size is large. What is the risk to this story?
See, I think the risk is more micro than macro.
Okay.
I'll be very honest. So I think the macro level situation looks good. But if something tomorrow was to happen at a global scale on which I have no control, I don't worry about that. What we believe, the risk is that when you are growing at a rate of 35-40% for 5, 6, 7 years, you need to have an organization. You need to have systems. You need to have procedures which can cater to that. Managing a 2,000 crore company and a $1 billion company is a different animal. So I think the industry has to look inwards and start building systems at the back end to cater to this growth. I don't think growth per se will be a limiting factor. It is our ability to manage the growth, which could be a constraint or which could sour up the things if you're not able to have an organization to cater to that.
The $1 billion size was in reference to your ambitions, Mr. Gujral. If so, by when?
Yeah, let's see, we are growing at 40-45%. This year we'll be doing about 3,000 crores. Next year the plans are intact to be at about 4,500 odd crores. So if that trajectory, I think by calculations we can do whether it is 2 years or 3 years or whatever it is. But yes, the ambition is to be a $1 billion company sooner than later.
Jai Mata Di, all the best for that. Mr. Gujral, thank you so much for taking the time out and speaking to us. Appreciate your time.
Pleasure, Neeraj. Thank you. And good.
Thank you to you too. Well, that's Sharma SGS. Pretty confident about growth targets, or pretty optimistic about the kind of internals as well, including margins and return ratios more importantly. Take a break. On the other side of the break, news and updates continue.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
Well, there's enough and more buzz within the auto space given the fact that the government has come out with a new EV policy to try and break down as to what the opportunities are in this space, to try and get more perspective on what the policy means for the sector in the longer term. We have with us a senior analyst from LKP Securities. We have Ashwin Patil with us to try and break some of these metrics down. Ashwin, talk to us about this development with regard to the EV policy. Is it a welcome step for Indian manufacturers across the board? I'll go into subsectors, but across the board, is it a welcome step, or do you believe that large competition from abroad will also come through and impact the sector?
See, I believe that the EV penetration in India on the PV side is just about 1%, and there is a large room for everybody to come and enjoy the pie. So, prima facie, I think that it will be slightly, competitive scenario for the domestic incumbent players like Tata Motors, Mahindra and Mahindra. For example, like Tata Motors is having a strong market share in the EV side, more than 70%, and that can get hit a bit. But surely they have the first mover advantage and they can take on the competition, very well. So maybe like a slight 5 to 10% kind of market share hit they may get. But definitely the EV policy that the government has come out with, it's a welcome step for everybody. From global point of view, I would say that companies like Tesla, etc., are very eager to come into India and set up their EV ecosystem over here. We recently saw that MG had a tie-up with JSW. So JSW have very ambitious plans in India to on the auto side. To expand on the EV ecosystem. They are, doing a lot of backward integration, and they want to be in each and every aspect of the EV side. Similarly, other companies are also fancying their chances of entering into India on the global front. So, for the global players, I would say that definitely it's a big chance to enter into India. But for Indian players, slightly towards at the start of this phase, when the global players enter, it can be a bit competitive scenario. But as I said earlier, the EV space is very wide and large, so everybody can enjoy the EV proliferation that is expected in India, supported by this government's EV policy.
And Ashwin, with regard to just purely ticket size, do you think that the larger ticket size kind of companies will be more interested in or rather will find more benefits from this EV policy than the smaller ticket size companies, and therefore maybe to that extent Tata Motors is a little more insulated, because that's largely the view coming from a lot of analysts on the street?
Exactly, that's what I said earlier also, that Tata Motors may face some, slightly competition at the start, but since they are the first movers and first mover advantage is very big in this market. So the big companies like Tata Motors, Mahindra and Mahindra should get that benefit. But certain companies, smaller companies, may face the heat up to some extent. But if they are also having certain ambitious plans, etc., then they are also welcome in this EV space in India, because, as I said, it's quite wide and large over here.
And before I throw this question, into a more open territory to try and ask you your views across the auto space, let me focus in on the policy itself. How would you play this policy? What is the best way to play it from an investor perspective?
See, from an investor perspective, I would say that, for OEMs, definitely it is a welcome step, but it is a bigger welcome step for the auto ancillaries. because companies like Tesla and all, they are so huge and large that they are providing a very big opportunity for the auto ancillaries like like maybe like Sona BLW, which is having Tesla as one of their clients. So it will open a wide open door for them to get this opportunity, to grab this opportunity, I would say. And there are certain other companies also in the EV space, like Craftsman Automation is also there. They are having one stream of business which caters to the EV market. Also, there are certain other companies which are having their three different streams of revenues. Like one is catering to the ICE segment, second is to the EV, and third is EV agnostic. So, such companies also will be benefiting out of that. So I would play the story on the auto ancillary side more than the auto OEM side, because auto OEMs will be facing competition, but at that time, auto expanding their business to a great extent, because the global players like Tesla, Ford, etc., entering into India on the EV front, I think that can zoom up their performance, the revenues of auto ancillaries up to a great extent in the following years.
Understood. And Ashwin, just purely with regard to the kind of runway this has and the kind of appetite of the Indian consumer. So we've seen that at least at the top end of the income bracket, we've seen very good traction when it comes to EV. Do you think that that can percolate to the bottom end? Of course, two-wheelers as well as two-wheelers are doing very, very well. So that your thoughts around that, on sustaining that kind of growth for two-wheelers as well as for four-wheelers, if you can give us that perspective.
See, from EV point of view, if you say that two-wheelers like scooters are very fast and rapidly getting electrified. On the passenger vehicle side, I would say that still there is a EV wave yet to come, and LCVs are getting electrified also along with scooters. And the third segment, I would say, is the buses segment, which is getting into the EV segment at a very good pace. So these three segments, whichever companies are into that, they will be facing a lot of benefit. So out of the OEMs, I would say that Bajaj Auto, TVS Motors, those are the two companies on the two-wheeler side which are having a good presence on the EVs, and they are expanding also very well. Then on the passenger vehicle side, Mahindra and Mahindra and Tata Motors, also Ashok Leyland on the buses side, and the LCV side, I think they are also getting a lot of benefit, and they should get benefit out of this EV policy and the widespread or the penetration increase on the EV side for the passenger vehicle front. So I think these companies should get more benefit than others.
And the traction will sustain, the demand will sustain now on a higher base?
See, I think that the demand is definitely going to be there. So higher base is still, I mean, last year's base was definitely higher. We know that because the IC segment has been performing well. But if you add EV's performance going forward, in the coming few years, I think the performance of these auto companies is going to be very good. Though we all know that EVs, the margins, on the margins front, EV business is not, very lucrative. But going forward, as the volumes increase and the battery prices, the batteries become affordable, etc. So, and the whole infrastructure on the EV side expands very well in India. I think the volumes, the operating leverage should come into the picture, and that should sustain the margin performance also going forward. So for automobiles, I think that, maybe like FY24 can be slightly, on the slower side because of the higher base. Sorry, on FY25, I'm saying, would be higher on the higher base of FY23 and 24. We may see some sort of, slightly subdued kind of growth. But going forward, FY26 onwards, we think that, the auto segment will be having a very good time.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight.
Sensex and Nifty snap 3-day gaining streak as broader markets do better than the benchmarks. Nifty Realty becomes the top sectoral gainer, ends in green for the fourth consecutive trade. Tata Sons may be looking to monetize assets for the first time. Sources say more stake sales could be on the cards after offloading the TCS stakes. And that's an NDTV Profit exclusive for you. States offered to sell bonds worth 60,000 crore rupees in last week of FY24, 51% higher than the indicated amount earlier. If accepted, this may take the actual borrowing by state governments to 1.97 lakh crore for March. Beima Sugam gets one step closer to its rollout, a one-stop shop for insurance sales, service and claims. Exact details on the platform are still awaited. Delhi court sends Bharatiya Rashtra Samiti leader K. Kavita to a 14-day judicial custody in the liquor policy case. Court will hear Delhi Chief Minister Arvind Kejriwal's plea against his arrest tomorrow. Mass casualty declared in Baltimore in U.S. state of Maryland as a major bridge collapsed after a ship collided with it, crashing into the water. Many feared to be in water. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, this show aims to bring you the market headlines along with national and international news. But as we move on to the show, it's time to see how the markets fare during the day. I'm joined by my colleague Samina Nalwala for a quick market wrap of all the action.
Well, markets snap a 3-day winning streak, but the good news is while we started the day lower, we've actually gone home at the day's high point despite ending in negative territory. Well, today's market was interesting because while the benchmark went home with a slight cut, it was the broader markets that were action-packed to say the least. The Nifty itself was down marginally. Mid-cap index went home with a gain of 1%. Small-cap index outperformed as well, going home flat for the day, and Bank Nifty performed in line with the benchmark index. The breadth of the market across the Nifty 50 was very, very clearly biased towards the losing stocks. But like we said, across the broader market universe, stock-specific trade is what drove enough and more action in today's market, helping and encouraging traders to actually make some money in this holiday truncated week. And of course, monthly F&O expiry too. Well, that's the Nifty 50. Bajaj Finance, Hindalco, Adani Port, Britannia, BPCL, Axis Bank were the top gainers. No specific trend in terms of sectorial biases. It was largely stock-specific Pacific for the Nifty 50 as well. Bharti, Power Grid, Aisha, IT, Auto, Metals was some of the big losers in today's day of trade in the Nifty 50 as well. Across the broader markets, it was brokerages that helped counters actually pick up momentum in the session. So you had stocks like Interglobe, where there was a buy call by UBS at the word get-go this morning. The stock is, UBS believes Interglobe could go up 25% from these levels. The markets got excited. The counter went home with a gain of 6%. Similarly, Kotak Institutional Equities puts out a buy call on diagnostic companies like Dr. Lal Path, and the stock goes on with a gain of 6.5%. Phoenix Mills from the real estate pack did quite well. Triveni Turbine, Gujarat Power, Finolex as well had a good run, even though there were no apparent reasons, but the volumes in this one were fairly large in today's trade. On the sell side, it was God knows which, maybe the 7th or the 8th straight day of losses for Tata Investment. The stock once again hitting lower circuit in trade. Apart from that, you had the likes of a Privi Spec, Ajaria Ceramics, IFL and JM Financial losing out in trade today on back of a special audit that is expected to be conducted by the regulator. So all in all, while we've snapped a 3-day winning streak, it wasn't too bad for the street. In a holiday truncated week, the Nifty has gone home lower, but the fact remains that the broader markets outperformed the benchmark by quite a margin today.
That was all the market action for you. Now let's move on to an NDTV Profit exclusive. Sources told us that Tata Sons is now looking to monetize its assets for the first time. My colleague Sajid Mangar joins us to tell us more details on this.
Tata Sons, which is the holding company for the entire Tata Group, is now pivoting itself into monetization of assets within the group. Remember that Tata Sons hasn't been looking at monetization for a long time, and now there is a policy change which is coming up in Tata Sons, which looks at raising funds using monetization of current assets, which could be listed or unlisted. In case if they're unlisted, it's going to be through listing and getting strategic investors. But this is a monetization which is very significant for the group, because in the recent times, in the last 2 to 3 years, Tata Sons have moved from traditional businesses to new age businesses, which include semiconductor fabrications, lithium-ion batteries, or green energy, and all these are huge investment businesses, and Tata is looking to raise funds. Tata Sons is looking to raise funds to support these businesses in the incubation period there. If you look at some of the kind of monetization that has happened so far, the recent TCS sale of 0.65% stake, where Tata Sons raised nearly 9,300 odd crores, was part of this change in strategy, and where they are looking at monetization. So it doesn't mean that Tata TCS will be further monetized, but there are many more assets within the group which can be monetized going forward, which includes listing of some of the companies like a Tata Play, which has already filed a confidential filing with SEBI. There are financial services businesses which includes Tata Capital. There is insurance company like Tata AI and Tata AIG. In the infra space, you have Tata Realty, Tata Housing and Tata Projects. These are all big businesses with good revenue potential and profitability. Apart from that, Tata have already invested more than 18,000 odd crores in the digital businesses, which includes Tata Click, Tata 1MG, Big Basket, Chroma. So these are some of the big businesses which it holds in its as investments in its books, and it will look to monetize many of them in the next couple of years as it looks to incubate many of the new businesses.
Well, that was the big story of the day. Tata Sons looking to monetize its assets. We'll bring you more updates as we have them. On to another very interesting story for you. The weekly state government bond issuances have also exceeded their targets for 3 consecutive weeks now. But what caused the sudden spike in these state borrowings this March? Vishwanath Nair joins in to explain all the key details.
So what we do understand from the data that the Reserve Bank of India is putting out is that in the week starting March 12, then later the week starting March 19, and then this current week, which starts today, that's 26th of March, essentially the state government borrowing or the bond issuances listed for an auction are significantly higher than what was indicated in the calendar earlier this year. And this is primarily happening because there have been some dip in the grants from the central central government. There has been a spike up in the fiscal deficit. So state governments are trying to borrow money from the markets to try and adjust these costs. What experts are also pointing out is that probably they have commitments towards putting in money at the national pension scheme, which is driving this increased sort of bond issuances from certain states. Primarily, it's coming from Uttar Pradesh and Maharashtra, which are showing these spikes. What market sources are also telling us was surprising is that in the last week, the week started March 19th, essentially the bond issuances were supposed to be close to about 30,000 odd crore, and it was significantly higher than that, what the issuances that actually happened. Similarly, this week as well, the expectation was 30,000 crore, but the bonds actually listed for issuances are about 60,000 crore. If the market is able to take all of that in, then during this month, during March alone, the total bond issuances would exceed about 1.9 lakh crore, which is significantly higher than the 1.75 lakh crore that was expected earlier. Having said that, Jan-March is not likely to breach the expectation. For the Jan-March quarter, the expectation was about 4.13 lakh crore worth of state government borrowings, and the actual borrowings are going to be around that range, so nothing to worry about there. But the expectation is that at least during this month, during the current week, the bond issuances by state governments is going to exceed what was detailed out in the calendar earlier.
Well, thanks, Vishy, for bringing us those details. Let's also look at another big story and just freshen more so. India is now preparing for complete interoperability of online bill payments. Now, sources told NDTV Profit that NPCI Bharat Bill Pay is working closely with several banks and fintechs to find the right way of implementing interoperable net banking. Now, since the rollout is expected in multiple phases, the first phase of this project will be all about setting the rules for payments and making a system. And all this is now expected to come up next month, which essentially means that the first phase of this is expected to come up next month in April. Now, some banks and fintechs that NPCI Bharat Bill Pay is in conversations with include HDFC Bank, Axis Bank, Yes Bank, State Bank of India, Pine Labs, PayU, BillDesk, and several others. Now, let me also share some context with you of this entire transition that is going to happen. Currently, while payments through UPI and mobile wallets are interoperable, internet banking transactions through payment aggregators are not. In such cases, banks usually have to integrate separately with each payment aggregator for different merchants. So, with this entire change coming in, sources told us that the new interoperable system will now aim at that all banks be connected to NPCI Bharat Bill Pay on one side and all payment aggregators on the other side, with NPCI Bharat Bill Pay in the middle handling all banking propositions. It would rule out the need for creating multiple bilateral pipelines. But like we already mentioned, it is still in the nascent stages and more updates are expected from next month. Staying with the banking and finance sector, the RBI clampdown on lenders may raise their cost of capital, and this has been predicted, or rather said, as per a report by S&P Global Ratings. Now, the regulatory curbs could also lead to longer lending processes for both banks and other lenders. My colleague Pallavi Nahata is joining us to share more insights about this report. Pallavi, there's a recent report by S&P Global and RBI's overall clampdown on several lenders like Paytm, JM Financial, IIFL Financial is expected to have some impact on the sector. So what is the report saying?
So that's right, Pragati. Recently, we've seen the central bank impose curbs and restrictions on multiple companies. You've named a few of them: Paytm, IIFL Finance, JM Financial, and some more. So this clampdown on financial companies and banks is expected to help curb over exuberance, enhance compliance, and safeguard customers. It's also expected to help create a more transparent and a robust financial system. That's according to S&P Global Ratings. But these curbs also mean higher capital costs for institutions across the board. Possibly, it could result in increased compliance costs and curb the ability of smaller companies in that space to compete in the market. S&P Global expects these clampdowns to also, in fact, have an impact on credit growth. It expects loan growth to fall to 14% for FY25. That's compared to a figure of about 16% in FY24. And this will be a cumulative impact of all actions. The ratings agency has also said that it expects increased caution among fintechs and other regulated entities. With the increased regulatory risk associated with investments, we're also likely to see higher premiums. When the risk premium increases, that can potentially also impact sector valuations.
All right, Pallavi, thanks so much for bringing us that report from S&P Global. Let's also now take a look at the insurance sector. Beima Sugam is here to simplify policyholders' experience after regulations approved its UPI moment. But as of now, it's only a concept draft of the actual platform, and its features and other details are still awaited. We have our colleague Monal to give us more details on this.
Thanks, Pragati. Yes, well, insurance's UPI moment, Beima Sugam, which is touted to be one of that and conceptualized in 2022, is now finally seeing some fruition with the insurance regulator approving regulations for it in its board meeting held last week. Beima Sugam will be a one-stop shop for sales, service and claims, the insurance regulator chairman Debashish Panda had said at a conference in 2022. Now, what is in it for policyholders? Let's take a look at that. So all general health and life insurance policies would be listed on the platform. It would allow a tech-based distribution network. Now, individuals would be able to buy their life, motor, health insurance and other policies, raise service requests and claim requests through one single portal. Now, while doing all of this, it could also mean lower premiums for customers, because currently there's a commission of 30 to 40% given to brokers. In conversation with one of the leading life insurers of India, we figured, and now this Beima Sugam would now reduce the commission to close to 5 to 8%. While, like you mentioned, the final concept and the features and the exact amount of commission and the benefits are yet to be defined. It's just a concept, but I think it is going to come out pretty soon in the coming months.
Got it, Monal. Thanks so much for those details. But while you're at it, we would like your insights on something more as well, because the Insurance Regulatory and Development Authority has changed its special surrender value computation. So it is naturally expected to have some implications on the life insurance sector. So why don't you help us understand what these implications will be?
Yes, Pragati. Yes, the life insurance stocks today were a positive, and that is majorly on account of the surrender value regulations that came out. Now, the regulations are more or less retained, as in what is currently going on the surrender value front. If you were to give up your policy before maturity, the calculations are more or less the same. However, our conversation with, again, an industry expert suggests that there is some impact on non-par policies, but it's absolutely absorbable in the network. So we won't see much impact on the VNB margins. Apart from that, there was also going to be some impact in terms of policyholders' returns. So policyholders who hold their policies until the maturity, that will not be impacted anymore based on the draft regulations. Also, the overall impact on the value of new business margins for life insurers, as was envisaged in the draft, will now go away. So the overhang on the stocks is gone. A positive move for both the policyholders and the regulator. Also, a separate category of products will now be introduced, which will have a special surrender value for which the regulations have made the provision. And these separate category of products will be more liquid, might have higher premiums and slightly less returns, but overall a positive on the sector.
Got it, Monal. Thanks so much for bringing us those very interesting details from the insurance space. Let's also take a quick update from the aviation space. SpiceJet gained close to 4% during the day's trade on account of it reaching a settlement with Export Development Canada to let go or to do away with all its liabilities worth 755 crore rupees. Now, this settlement will also lead to 567 crore rupees of savings to SpiceJet. And along with all the savings, the company will also acquire full ownership of 13 EDC Finance Bombardier Q400 aircrafts. Well, that was the update, quick update, in fact, that we had for you from the aviation space. It's also time to slip into a short break, but please stay tuned because we have lots more lined up for you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching The Reporter on NDTV Profit. Now it's also time to take a look at the IPO market now. Bharti Hexacom IPO will open for subscription on the 3rd of April with an issue size of 4,065 to 4,275 crore rupees. Saloni joins us to give us more details on this.
Bharti Airtel subsidiary Bharti Hexacom is set to open its IPO next week, which will start from April 3rd till April 5th. The price band has been set at rupees 542 to 570 per share, and the company plans to raise about more than rupees 4,000 crore. Now, this is a pure offer for sale by the TCIL, which is a government-owned entity, and after the stake sale, the proceeds will go to the selling shareholder and not the company. Talking about the shareholding pattern of the company, Bharti Airtel has about 70% stake, whereas TCIL's shareholding will reduce to about 10%, and the government currently holds a 30% stake in the company. Also talking about the company, it was founded in 1995 and it exclusively operates in markets such as Rajasthan and Middle East, and it also offers fixed line and broadband services in Rajasthan.
Well, we also had Surajit Mandol of TCIL explaining why the size of the entire IPO was brought down. Let's take a look what he had to say on this.
See, this company has been in loss for one of the year out of last 3 years. So the waiver from SEBI was required if we go more than 15% sale of shares in one go. That's one reason. Second, the TCL found to maximize its returns, 15% size will be the best suited IPO size to maximize return in overall disinvestment process. Though there was a mandate from government to sell off up to 30%.
That was the update from the IPO space. Let's also take a look at some political news. Now, during the day, several Aam Aadmi Party leaders were detained by the Delhi police as they protested against the arrest of Chief Minister Arvind Kejriwal in the liquor policy case. Now, the police said that they did not have the permission to carry out the protest, and hence the action was taken. Well, let's move on to another update. Sustainability is the buzzword as India guns for growth in the ever-changing geopolitical economy. Now, the Indian conglomerate Gautam Adani has announced that Adani Green is aiming to produce 45 gigawatts of renewable energy by 2030. He was also speaking at the inauguration of the Energy Revolution Gallery at the Science Museum in the UK.
We are the bridge between generations. It is our duty to take care of our planet, not only for these generations and the next, but also for the generations to come.
No, the statement is not from the recently released and much talked about Netflix sci-fi drama Three Body Problem, but Gautam Adani, the chairperson of the Adani Group, laying out the need for sustainability while inaugurating a new science museum gallery in the United Kingdom. The Indian billionaire spelt out the near-term plans of the world's leading solar power developer and India's largest renewable energy company, Adani Green.
We are also aiming to reach 45 gigawatt of renewable energy by 2030. This will be like providing clean energy to almost every house in England.
Adani also told the gathering that Khavda in Gujarat will soon see the world's largest renewable energy park come up. It will have a generation capacity of 30 gigawatts of energy and is spread over an area of 538 square kilometers, an area 5 times bigger than Paris. Bureau Report, NDTV Profit.
Well, it's time to slip into another short break, but please stay tuned. We'll be right back.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Well, welcome back. You're watching The Reporter once again. The Sirma SGS, a company, was also in focus after brokerage firm Jefferies came out with a note on the EMS space. Now, the firm described it as one of the sunrise sectors. We spoke to JS Gujral of Sirma SGS, who says that it has ambitions to be a billion-dollar company. Let's take a look at what he had to say on the target.
Managing a 2,000 crore company and a billion-dollar company is a different animal. So I think the industry has to look inwards and start building systems at the back end to cater to this growth. I don't think growth per se will be a limiting factor. It is our ability to manage the growth, which could be a constraint or which could sour up the things. If you're not able to have an organization to cater to that.
The billion-dollar size was in reference to your ambitions, Mr. Gujral. If so, by when?
Yeah, let's see, we are growing at 40-45%. This year we'll be doing about 3,000 crores. Next year the plans are intact to be at about 4,500 odd crores. So if that trajectory, I think by calculation we can do whether it is 2 years or 3 years or whatever it is. But yes, the ambition is to be a billion-dollar company sooner than later.
That was the company in conversation with our channel. Now on to rather somber news. A major bridge in the US city of Baltimore almost entirely collapsed after being struck by a container ship. Now this event sent multiple vehicles and up to 20 people plunging into the harbor below. A 300-meter vessel also hit a footing of the Francis Scott Key Bridge, sending the steel-built structure crashing into the river. Well, that's all the time that we have for you on The Reporter, but please stay tuned to NDTV Profit for all the latest news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. Now, before we get to the case for a chat with our guest, I think